Hello everyone, how you doing? This is Dan and this is Dan Tech Channel. In this video we will just be taking you through the forex trading introduction class, and be sure that after watching the whole of this video, then you are going to understand everything that you just need to get started on the forex trading. All you can just do is to make sure that you subscribe to the channel, turn on notification bell, and also like this video. So actually I'm just be explaining this forex trading in a very simple way that you can just understand, because I understand the way I was starting to trade on the forex and learning, there are some things that were very difficult for me to understand and all that. And in this video I'm going to make everything simple for you over here. I'm going to be writing over here. Make sure that you be having a notebook over there. If maybe you reach reach somewhere you don't understand, you can just pause the video and then you can just maybe write that point down, and hope you just be following this up to the head. So without further ado, we are just going to start with the introduction of what is forex trading, so you'll be understanding a lot as I said in this class. Number one, let's talk about what is forex trading. Now, what is forex trading? As the term just define it itself, forex trading, where does this word come from? Where does these ones come from? Maybe you can just understand the whole of this, so maybe when you just want to start. So when you talk about forex trading, we are talking about two terms over here, which is for and x. Okay, when we talk about for and x here, we are talking about the foreign. We are talking here about the foreign, and this is exchange. Okay, exchange. Okay, exchange. The other thing you can see over here is trading. We will talk about that. So foreign is something that come from another country, and exchange is meaning that different countries are changing. So in terms of here, we are talking about the currency. So here means we exchange currencies. For example, if you have done maybe mathematics in primary school, high school, you have seen something about the foreign exchange calculations and the value of maybe dollar and all that. Those things, that is what we call foreign exchange. So forex trading actually is the foreign exchange. This is what banks do. This is what everyone does over here. So when you talk about the trading, this is just like business like any other. You have seen, for example, in maybe let's say that is kitambo, or maybe long time people were trading something we call barter trade. Barter trade, I think it is barter trade. So this is where people were exchanging goods with goods. People were exchanging goods with goods. That means someone could come with maybe that is with a sack of maybe potatoes, and the other one comes with a sack of beans, and then they just exchange. This one gives this one and this gives this one. So this is trading. Using these goods, you exchange with goods. So this is trading. This is trading. That's why it was called barter trading. But because now we are talking about currencies and all that, because of technology, because of development, now we don't exchange those ones. Now we exchange currencies. So up to now you have understood what is foreign exchange, what is forex trading. Now, but there are different things that you just have to be understanding over here. Let's say, for example, you want to exchange. What can you exchange over here? Okay, what are these foreign currencies? For example, we have GBP, which is defined GBP, which is defined as British pound. It is British pound. I will just name maybe some of them, and maybe you just understand that. We have euro, which is euro. With this is just the European currency. We have USD, which is United States dollar. Okay, and more of them that we'll just be talking in this series. Now let's just proceed with the class by talking about these things that maybe you have to understand in this class. When we talk about forex trading, actually we are talking about different things. So there are types of trading. Actually, maybe you have encountered this anytime. Maybe you have been searching on the YouTube how to trade, and maybe you have seen so many people talking about this trend. So let's talk about types of trading. Types of trading. What are these types of trading that maybe you can just encounter there on the internet when you are trying to try to trade? And number one of it, we have what we call binary trading. We will come to that. This is binary trading. We have crypto trading. You have seen that. Those things are not supposed to be confusing you. That's why I'm bringing the difference. And finally, we have forex trading. So anytime you hear about forex trading, anytime you hear about trading, then just know we are talking about three things. These things over here, except for the scams. Because there are some people also who have scams, number 4 over here, and these scams is where people just tell you that give us amount of money and then we are just going to, that is trained for you, and then after maybe 24 hours we are going to return maybe 2 times of your money, or maybe 50%, something like that. So this is scam out of it. Just forget about that. Let's start with number 1. So I'm just going to name this A, B, and C. These are 3 things I'm going to discuss over here so that maybe you can understand more. And when we talk about the first one is binary trading. So let us talk about binary trading. I'm going to go brief on this because our topic today is forex trading, but I'm talking about this so that you can just avoid confusion. Okay. So when we talk about binary trading, as you can see right over here, the word binary means buy. If you just search maybe the word buy, this means twice. Okay, this means two. Okay, so these 2 things, this buy means 2. Okay, so and when we talk about binary trading over here, we are talking, and actually when you just go maybe to the science and all that, those who maybe studying something about engineering in college, maybe there you have, or computer, maybe computer actually reads in binary form. So binary means in 2, and when we talk about binary, we are talking about zeros and ones. So you can see actually we have 2 options over here. So when we talk about the binary trading, we are talking about trading in 2 options. That maybe you have seen the platform that says you can that is entries. You have 2 entries over here, and actually you can just maybe trade in 2 ways. That is maybe when you predict whether the market is just going to go down or the market is going to go down or up. Okay, so you can just predict in 2 terms. Here indicate the market is just going to go down, and over here indicate the market is just going to go up. Over here you just be earning maybe 85% of your what you earned, and over here you lose 85 of maybe whatever the money you placed in. That's how things are. Okay, and this is binary trading. So you can see you just have 2 options over here. Either maybe you can see the graphs just going this way, and then you just decide to buy at this way because you know the market you just maybe in 1 hour, because this has limit in 1 minute. In 1 minute you say this is going to cross this and it is going to stay above, when before this minute it will just be at this point, and then when you just do that you'll be earning. So that you can see this is binary trading. It has time limit, it has this buy and sell. Most of them they have something we call, maybe you can just predict whether the last value, whether it's going to be owned or even whether the value maybe is just all those options that has 2 options. That is what we call binary trading. And number B over here, let us talk about crypto trading. Okay, and actually before even we just go to that, let's see what platform can you use to trade on binary, because this is actually very risky platform for you to trade in. You can actually, all these binary, if anyone talks to you about platform called FXPesa option, yeah, as part option, I don't trade on these platforms because they are binary, very risky. If someone mentions about FXPesa option, if someone mention about tariff.com, if someone mentions about the all-in trend, all these are brokers. Okay, all-in trend, I'll talk about the broker later. And if someone talks about binary.com, So all these platforms are binary related, so all you can only trade binary. That means you have two options and you have time limit. That means the market, if maybe you trend in the market to go down and the market keeps going up after 1 minute, when it ends, then you just lose money. So sometimes I can just relate this one to like something like betting. Okay, it's somehow something like betting. Okay, somehow it just brings something about betting. I'm talking about the binary trading. The way I've explained it, you have to know that just having two options is just like a win or draw, something like that. And that is what we call binary.com. What are disadvantages? Actually, we have so many disadvantages over here. This on the ESPA option, it has disadvantage and advantages. Let me just mention it. Disadvantage number one, it's very risky. It is time limited. You know, you don't have the full time. Maybe when the time ends, then you just get out of the market. On this one, actually, it has so many scams, so it is actually very hard even to make money on this. So what are the advantages of binary.com or this binary trading platform? They are very easy. That is the only thing. They are very easy to start, very easy to trade, and very easy to lose money. Don't forget about that, because even if you don't have the knowledge about the market, you can just go there and then click this one, and maybe the market can just go against you or to you to make just a profit. It's just like betting. You just go there and you can place the team, and maybe according to the way the horns, you see the horns, and then you can just win or lose the game. But you know, the chances of losing, they are always very high. And let's talk about the crypto number B, which is crypto trading. Okay, so we have crypto trading. So when we talk about crypto trading, here you see we have two terms. We have crypto, so the word crypto comes from the word cryptography. So you can see we have actually two options over here. We have crypto and we have graphy over here. So the word crypto, actually this is a virtual currency. When we talk about the virtual, here we are talking about something that you cannot touch, something that not touchable. Yeah, you see, like dollar, you can just go to the bank and withdraw it. You can just go maybe and touch Kenya shillings, euro. But crypto, you cannot go to the bank and withdraw this money and just get them into the hands. So about and the graph means this is actually the graph where you see something, not those candlesticks, these things. So it means it's just a virtual currency whose data is stored in a graph. And actually, when we talk about the cryptocurrency, we are talking about the market. We are talking about the market that is not controlled, that is not controlled by central authorities. There's the term I don't want to use here. So that means, for example, when you see the dollar is just maybe losing value and all that, you always see the Fed coming up and maybe try to increase the interest rate to maybe to strengthen the dollar, or maybe just this inflation and all that, so that maybe they can just try to do up with crypto, that is US dollar. But when it comes to cryptocurrency, actually this is something for everyone. You know, crypto can just shoot from here to somewhere very big, and that is it. There's no one who controls this one. Okay, so it does not have a control unit, maybe where you are waiting maybe for someone to come and maybe say this crypto is just going, for example Bitcoin, you see the Bitcoin is just going very down, and then we just have to do all this and that and that. Okay, so it just is not we can use the term is not decentralized. It is not decentralized. That is the system. You can find it maybe on the internet to understand more about it. and that is crypto trading. If you just want to trade crypto, you can use the broker I'm going to show you over here. You can use FXPesa, that is to trade crypto through CFDs. Okay, and also if you just maybe want to trade all the cryptos, we have BTC, we have Ethereum, we have USDT, we have so many of them. And if you just maybe want to concentrate on crypto trading, you can use something like Binance Exchange. You know, we have Binance Exchange, we have it's called Obi, and there are so many crypto exchange platforms that you can just find on the internet. It's only that maybe if you just want to concentrate, you can just use Binance, that is to trade, that is the broker that is mostly known. But talking about the crypto, there are also disadvantages of crypto trading. That is what you just have to understand. When we talk about the cryptocurrency, you can see it is decentralized. That means, you know, these rich people, what they do actually is they come and put their billions of money over there, and actually they buy maybe a lot of Bitcoin, and then Bitcoin start shooting again. You can be having a very good strategy. You will see that, because when you are trading, you have to have a strategy, you have to analyze the market. So you can just be having a very good analysis, but actually when these guys come, they buy maybe a lot of Bitcoin, and then the Bitcoin actually will start going up very fast, and maybe your indicators and everything that you used, it was saying the market is just going to go down. But you can see these people, what they will do, they will just manipulate the market. The other thing that I just noticed is that some of them, this one, because they are made by those companies and people, some of them you see some may even go to zero, and then you can end up losing everything. Not because this can just maybe you can see one of the coin can just be going maybe at $100 maybe today, but in the next day maybe this can just go to 0.0000, and then it get closed, and then maybe you invested maybe $1,000, maybe the next day you meet that you'll be having zero account, everything was just wiped out. And when we talk about what else, and advantage is that you can just buy this one at maybe $100, and maybe the next year you may turn out to be $1,000, because that is how a crypto can be, sometimes predictable, sometimes not predictable. Let's talk about the main topic over here today, which is now the Forex trading. So Forex trading is what we are discussing over here. So I was talking about that because you can understand now what is the difference. So this is number C, Forex trading, and this is where we are just going to concentrate on. So when we talk about Forex trading, remember what we said in the first time: foreign exchange, where you can exchange different currencies. You can use GBP, Euro, USD, Australian dollar, and all that. But not only that, what can you trade on the Forex trading? On Forex trading, you can trade something like this. So let me just name this. Hi, on Forex trading, what can you trade? What can you trade on the Forex trading? You can trade what we call currencies. You can trade currencies, and these currencies are maybe what we are talking about: Euro, USD, that is United States dollar. We can trade AUD, Australian dollar. We can trade ACAD, that is Canadian dollar, and so many of them. Okay, and the other thing that we can just talk about over here, number 2, is agricultural product. You can trade them on the Forex. Agricultural product, you can trade on the Forex trading. On the agricultural product over here, you can trade cotton, you can trade sugar. Imagine, you can trade sugar, you can trade cotton over here. Number 3, you can trade metals. Imagine, you can trade metals over here. So you have so many options. Okay, you have so many options to trade. You can trade silver, you can trade what we call gold. All these you can trade them on the forex trading according to the broker. Number 4, this is number 4. Okay, number 4 here, what can you trade over here? You can trade energy. You can trade energy over here. We are talking about the crude oil. Crude oil involved, that is US oil. Okay, US oil. You can trade UK oil. All these are the crude oil. Okay, you can trade also gasoline over here. I'm just giving 2 examples. Okay, number 5, you can trade stocks. You see, there are a lot of things that you can trade on the forex trading. You can trade stocks. Stocks over here involves, maybe you can trade Netflix, you can trade Adidas, I'm talking Adidas because of ongoing that is March, that is World Cup. This is 2022. Okay, you can trade, that is, you can trade a lot of things, Facebook, everything over here in stocks. You can just trade them over here, including Tesla. So those, all of them are stocks. Our number 6 over here, you can trade indices. So we'll be talking more about the indices later, and why are you to trade indices, why indices, and all that. You learn more about the indices because these actually they expire and all that. So I don't want to talk more about the indices. If you have 5 of them, then this is what you can trade on the forex trading, and it sounds very amazing. So you have so many options to be trading right over here. So it's just your choice to choose what do you want to trade on the forex trading right over here. So we have come to the end of the part 1. Make sure on the next, what we are just going to be talking about actually is the forex trading class over here, and we can just proceed from there. What do you have to know about the forex trading advantages and the broker that you can just be using to trade on the forex market? I'll see you in the next class. Make sure that you watch, subscribe to the channel, like this video. I'm coming right after this. Hello traders, how are you doing? Welcome back again. This is Dan, and this is Dan Tech Channel. If this is your first time to be over here, this is part 2 of introduction to the forex trading. You can check our previous class. It is just down one over here in the description, or you can just get in the comment section and all that. So in this video, we'll just be talking about the forex trading now, so that we can just know what are the advantages, and actually a lot of things that you're just going to know in this video. It is just going to be very amazing. So this is part 2. Make sure that you watch to the end. It's going to be very amazing. Like this video, subscribe to the channel, and be notified anytime I just upload a new video, part 3 and all that. It is just very amazing. I'm going to explain in a very simple way that you can just understand. Even if maybe you have never traded, you have never heard of forex trading, just follow my class and it's very going to be simple for you. Forex trading over here. So actually, do you know forex trading? When you talk about the forex trading, this is actually where the companies, bank, hedge fund, investors, and also the retailers come in order for exchange of the currencies. And also you might have actually done the forex trading, but you don't know. Why am I saying so? Maybe somewhere you traveled, maybe let's say you travel from maybe that is from US. Let me use these countries. You travel from US and maybe you just went to you went to Australia. You just went to Australia over here. You travel from US and you went to Australia. You went to Australia. So what you will do over here, for you to move to US, to move to Australia, what you do, you have to pass through the bank over here. You do something we call foreign exchange. You're being given an Australian dollar, you given AUD over here, and then you just come over here with AUD, and vice versa. When you're just going back, the AUD that you just be having over here, you exchange them over here to get the US dollars that you can maybe get back to your country. So you have already done what is called forex trading, because of today you have traded the foreign currencies. Okay, now when we come over there and we just talk about something like this, you come from US and you are going to that is Australia. Okay, you are just going to Australia. So over here we have Australian dollar, that is you want over here AUD, and we have US dollars. That means you just be buying this, you buy this one. Okay, so you buy USD, you use USD to buy this one. Okay, so all this one is what we call a pair. We'll be talking more about the pairs and all those one, but that is how you have to understand it. You have be this, so that is how things are done. So you already did a forex trading through this pair. So you have already done what? A forex trading. You already traded on the forex trading. Now, what are the advantages of forex trading? What are advantages of forex trading? Because actually, well, we are talking about the advantages of other platforms, and let's just talk about what are the advantages of forex trading. And actually, this is going to be very fascinating, because when you talk about forex trading, we are talking about the market, very big market that is trending more than $3 trillion every day, not every month, not every year. Okay, every day. Actually, for those in Africa, country in Kenya, you know, this is our budget, not dollars, in Kenya shillings. Actually, is 3 million Kenya shillings is our budget in the whole here, but in the forex market it is trending $3 trillion every day. And why are we talking about this one? This market is very liquid. It's very liquid. That means you can have many opportunities to trade. You can have easy to get in and out of the market, because market is moving so well. Can you imagine if you just go to the market where everything is just constant, just moving very slow? Can you just imagine in another market where you can just go and sell, buy fast, sell fast? You end up actually making a lot of profit on that. So that is how the forex market is, and if you just want to involve it, then you have chances of making more money. Let's talk about another one over here, which is the EC. This is ease of access. You can access the forex trading that is very easily. Actually, the way I'm going to show you access, and actually you can trade even with small amount. All this is dependent with the type of the broker that you just be using. We'll be talking about the requirement that you just need to start trading on the forex trading in this video. Just keep watching. Okay, and the other advantage we see on the forex trading over here is the volatile allows traders to benefit from the market. The market is volatile. That means it's moving very fast. Maybe the market can just go over here, it hit your stop loss, is take profit, it takes the profit, you sell again, market goes over here. Maybe in a day you can make so many trades, closing, opening, closing, and then you just make small amount of money. They can just end to be a very big amount of money in a day. The market is volatile. Okay, and the other thing that is very interesting about the forex trading is that you can trade forex anywhere. Okay, you have freedom to trade, anywhere. Okay, for example, there are some people who maybe live in town. You have been trading forex in town, and maybe you're just planning to go to Sharks and maybe downtown or there, and then what you just have maybe is to carry your phone or maybe a laptop, and then you just need some internet, and off there you just go and maybe carry your business over there, and you can trade anywhere. You can just go to a vacation and then you still continue working. You can go anywhere in another country and still you continue working. You know, if you're a full-time forex trader, you can work from. You can see this job is business is very nice when you're starting and all that. That means you can, everybody, actually this is what you find. For me, I love working anywhere without any decision, without maybe saying I have to stay here because of one reason or the other, because maybe of the job. But forex trading is something different. You work anywhere you just want and all that. The next step that is very important over here is that what do you need? What do you need? What do you need to start forex trading? What do you need to start forex trading? To start trading, what do you need to start trading? That is important thing that you have to note over here. What do you need to start trading on the forex market? When we talk about this, actually this is very important because you have to know this. And number one of what you just need over here is broker. What you need over here is the broker. Over here, when we talk about the broker, let's say you have decided to do forex trading, which I do actually. So if you just want to do about the forex trading, a broker, actually this is a platform that you will be using to deposit, to provide you with the video, that is currencies, metals, energy, and agricultural product to trade. And when you just trade and get profit, then you can just withdraw your money. And I'm talking about the FXPesa. Okay, you can just download up to the FXPesa. In this case, we use the broker FXPesa. I will just tell you why. Why are we saying that we are going to use FXPesa in this scenario? So the FXPesa, the link is in the description. Make sure that you click that. If you use that link to register to FXPesa, my number, I'll leave it over there, and then you can just contact me and I'll hand you to my team so that you can just continue receiving free classes and all that. Okay, so forex trading, you use FXPesa. How do you log into the, let's first of all talk about what you have to look on the broker before opening an account with the broker. Number one, you have to look whether the platform is regulated. For example, here in Kenya, the market has to be regulated. The platform has to be regulated by CMA, which is Capital Market Authority in Kenya. This deals with all things about the market. It's just like CAPS, you know, something like that. So this is for the market. So it has to be regulated by this one platform. That is to be assessed everything, okay? So that to ensure that when your capital is just deposited into this platform, the platform is not going, or FXPesa is not going to use your money to trade or do a business. Your money is just going to be kept away from the company money, and that means you can just withdraw anytime you want of the money. And actually the thing about the FXPesa, let's just continue with the what you have to look, and then I'll just be talking about this one. Number B is the easy access. Easy access. The reason about is that you can, after registration of the link in the down one below, the reason I'm saying that you use my link down over there is so that you can just getting the real link, okay? Because maybe you avoid being scammed maybe by the scammers out there. So easy access, you after registering over here, you can just download the application on the Play Store. You'll be accessing it in a very easy way. The other thing is that for easy access, it's very easy to deposit money because you deposit right from FXPesa, from M-Pesa. Deposit M-Pesa here. You know, M-Pesa is very common and very easy for everyone. So deposit, very easy. You can deposit and trade from $5. Just imagine. And also you can just withdraw as from $1. So that sounds very, very, very amazing. So the other thing we just be talking about over here is the low spreads. So look at the platform that has low spreads. We will be talking to see what are spreads. So these spreads are the charges that you need to incur when you are placing or opening a position. When you just trade, when you place a trade or buy something, they will charge you something. So you have to look up the platform that charges you very small amount of money, and you see that also in the FXPesa. That's why I want you to access the FXPesa, so that is a platform I know I've been trending for long, so that is platform you have to know that. So talking about number 4, we have to know about the customer service. customer service. So when you talk about the customer service, let's say you have a problem, maybe you want to access the platform and all that, you have any chances, you have anything to ask, of course the customer service has to be there. So that is, you don't have maybe to go and struggle to do something. Customer service has to be there to help you and all that. So when you open an account with the FXPesa, what it does is that it just give you an account manager. Account manager is someone you are signed in to be helping you in everything that you just need. If you have any question, you just be contacting directly. That is only person you just be assigned in to be helping you over here. If you just want to access the support team, you can contact support at FXPesa.com. So here, okay, so that is what we are just talking about over here. Number here, which is the last one, you have platform has to be very secure, and over here I talked about the CMA, security has to be tight. So when you are registering, actually for those who will be using the link in the description below, make sure when you register, your ID that you registered with matches with the number. If you registered a Safaricom number over here and that Safaricom number is registered with your ID, make sure that the time you will be uploading ID for verification, you use the same ID. If these two will not match, you will not be able to withdraw or deposit to this account, because let's say you register, all you have to do, register, this is your ID, this is your phone number. So make sure the number you have used over here is the number you registered with the ID you are going to upload, okay, so that if anyone, maybe even if someone hacks your account, there's no one can withdraw your money, because the money only can only be withdrawn to the account that it just deposited from. Okay, if you deposited money from to FXPesa using this line, you deposited to FXPesa. Okay, so this is deposit. If you want to withdraw the money, you can only withdraw to this number. Even if I access your account, even if someone accesses your FXPesa, he cannot withdraw to his phone number. The money can only come to your account. So that is very high and very nice strategy to ensure that your money is very, very secure. Okay, that's very interesting on what you just need to that is to start in forex trading. So we were on the first one, which is the broker, as you can see, number one here. So let's just go to the number two on what you just need to on the forex trading. Actually, you just need you need a phone, you need a phone or laptop, to do all those things. Actually, you cannot just do, you need actually a phone, and maybe if you just want to advance thing, you want to become a very serious trader, you have understood everything, then maybe you can just get access of laptops. So maybe you can just be doing analysis over there, and over here you just need internet, or maybe Wi-Fi is good and all that. Okay, so that maybe you can be fast. If you just want to be a scalper or someone who maybe execute trade fast, you enter, you exit, you need a strong Wi-Fi so that you can just be seeing everything how it is just going, or maybe you can just be making fast decisions when you are closing or opening the positions. That's why you need one of these things, but you need either a phone. Ukiwa na simu uko sawa. So if you have a phone or laptop, any of them can just work. Open an account with FXPesa and everything will just be very easy for you. And the other thing you just need over here is actually the capital. Okay, number 3, which is capital. And this capital actually comes after maybe you have traded with the FXPesa, and you have traded actually on the demo account. Sorry, you have traded on the demo. After trading on the demo, then you maybe after familiarizing with the market, you know how things are done, then that is the time you can just open the live account, and that live account is just going to help you to execute the trade, make profit over there, and then you can just withdraw your money. Okay, so on the capital sign over here, as I was just saying, make sure you just do on the demo first, but make sure you are, when you are opening the FXPesa account, open demo using that link, and then after opening demo again on the same time, go and open live account. So you'll be having live and demo account. You don't need to deposit on the live account, but let it be there, so that anytime you just want to trend, it will just be very easy for you. So and also you just be having the demo account. Okay, now let's talk about this last thing in this video. How is the forex trending done and all that? So for you to trade forex trending, you need a broker. Over here, let me write FXPesa here. So let's FXPesa, FXPesa is here. You have opened the account. So after opening the account, what you just need, let's say maybe you have traded on the demo account and now you are ready to deposit the money. So what you just do over here is deposit money. Deposit. So this is M-Pesa. Why am I writing these things? So this is M-Pesa, your phone. You have deposited to the FXPesa. Maybe let's say it is $50 right over here. And after doing that, then you connect your FXPesa. You link with what? You can link it to those things. We have FXPesa Trader, we have MT4, and we have MT5. So you just link these two. So this platform, what they does is that they help you to execute the trend. Okay, so you have seen some platform maybe where you people are doing analysis, they are doing something on the graphs and they are drawing. So these are the platform that can just help you to do that on MT4, MT5, and FXPesa Trader. That is where you can just do the decision after your account is linked. So after making the money, after maybe you have executed the trend over here, the profit that you just make, of course, will just be reflected over here. And after making, so the profit will just be reflected over here. Any amount of money that reflect on MT4 and MT5 is also reflecting on FXPesa account. So this is your FXPesa account. So after making the profit on that, what do? You withdraw. So this is M-Pesa. So again, you can just withdraw your M-Pesa to your M-Pesa again. So this is withdraw. So you can see our forex trading is very easy. You deposit from FXPesa to FXPesa, you link your FXPesa to FXPesa Trader MT4. Actually, you can link even without even depositing first. You can just link it to, because even if you have demo, you can link it to MT4 and MT5. When you are registering to FXPesa, you can select whether you want to MT4 or MT5. You can see that, and then after that you make profit, then you just withdraw to your M-Pesa, and then you just enjoy the profit right from there. So that's how the forex trading is just very easy. You can just navigate on that, and then everything just becomes easy for you. So we have come to the end of part 2. That is what we have to know about the forex trading. In the next video, we'll just be talking about the forex terminologies that you just have to know, or forex basis that you have to know, or maybe some of them that you have heard people talking about on the forex trading. So make sure that you subscribe to the channel, turn on notification bell. You'll be notified anytime I just upload a new video, and I'll see you in the next one. Hello traders, hello everyone, this is Dan and this is Dan Tech Channel. On our last class we were talking about that is the forex trading. Actually, this is the continuance of what we were talking in part 2. This is part 3 of the forex trading. In this video we are just going to be talking about the forex terminologies, basics of the forex trading. So if you have not checked the previous class where we have done part 1, introduction to the forex trading, that is forex trading and all that one, make sure that you just check that one. And this class we'll be talking about the basic terminologies that you maybe have heard on the forex trading, and then we can just proceed from from there. This is going to be very interesting, very simple for everyone to understand. It does not matter, maybe this is your first time to be trading, it will just be very easy for you. Let's start now the forex terminologies. I hope you have subscribed, I hope you liked this video, and share also to your friends. Now, basic terminologies of forex trading. Basic terminologies. You know, when you talk about terminologies, when you talk about the forex trading, this means that maybe these are the things maybe that you have heard people talking in forex trading, and these are traders. Maybe you can hear people talking about something and then you just get confused, you know, you don't know what they mean. That is what we actually going to be talking about in this video to make everything that is simple. Now, let's number one over here, what we're just going to be talking about over here. Number one, maybe you have heard about the that is exchange rate. When we talk about the exchange rate, I hope if you checked the previous video, because I'll be using the one we used in the previous videos, make sure that you check that first. The link is in description and also in the comment section. So when we talk about the exchange rate, when we talk about the exchange rate, we are talking about the value of the currency expressed in terms of another. E.g., for example, let's say we have euro USD. So this is what? This is pair. So when we have this one, you can see something written like 1.0300. okay, so this is the exchange rate. What does this mean? That means for you to buy 1 euro, for you to buy 1 euro, you need how many dollars? You need 1.0300. So for you to buy 1 euro, you need how many dollars? You need 1.0333. okay, so that's interesting. That means what? The value of euro is very high because you need more dollars to buy 1 euro over here. So the euro is higher than dollar. So that is what we mean over here. And what we called this in the last class, we called this a pair, and we called this what, which we come to that. So this already a pair, this is the exchange rate. Okay, yeah, we talk about the exchange and all that. Now, the number two we are just going to be talking about over here is what we call a pip. So this is a common one. Actually, you have seen people talking about the pips and all that. So the pips actually means the smallest increment of the price movement on a currency move. So for example, there's something we call pips, and we'll learn later how to calculate pips and point, but there's something we call pips and point. Okay, let's, for example, you may use this one. We have this euro USD right over here. This is pair, and for example, the market moves from 1.0300, and then the market just go to 1.0310. So if actually you can see the market has ended, you will see the last digit over here. The market has just ended these two, and they come to be 10. So if you just subtract, you see you have that does not point, because the market actually does not count the last value. So you don't count the last value, so you have 1 pip. But in terms of point, you just need to know about the point. Just put this, if you subtract this one, we'll have how many points? We have 10 points. So these are the point, if you just know how to calculate that one. So the point is just you subtract this one from the previous to the last one. It's just like calculating the profit and the loss. You just subtract between the initial and the last. Okay, the initial and the last one, then you just get the point. Okay, so here we have initial and the last digit, then we get what? Then we just get the point. For you actually to get the pips is very easy, and I don't want to talk about micro, nano and what people have been talking previously, but here we just want to get pips. Just multiply this times 0.1. okay, so if we have 10, that means the price moved by 1 pip, because we don't count the last digit, so the market moves by 1 pip. So for any value where you see people talking about pips, if person talks about maybe 20 pips, just know the market moved by how many points? The market moved times 10 So you multiply this times to become points, so moved by 200 pips. So this is, you multiply 200 pips times to get point. Actually these are point moved by 200 point. So if you have 200 point and you just want to get pips, you multiply times 0.1 as I said, and then you get 20 pips. So if you just want to get point, you multiply pips times 0. No, you multiply times 10. If you have pips and you have point, you multiply times 0.1 to get pips. So that is what you can just do for now, okay? But we'll come to that, how to calculate profit and loss. So if you just get that one, and you can get point by subtracting the digits from another, that will just be very easy, because if you just get point, then everything will just be very easy for you. The other thing that you just be talking about over here is leverage, number C, which is leverage. Leverage is the one that is very important in this video. The reason we are talking about the leverage actually means that this is the ability to gear your account into a position greater than your total account margin. Okay, let's say for example you get a leverage of 1:100, so that is the leverage that you can just get. But understand that the more the leverage, the higher the risk. Why am I saying that? If you get a platform, or maybe you adjust your leverage maybe 1:1000, that means you are saying that if I have $100 over here, I'll not explain this more, but this will just help you to understand. So if you have $100 over here, you are saying, if you just place this one, you are saying I'm able to handle, that is 1000 times 100, I am able to handle $100 in a trade. Understand, you make more money, but to lose this money will just be very fast. So if you use a leverage of 1:100, here you are saying multiply this 100 times 100. Here you are saying I can handle 10,000 in trading. $10,000 in trading, that is 1 million right over here. So that is the what leverage means. Okay, so let me talk about this one. This is very important. You know, before people have been trading, before we know about the trading and all that, kitambo sana, those who actually it just used for the banks used to trade against banks. You know, I'm going to explain the existence of leverage. Banks used to trade against banks, and when you talk about the banks actually trading against banks, central banks, and all those banks, you understand that there's a huge amount of money that is needed over here for you to trade over here at the forex market. Okay, so but as the time goes, it just involved something that we call the hedge fund. You know, hedge fund involved. So the hedge fund just came into the market. So hedge funds over here means that this is where people can just accumulate their money. So many people can just, this is investors, they come and they put their money over here, and then just putting their money into a pool, and then they can just maybe employ some serious or maybe big traders over here to trade for them. So this is a trading firm. So when these people get this amount of money, maybe they just trade. So that is what they are called the hedge fund. So they will just be trading for all those people. So you can see the banks who are trading against banks, but now the hedge fund just came in, and now we came up to the local banks where they can trade, the local banks and get involved. Until now, where we can just, my point is over here is until the market came to retail. So we are retail, so we have also investors. Retail means this is where the platform like FXPesa can just provide you with something called leverage. So because you need a lot of money to trade in the forex market, but you know, the forex moves in a small amount of money. For example, let's say 0.0300. So you can see these digits are very small. and you cannot say that you just enter into the forex market maybe to buy this small amount of money over here. You know, you need a lot of money for you to make profit out of those digits. So that's why you need to get something. Maybe if you have $10, you can see you cannot maybe if this movement you buy for this is $1 over here, you're just making zeros of amount of money. But through the leverage over here, it will just be helping you to actually be making good amount of money over here. Okay, and something we call the lot size and all that. So you can see that is where the leverage just involved in, so that maybe this with the smallest amount of money, with the small amount of money, you can trade in a big position, you can handle big amount of money. So it's like the platform will just calculate your money and just help you. You'll be, of course you cannot see that money, but in real sense the money, the leverage you place, the system will just be assuming now you are trading with that amount of money, and that's how the risk it is. The higher the risk, the big, it can just be an advantage, but if you have knowledge, just see that one. So that is what we call leverage. We'll just be explaining more as we proceed. Let's go to the last one, which is not the last one. On this one we're talking about the margin. Okay, and actually before even we just move to the margin, how do you calculate the leverage? So to calculate the leverage is just very easy. Just get the value, the total, get total value of open position, just get the total value of open position, then you divide by margin balance. Then you just keep getting what? The leverage. You just be getting the leverage that you have used over there. And then last not last, okay, margin is our next topic over here. Margin. So there's margin percentage. I'll just be explaining when we come to MT4. You understand very, very clearly. But these are the terms maybe that you'll be hearing people talking about. So the margin over here just involve, this is the deposit required to open or maintain a position. When you place a trend, for example, you have a running trend of Euro USD, so you need a certain amount of money to open that position. You need amount of money to place that trade. So that is what we call the margin, okay, or to maintain a position. If the margin is very low, that means the platform will close your position automatically. That means your account will be blown. Okay, so you need a certain amount of money. Margin, you know, margin it means something inside here, so the amount of money needed, so that is what we call margin is needed. And the last one we talk about over here, of course, we come to others, but we are talking about the spread. Okay, spread, actually this is the difference between the quote price and that is the bid and ask price. Okay, so you have seen maybe the platform talking about, maybe that is a Euro USD, talking about, I'm using this value, let me use this value, allow me to use it again and again. So we have 0.3000, and maybe you have seen this price, another price written over here. So these different two prices over here, so you have seen maybe when you are going to trend, the one is here and the one is here. So this one is what we call the difference between the buy quote and the sell quote. Okay, so those are the difference. That means if you subtract between this and this, you get 22 points. Okay, so this 22 points are the one that you have to pay when you place a trade. Okay, so for example, let's just say you buy. Okay, when you buy in this market, the market will start from here instead of here, so it will pick from here, but the market will just pick from here, but it takes this one, so you have to pay 22 points. You just understand that. So you have to, if you just calculate the difference over here, you just get 22 points over here. So those are what we call the spread. So the other than that we just be talking about over here is the major currencies that are trending in forex trading. So these are the major currencies that are trending in the forex market. main trading in the forex market. Number one, we have euro. We have euro denoted as euro. So this is a European currency. We have JPY. We have so many of them. This is Japanese. Yeah, Japanese. There's something that making me to write them down so that you can just understand. We have GBP. This is British pound. We have something like CAD, that is Canadian dollar. Maybe you know those things, you can just go through all them. We have NZD. This is New Zealand. This is New Zealand dollar, and many of them. This is CHF. This is Swiss franc. Okay, I know the way it's just written, maybe it does not sound that way. So we have these pairs and how they are just named. So these pairs actually are named, and maybe you'll be hearing those pairs named that way. So we have these pairs. So these are pairs and the nicknames pairs. So we have a pair just like this, written this way. We have this pair. This is known as euro. This pair, if someone tell you, hey, what are you trading? I trade euro. Okay, so he is trading euro USD, because actually, yeah, so that's in strategy. If someone trades something like USD JPY, that person is saying, I trade dollar yen. Okay, I trade dollar yen. So that is the language of the forex. I trade dollar yen. Okay, all right. So if someone actually trained GBP USD, that person will just say, I trained cable, or I trained sterling. So it means he's trading GBP USD. So if someone actually trains that is New Zealand dollar, that is NZD, and then versus USD, that person will be saying, I trade Kiwi. Hey, I do handle this one. So that is the Kiwi. Okay, so if someone trained maybe US dollar versus Swiss franc, that person will say he trained was guess he trained Swiss. Okay, he trained Swiss. So those are the terms maybe you can just be hearing in the forex market, and it just sounds amazing. So talking about pairs, name of the pairs. Okay, name of pair. How naming of the pair happens? Actually, this is naming of pairs. Okay, so for example, we have euro USD here. We have euro USD. You'll see something written like this, and maybe the value over here. I'm going now to explain this the last time so that you can just get these things clearly now. Okay, so we have dot here and 0300. Okay, now let's talk about this one. So this one is the base currency. It is base because actually you can see it is on the base, it is on the bottom, it is on the first one. So this is the base, the start, and this is the quote. Why are we calling it quote? Because if you just want to buy the euro, you quote, you say you want to buy in terms of dollar, and buy with $2, $1, 1.0, so that is the quote currency. So this is the quote, this is the base currency, and this is exchange rate. Okay, you know this, we talked about it, exchange rate. So this is very important. This value is always 1. Okay, so as we said, remember what we said earlier, we said you need $1.0300 to buy 1 euro. So the base currency is always 1. So you need 1.00300 to buy 1 euro. That means the euro is expensive, because 1 euro, if you have 1 euro, you have 1.0300 dollars. So when you buy, you are doing what? You are buying, you are buying euro. Okay, when you are selling, you are doing what? You are selling USD. Okay, so it's just like inverse of that. So if you buy, you are buying euro. If you sell, you are selling USD. So that's how easy things are actually in the forex market. So in the next video, we'll just be talking about the long and short, that is buying and selling. You'll just understand more about them, and also how to calculate point, how to calculate loss before you enter into the market. So that has been the part 3 of this video. We'll be coming with part 4 so that you can just understand everything about the forex trading, and this is going to be very, very easy. If you love this video, make sure that you subscribe down over there, and also like this video, share to your friends, and it will just be very amazing. If you just want to know the broker I use, click the link in the description below to join FXPesa, follow instructions. And if you just need more guidance, WhatsApp me, my number is down one over there. I'll see you in the next one. Hello traders, hello everyone, this is Dan and this is Dan Tech Channel. On our last class we were talking about that is the forex trading. Actually this is the continuance of what we were talking in part 2. This is part 3 of the forex trading. In this video we are just going to be talking about the forex terminologies, basics of the forex trading. So if you have not checked the previous class where we have done part 1, introduction to the forex trading, that is forex trading and all that one, make sure that you just check that one. And this class we'll be talking about the basic terminologies that you maybe have heard on the forex trading, and then we can just proceed from there. This is going to be very interesting, very simple for everyone to understand. It does not matter, maybe this is your first time to be trading, it will just be very, very easy for you. Let's start now the forex terminologies. I hope you have subscribed, I would say liked this video, and share also to your friends. Now, basic terminologies of forex trading. Basic terminologies. You know, when you talk about terminologies, when you talk about the forex trading, this means that maybe these are the things maybe that you have heard people talking in forex trading, and these are traders. Maybe you can hear people talking about something and then you just get confused, you know, you don't know what they mean. That is what we actually going to be talking about in this video to make everything that is simple. Now, let's number 1 over here, what we're just going to be talking about over here. Number 1, maybe you have heard about the that is exchange rate. When we talk about the exchange rate, I hope if you checked the previous video, because I'll be using the one we used in the previous videos, make sure that you check that first. The link is in description and also in the comment section. So when we talk about the exchange rate, we are talking about the value of the currency expressed in terms of another. E.g., for example, let's say we have euro USD. So this is what? This is pair. So when we have this one, you can see something written like 1.0300. okay, so this is the exchange rate. What does this mean? That means for you to buy 1 euro, you need how many dollars? You need 1.0300. So for you to buy 1 euro, you need how many dollars? You need 1.0333. okay, so that's interesting. That means what? The value of euro is very high, because you need more dollars to buy 1 euro over here. So the euro is higher than dollar. So that is what we mean over here. And what we called this in the last class, we called this a pair, and we called this what, which we come to that. So this already a pair, this is the exchange rate. Okay, yeah, we talk about the exchange and all that. Now the number 2 we are just going to be talking about over here is what we call a pip. So this is a common one. Actually, you have seen people talking about the pips and all that. So the pips actually means the smallest increment of the price movement on a currency move. So for example, there's something we call pips, and we'll learn later how to calculate pips and point, but there's something we call pips and point. Okay, let's, for example, you may use this one. We have this euro USD right over here. This is pair, and for example, the market moves from 1.0300, and then the market just go to 1.0310. So if actually you can see the market has ended, you will see the last digit over here, the market has just ended these two and they come to be 10. So if you just subtract, you see you have that does not point, because the market actually does not count the last value. So you don't count the last value, so you have 1 pip. But in terms of point, you just need to know about the point. Just put this, if you subtract this one, we'll have how many points? We have 10 points. So these are the point, if you just know how to calculate that one. So the point is just you subtract this one from the previous to the last one. It's just like calculating the profit and the loss. You just subtract between the initial and the last. Okay, the initial and the last one, then you just get the point. Okay, so here we have initial and the last digit, then we get what? Then we just get the point. For you actually to get the pips is very easy, and I don't want to talk about micro, nano and what people have been talking previously, but here we just want to get pips. Just multiply this times 0.1. okay, so if we have 10, that means the price moved by 1 pip, because we don't count the last digit. So the market moves by 1 pip. So for any value where you see people talking about pips, if person talks about maybe 20 pips, just know the market moved by how many points? The market moved times 10, so you multiply this times 10 to become points. So moved by 200 pips. So this is, you multiply 200 pips times to get point. Actually these are point moved by 200 point. So if you have 200 point and you just want to get pips, you multiply times 0.1 as I said, and then you get 20 pips. So if you just want to get point, you multiply pips times 0. No, you multiply times 10. If you have pips and you have point, you multiply times 0.1 to get pips. So that is what you can just know for now. Okay, but we'll come to that, how to calculate profit and loss. So if you just get that one, and you can get point by subtracting the digits from another, that will just be very easy, because if you just get point, then everything will just be very easy for you. The other thing that you just be talking about over here is leverage, number C, which is leverage. Leverage is the one that is very important in this video. The reason we are talking about the leverage actually means that this is the ability to gear your account into a position greater than your total account margin. Okay, let's say for example you get a leverage of 1:100, so that is the leverage that you can just get. But understand that the more the leverage, the higher the risk. Why am I saying that? If you get a platform, or maybe you adjust your leverage maybe 1:1000, that means you are saying that if I have $100 over here, I'll not explain this more, but this will just help you to understand. So if you have $100 over here, you are saying, if you just place this one, you are saying I'm able to handle, that is 1000 times 100, I am able to handle $100 in a trade. Understand, you make more money, but to lose this money will just be very fast. So if you use a leverage of 1 is equal to 100, here you are saying multiply this 100 times 100. Here you are saying I can handle 10,000 in trading. $10,000 in trading, that is 1 million right over here. So that is the what leverage means. Okay, so let me talk about this one. This is very important. You know, before people have been trading, before we know about the trading and all that, kitambo sana, those who actually it just used for the banks used to trade against banks. You know, I'm going to explain the existence of leverage. Banks used to trade against banks, and when you talk about the banks actually trading against banks, central banks, and all those banks, you understand that there's a huge amount of money that is needed over here for you to trade over here at the forex market. Okay, so but as the time goes, it just involved something that we call the hedge fund. You know, hedge fund involved. So the hedge fund just came into the market. So hedge funds over here means that this is where people can just accumulate their money. So many people can just, this is investors, they come and they put their money over here, and then just putting their money into a pool, and then they can just maybe employ some serious or maybe big traders over here to trade for them. So this is a trading firm. So when these people get this amount of money, maybe they just trade. So that is what they are called the hedge fund. So they will just be trading for all those people. So you can see the banks who are trading against banks, but now the hedge fund just came in, and now we came up to the local banks where they can trade, the local banks and get involved. Until now, where we can just, my point is over here is until the market came to retail. So we are retail, so we have also investors. Retail means this is where the platform like FXPesa can just provide you with something called leverage. So because you need a lot of money to trade in the forex market, but you know, the forex moves in a small amount of money. For example, let's say 0.0300. So you can see these digits are very small, and you cannot say that you just enter into the forex market maybe to buy this small amount of money over here. You know, you need a lot of money for you to make profit out of those digits. So that's why you need to get something. Maybe if you have $10, you can see you cannot maybe if this movement you buy for this is $1 over here, you're just making zeros of amount of money. But through the leverage over here, it will just be helping you to actually be making good amount of money over here. Okay, and something we call the lot size and all that. So you can see that is where the leverage just involved in, so that maybe this with the smallest amount of money, with the small amount of money, you can trade in a big position, you can handle big amount of money. So it's like the platform will just calculate your money and just help you. You'll be, of course you cannot see that money, but in real sense, the money, the leverage you place, the system will just be assuming now you are trading with that amount of money, and that's how the risk it is. The higher the risk, the big, it can just be an advantage. But if you have knowledge, just see that one. So that is what we call leverage. We'll just be explaining more as we proceed. Let's go to the last one, which is not the last one. On this one we're talking about the margin. Okay, and actually before even we just move to the margin, how do you calculate the leverage? So to calculate the leverage is just very easy. Just get the value, the total, get total value of open position, just get the total value of open position, then you divide by margin balance. Then you just keep getting what? The leverage. You just be getting the leverage that you have used over there. And then last not last, okay, margin is our next topic over here. Margin. So there's margin percentage. I'll just be explaining when we come to MT4. You understand very clearly. But these are the terms maybe that you'll be hearing people talking about. So the margin over here just involve, this is the deposit required to open or maintain a position. When you place a trend, for example, you have a running trend of Euro USD, so you need a certain amount of money to open that position. You need amount of money to place that trade. So that is what we call the margin, okay, or to maintain a position. If the margin is very low, that means the platform will close your position automatically. That means your account will be blown, okay. So you need a certain amount of money. Margin, you know, margin it means something inside here, so the amount of money needed, so that is what we call margin is needed. And the last one we talk about over here, of course, we come to others, but we are talking about the spread. Okay, spread, actually this is the difference between the quote price and that is the bid and ask price. Okay, so you have seen maybe the platform talking about, maybe that is a Euro USD, talking about, I'm using this value, let me use this value, allow me to use it again and again. So we have 0.3000, and maybe you have seen this price, another price written over here. So these different two prices over here, so you have seen maybe when you are going to trend, the one is here and the one is here. So this one is what we call the difference between the buy quote and the sell quote. Okay, so those are the difference. That means if you subtract between this and this, you get 22 points. Okay, so this 22 points are the one that you have to pay when you place a trade. Okay, so for example, let's just say you buy. Okay, when you buy in this market, the market will start from here instead of here, so it will pick from here, but the market will just pick from here, but it takes this one, so you have to pay 22 points. You just understand that. So you have to, if you just calculate the difference over here, you just get 22 points over here. So those are what we call the spread. So the other than that we just be talking about over here is the major currencies that are trending in forex trading. So these are the major currencies that are trending in the forex market. Trending in the forex market. Number one, we have euro. We have euro denoted as euro. So this is a European currency. We have JPY. We have so many of them. This is Japanese yen. Japanese. There's something that making me to write them down so that you can just understand. We have GBP. This is British pound. We have something like CAD, that is Canadian dollar. Maybe you know those things, you can just go through all them. We have NZD. This is New Zealand. This is New Zealand dollar, and many of them. This is CHF. This is Swiss franc. Okay, I know the way it's just written, maybe it does not sound that way. So we have these pairs and how they are just named. So these pairs actually are named, and maybe you'll be hearing those pairs named that way. So we have these pairs. So these are pairs and the nicknames pairs. So we have a pair just like this, written this way. We have this pair. This is known as euro. This pair, if someone tell you, hey, what are you trading? I trade euro. Okay, so he is trading euro USD, because actually, yeah, so that's the strategy. If someone trades something like USD JPY, that person is saying, I trade dollar yen. Okay, I trade dollar yen. So that is the language of the forex. I trade dollar yen. Okay, all right. So if someone actually trained GBP USD, that person will just say, I trade cable or I trade sterling. So it means he's trading GBP USD. So if someone actually trades that is New Zealand dollar, that is NZD, then versus USD, that person will be saying, I trade Kiwi. Hey, I do handle this one. So that is the Kiwi. Okay, so if someone trade maybe US dollar versus Swiss franc, that person will say he trade was guess he trained Swiss. Okay, he trained Swiss. So those are the terms maybe you can just be hearing in the forex market, and it just sounds amazing. So talking about pairs, name of the pairs. Okay, name of pair. How naming of the pair happens? Actually, this is naming of pairs. Okay, so for example, we have Euro USD here, we have Euro USD. You'll see something written like this, and maybe the value over here. I'm going now to explain this the last time so that you can just get these things clearly now. Okay, so we have dot here and 0300. Okay, now let's talk about this one. So this one is the base currency. It is base because actually you can see it is on the base, it is on the bottom, it is on the first one. So this is the base, the start, and this is the quote. Why are we calling it quote? Because if you just want to buy the euro, you quote, you say you want to buy in terms of dollar, and buy with $2, $1, 1.0, so that is the quote currency. So this is the quote, this is the base currency, and this is exchange rate. Okay, you know this, we talked about it, exchange rate. So this is very, very important. This value is always 1. Okay, so as we said, remember what we said earlier, we said you need $1.0300 to buy 1 euro. So the base currency is always 1. So you need 1.00300 to buy 1 euro. That means the euro is expensive, because 1 euro, if you have 1 euro, you have $1.0300. So when you buy, you are doing what? You are buying you are buying euro. Okay, when you are selling, you are doing what? You are selling USD. Okay, so it's just like inverse of that. So if you buy, you are buying euro. If you sell, you are selling USD. So that's how easy things are actually in the forex market. So in the next video, we'll just be talking about the long and short, that is buying and selling. You'll just understand more about them, and also how to calculate point, how to calculate loss before you enter into the market. So that has been the part 3 of this video. We'll be coming with part 4 so that you can just understand everything about the forex trading, and this is going to be very, very easy. If you love this video, make sure that you subscribe down over there, and also like this video, share to your friends, and it will just be very amazing. If you just want to know the broker I use, click the link in the description below to join FXPesa, follow instructions. And if you just need more guidance, WhatsApp me, my number is down one over there. I'll see you in the next one. Hello traders, how are you doing? This is Dan, and this is Dan Tech Channel. In this video, we're just going to be going through the technical analysis class. And on this class, we are going to be talking a lot, and make sure that you stay tuned, because this is the introduction to the technical analysis, how you can just execute and good analysis, how you can just utilize them to know where you actually even going to enter accurately. So if you are a beginner on the forex trading and you just want to learn more about technical analysis in the language you can just understand, because I'm going to simplify this in a very, very, very simple way. Of course, course, I will be having an assignment for you, and I will be offering you a place to ask questions, so that maybe if you be having question, I'll just be coming over here to explain that. But everything I'm going to be giving you over here, then you're just going to love it. We'll also be going through some indicators to see how you can just use them to that is implement them on the market and enter very well. Okay, so let's talk about the technical analysis, or you can just call it technical analysis. I'm just nataka tu kuandika so that at least my hands is so kuandika. This class is going to be master class for this maybe 1 hour and all that. On this technical analysis side, we can call it TA, that is maybe TA we call it technical analysis. And when you just call, there's something we call also fundamental analysis, that is fundamental analysis. We'll be coming with another class where we'll be talking about the fundamental analysis. Fundamental analysis. When you are starting on the forex, let me just brief this for the beginners. When you just want to place your trend, when you just actually want to trend very well, you have to combine these three things. Okay. We have, when you just want, you can combine between technical analysis plus fundamental analysis if you just want actually to be a very profitable trader. And this is not must, but actually you can even include intermarket analysis, maybe that is sentiment. Actually, technical analysis will even give us sentiment. Let me just explain this. Technical analysis, this involve that is studying of the graphs, and what you are going to see right over here, I'm going to define that. But actually, when you just go to the trending view over here, this is the site where you draw your things and all that, to maybe know where you are going to enter and all that. Let me just brief. I've not already entered into the technical analysis. I'm just bringing you this, just an overview. On the fundamental analysis right over here, we'll just be talking about news, how the news affect the market. And if you just want to know how the market news affect the market on the fundamental analysis, you just go to the technical analysis to see the effect. Sentiment is about the feeling, the data of the market and all that. But in today's class, we'll not be talking about all these things. Easy is a bandai, but today we are concentrating on the technical analysis. Now, what is technical analysis? Technical analysis, actually, this analysis came all the way right from 1980s huko, yeah. Not even 2000, not even 1990 something. It's 18,000 over there. That is a long story. Now, what is a technical analysis actually? And the chart you always see about the candlesticks. Assume now you go to the market to buy the price of unga. Actually, here in Kenya and many countries, maybe you just went to the supermarket or anywhere, but today, maybe assume now you are doing this daily. Today you buy the price of unga and it was at this price. Tomorrow you go, you see the price imeenda juu kidogo. The other day the price will be here. Maybe the other day the price will be same here. The other day will be here. The other day you are recording this one maybe in 1 year period. In 1 year period, and you see something dropping like this, and that is why. So if you just connect this line here, what you see, it will draw something according to that graph. Now, what technical analysis does is that you will say that data repeat itself, something that is against the books, but actually history repeat itself, not even the same. You know, we cannot say that history was here. Of course, it can be here, but actually, if you can just see this one, we can see it is trending. That means the price has been increasing with time. Now, on the technical analysis, this is what you analyze to know on the chart, to know what is happening in the market and all that. So that is what we call technical analysis. You study this group to know, first of all, number one, you study to know the history of the market. You can know the history of the market. It can just help you to get the ranges. You know where the price is ranging, something like that. It can help you actually to know whether the market is in bear or bull. Bear means the price is dropping, just like this, to know whether the price this year has been dropping. Bull, it means whether the price this year is going up and all that. And maybe whether you just want to buy, you can keep up with the that is the momentum. And T also, this price can just help you to know what is the reaction of the fundamental analysis. Assume now there's news that have been released about the interest rate and all that. What are they bringing to the fundamental analysis in a letter, and what is the effect? Technical analysis is the one that will just show you that. And actually, kama kuna fears, maybe when there is war in China, there's war in Ukraine, you see that on the technical analysis, because you see some people and maybe high volatility happening at that time, and that's why you know that this is sentiment and this is what you expect anytime you hear that. Okay, so that is why you see all those things that will just be helping you so much to know that. Now, for you actually to place a very profitable trend, I say combine technical analysis for the first time and actually be knowing what is happening on the fundamental side, so that you cannot be outside. So the reason I'm saying you have to combine at least this one, this will improve your profitability. Itaongezea profitability ile utapata Jesus. It will just increase your profitability. That's the name, I know. Okay, now we are here. Now you have known what is the introduction, what is technical analysis and all that. Actually, do you know, let me just draw this as I was saying. Do you know this? Let's put this 10%, 20%, and then we put this 70%. This, do you know, actually when you are just trading is not all about technical analysis. Technical analysis actually is very nice, but do you know that you only get 10% for you to be profitable when you are trading on technical analysis? Only 10%. 20% actually, this is how you manage your money, how risk management. How do you actually manage your money when you are trading? How do you push yourself to the market? Maybe are you using the high lot size? Are you exposing to amount of money and all that? After doing good technical analysis, you know how to manage your money. Then actually you will just become at least 40-30% profitable in the trading. The other thing that you just have to know, what carries 70% is not. This is psychology. Thank you for knowing that. So this is psychology. Psychology is actually very important when it comes to trading. Kwa nini tunaongea tech? Let me just, because it is 70% high, let me just talk about it. Now, when you talk about psychology, you know, psychology is very important when you are trading. Sometimes maybe you can just buy, you can just do your technical analysis, very nice, and maybe you identify there are some trend, there's something maybe that has been happening, a lot of indicators, and you are very right about that. But you know, if you are not fit in psychologically, akili yako maybe there's something, there's problem. There's problem here, there's problem. That man has seen problem, gonna shinda in this mind. So if there's problem here, do you know, the moment actually maybe, let's say this guy, the account is only, let's say maybe the smallest, let's say even $100, okay? The moment actually after entering the market and indeed a very good analysis and all that, the moment you see that he is negative $2, what he do, he only runs to close the market. Why? Because he's just or maybe he lacks, is not patient. But the moment you close this one, you realize that the market is going to your favor now according to your analysis, and then the market closes at the right time. So what triggered you to do? You end good analysis right over here, which is 10%. You end maybe good risk, but the psychology kills everything. If you have good psychology, actually you are going to make it very nicely. But if you combine, let's say again, if you combine technical analysis, first of all, let's start here. Do go and check whether there is fundamental news, because they're going to affect the market very good. Combine with the technical analysis, and then know how to risk management your money, know how to manage your money, and then be good in psychology. Then trust me not, trading will just be very easy for you. Okay, you have maybe, and how can you check whether there's something that is going on in the market? For example, let me just go over here. I'll show you. Like now it is 1:15 p.m. when I just go to the Forex calendar, let me just go to the that is Forex Factory. That is the platform you can just, I'm not talking, this is just a brief of the technical analysis or fundamental analysis. So if you just check on the fundamental calendar right over here, you can see 3 p.m. we have ECB presidential largely speaking. For that we have an employment claim. So there are not a lot of things that I'm going to be mentioned over here, but these things actually they are going to affect market in one way or the other. But you can see from now to 2 hours only the fundamental analysis will just be affecting the market, which means you can do your good technical analysis in the market is just going to go to your favor. But when these news are happening, you can maybe wait for the news and all that. Maybe when there is there are those news that have high impact, maybe you can just avoid that, or maybe you can know how to manage, or maybe enter at a very good place and all that. Now talking about that one, let's just proceed. That is what we call fundamental, unless we come to that later. But we are not interested in today in fundamental. We are not interested in risk management and not in psychology. What we are interested in today is about technical analysis, because what you do about the technical analysis, everything will just be fine. Okay, now when you come to technical analysis, actually we have advantages. We have advantages. I'll be coming to the chart, we do practicals. I'll be coming to the advantages of technical analysis. And this one, the technical analysis I said earlier, it can just help you to actually trace I'm going to entry, because this is where I'm going to enter into this place, because this market has just been moving up, this market has been moving all this way, and now I know I have then going to enter here. After doing your analysis, then you just know I'm going to enter a place like this here. Okay, I'm going to enter a place like here. Okay, and then you put your order. Okay, you can now enter into the market. So number two, what a technical analysis can help you is easy to analyze. When you are, it is very easy to analyze. That's why so many traders actually they know how to analyze the market. It's good. The more people use technical analysis, the more the market is obeys TA. The more people use technical analysis, the more the market obeys the technical analysis, right? And the other thing is this can be applied everywhere. Actually, the technical analysis, whether you are trading stocks, whether you are trading commodities, you can apply this everywhere. Actually, everything that has advantage has disadvantage. The reason this is, if you can actually depend only on TA, then you are going to occur a lot of losses. You cannot depend on this, and you have to combine everything that I've been talking in this video. So if you just do even wrong analysis, then losses. But make sure actually you do your analysis maybe on the demo account and learn it, and it will just be very amazing. What I advise on technical analysis before we dive into indicators and all that, make sure that when you are just using the indicators, let me write this one in capital letters. Note, when you develop your technical analysis, make sure you use it more times. Make sure you fall in love with it. The more you fall in love with it, you become expert with it. Don't use so many indicators and what. Use it more oftenly. Become an expert in it, so that maybe when you use that, you are good in that. And the moment you just become good in that, there's no moment. The reason when you just become good in that, you just be knowing when the market shows the wrong indicator. when it just show you the wrong entry, you know, this guy is just a gold digger, it's just trying. You realize I'm gold digger somewhere, and you know this signal is just trying to trick me, and now I'm not going to enter because it's just tricking you. That's why it's very important for you to know the right end. Therefore, in love with one of the technical analysis, you analyze well, that is, you go do it again and again and again. Okay, now there's what we call indicators. Now let's go about the indicators. For you now to trade forex, you need things. This is what we'll just be talking about over here. Forex trading, in technical analysis, we'll be talking about volumes. This is what we call technical analysis. We'll be talking about that is technical instrument. And we'll be talking about indicators. So this is what we'll be talking in this video, and it will just be very amazing. The moment you just know 3 of these things, then you just be done with the technical analysis. Now let's start with the volume. Now when we just talk about the volume right over here, let me just name this one so that they can just be very easy. So we name this 1, 2, and then we name this as number 3. Now when we talk about number 1 and we talk about the volume, this is very easy. So we'll be finishing with indicators because this is where we have a lot of things to talk about. Now when we talk about the volume, actually this is where we talk about the number of it's just like how can we say it, that the amount of money that is maybe traded in the market. The higher the amount of money that is traded in the market, the higher. This is actually what we call the liquidity. The liquidity means this is where the money is maybe producing the places to buy and places even to sell. You know, when the people are selling, too many people are selling and other ones are buying, you know, you always produce the place where you can just give you an opportunity to buy and sell. Actually, the last to check, 6.6 trillion was traded in the forex market every day. 6 point. Actually, this is more than budget of Kenya in 1 year. So there's a lot of money that is traded in the forex market. So this is a place where you can just invest your money and become good. To know so when you're just doing your technical analysis, you can go to check whether how much of volume is being traded maybe in that day, so that you can just know whether this day you just be having an opportunity to enter the market or not. For example, let's say you come over here. This is the chart. I'll be explaining this in technical instrument. When you come to the indicators over here, it is one of the indicators. Actually, you can come over here and then use just type volume. When you type even volume over here, volume, net volume, you see, like net volume over here, it will just be showing you the amount that is being traded at that moment. And the higher the volume, you can see where it is changing here. Okay, net volume and all that. So when the volume actually is high, you always see the market actually going up and down. So the moment for example, you can see this one, the volatility was very here, and you can see the graph is up here. The graph is up here because you can see there was high volatility here. What about when the market actually is on sideways and there's nothing that is just happening? Like here, you can see here, this is sideways, and you can see there was very less volatility, there was less net of volume. That's what trending over here. You can see down one over here and here. So the higher the volume that is trending, just like here and here, so you can see the higher the volume, and when the market just went down over here, so you can see that the volume actually is almost directly proportional to the volatility and the market. So you can see it is directly proportional to the that is volatility of the market. And the higher the volume, the more maybe we expect maybe that is maybe more of it inakuanga bull. Yeah, so when the market is high and all that volatility, you can just detect it when we have long line, maybe with long candlesticks right over here in the shortest timer. That is when you can just know that the volume is actually trending is big most of the time. And also the buyers also can be sometimes. So volume, you can master that on the volume side, and you just be in a very good place to know your entries and to spot your places of entries and all that. Okay. The next thing that you have to know, number 2, is the technical instrument. It is, I don't know why I couldn't start anything without talking about the technical instrument. Technical instrument, in this side we are talking about the use of these materials, just like the trending view. If you have FXPesa, we have FXPesa trader. Kama uko na MT4 unatumianga MT4 pale like to do this analysis. You see, like all this instrument that on this side, maybe I can just zoom so that you can see, like all this instrument you see on the left side over here, like these these are for technical instrument. I call them technical instrument. Why do I call them technical instrument? Is because they are instrument that can just help you to draw. When you long press this, you can see it help you to draw like trend line arrows to know where the direction. You can see here I've not used any indicator, but I've just used technical instrument to draw, and I can just know even the market maybe is just going to move where and where out of that. And that is the work of technical instrument. Will just help you to draw 1, 2, 3 in the market to know maybe where the market may end next, all that. And that sounds very, very, very amazing, and is just very interesting to know that. So I made a video on how to use the trending view, everything that you see over here. I will leave the comment in the section so that we can just know how to use all this instrument to draw a perfect line there, so that you can just identify good places of trending. Now when we talk about technical analysis, actually that is what you analyze using those technical instruments. You just have to learn about that. And number 3, which is very interesting actually when it comes to technical analysis, which is indicators. Actually, these are the most people use. Actually, so many people use indicators, and actually you can just be asking yourself, indicators. There are some theories, people asking me, where can I get an indicator that actually is 98% profitable, indicator that is 30% profitable, indicator that is 100% profitable? You never get these kinds of indicator maybe you are looking for. Okay, there's no indicator that is actually 100% accurate. There's no indicator maybe that is okay. There are some indicators that are very simple to learn, and maybe they'll just help you get a chance of entry and all that, but there's no indicator that is just going to give you a highest signal maybe of entry to know where you're just going to enter market maybe and get more profit of that. Those are just the theories, hizo ni vitu maybe asieleweki and all that. So make sure that's the theories that you just know about the indicator. So there's no indicator that is perfect and all that. Now I'm going to talk about something which is very important here about the technique, about the indicators. Make sure now that listen to this about the indicators. Okay. When we talk about the indicators, I'm going to be talking about, so let me even write this, indicators here. So we are going to be talking about the indicators. This is where everything lies. So I will not teach you how to use trending view, MT4 to do technical analysis. That is draw. Technical instrument you can just learn. I've called them technical instrument to draw and all that. We won't just be using 1, 2, 3 of them. Maybe they'll just give you an overview. But if you just want, you can see there are many of them. You can learn them. I will leave the link in the video so that you can just, if you know how to use MT4, if you know how to use the trending view, then you just be knowing how to use those technical instrument. But on the indicators, actually this is different, because let me show you something over here. When we talk about the indicators, we are talking different and very big topic over here. This is the reason. When I talk about the technical indicators, I'm talking the indicators can be clarified into 4 things here. When we talk about technical indicators, yes, tuko kwa indicators. Number 3, indicators. Here we have indicators that are trends, okay. We have oscillators. These are indicators that are named under oscillators, and we have the support and resistance that are on support and resistance, and we have oscillators, and we have indicators for price action. So this is what we be talking about right over here. And let's start with, because first of all, let me just identify this. I cannot talk brief on all that, but what I'm going to be talking about over here, I'm going to go to the details of each of them over here so that you can just know right over here. Now there's something that I actually write. The reason I started with a trend, I'll explain, and I finished with price action. I will just tell you that. Now for you actually to enter a perfect trend, so that you can just trend perfectly and become profitable, and make sure that if you have been losing on the forex market, try to apply this. Just try what I'm going to say here, and maybe you just give me a report. So before you enter a trend, check the trend of the market. When I'm talking about the trend, is this one. Let's talk about this. Is where we say you first start. Let's see, what do you check? Tumesema you want to enter a perfect trend, start with the trend. What do you have to be looking at? So that you can have that perfect trend on the trend? Let's look at the trend. When you come on the trend right over here, we are talking about there are some indicators that are under the trend. Actually, you can even use the instrument to identify the trend. You can technical instrument like lines. Let me show you. I'll be doing the practical so that you can see. Like this one, let's see, for example, when you see this market right over here, so I'm going to cancel once of this. So actually, when you can, this is 4-hour time frame. I'll be explaining that also later, and with the time frame and all that. So when you come and draw, when you long press this one and take a trend line and draw a line touching one hand and another hand, at least 2 ends, and you can see it touching 3 ends. The more perfect your line is, the stronger the trend. Okay, try to connect this one. If they connect that one, just know that trend is very strong. And the moment you just do that, take another line, and maybe you can just draw to see whether you are going to get another perfect line here. If you just don't get it, don't force it, don't force issues. And you can see we are trying at least to have something here which is not bad, something like that. So on the upper side we have this line. This is the trend line. So you can see the market has been touching this line, and this line, the market is just going up. The reason even you can see this line are moving just like horizontally, not horizontal but upward, just like this, ascending. So this is what we call an uptrend. The word sentence of uptrend. Uptrend means the market is just moving up, but it's not moving. You know, the market cannot just move up like this vertically. The market has actually to go up this way, and retracing, and that is what you just have to know on that. So when we come over here to the trend over here, you can see already we have used the technical instrument to determine whether the market is on downtrend or under. When you come over here, you see that when you try maybe to connect 2 points over here, and you draw something just like this, you realize that this market is on downtrend over here. Even this is something that you actually realized first and very easy when you just enter into the market first of all. And actually you can even use this to know the market, because actually the market obeys the trend lines, the trend so much. Okay, so when you just draw something like this, you can see the market goes up, drop, touches this line, tries to go up, touches this line again, and goes up to touch this line again. So we have this is high, this is high, and this is high. So all this upside line here is acting as the resistance. So the resistance means, for the beginners, that is when something is trying to go up and it gets resistant, that is means that thing is up. There's something that is preventing you to go up, so that is acting as the resistance. If you are falling, like the market is trying to fall down over here, so this line is acting as the support, because it is supporting the market. And you can see the moment it touches here, it touches here again, the more the market actually becomes strong, because that time it touches over here is trying now to come right over here again and touch this area. So that sounds very interesting on that. So that's how you use technical instrument to identify the trend. The other way you can just use the technical instrument actually to identify the trend is using the indicator that you just get from there. There's how you use. So we have talked about the technical instrument. You can use, that is the moving average, that is EMA, or you can just call it MA, that is the moving average, exponential moving average. I will not be talking with more of them, but let me just talk about them most that are known, so that you can just know that. So when you just go to the chart right over here, and I'll just be deleting that 1 minute of this to avoid a lot of mess work here. Yes. So already the market, we have known the market is on trend, and okay, let's see. So when I just go to the indicators over here, I can just search what is called MA. You can just even write it over here. The more you learn this thing, the more you just understand them. Okay, so when I just go, I just be writing MA. You can go with this. There are different moving averages, and I can just click this. This is moving average over here. So you can see now I've loaded EMA on my chart. This is the EMA, this line, and but where I can just increase that is what you see. Let me just so that well input, I put it, I just want to have 50. You can have different length over that, so I'll be putting 100 EMA sorry, 100 EMA. And as you can see right over here, this is EMA on the confirmation side. So you can see moving up, it will always tell you when this line is moving down, we are in the downtrend, and when it's moving up, you can just identify the trend just like this. And actually when this line is also showing you the place, like this place, as you can see very well, it is just showing you that in this place you can see we end this trend line and we have this moving average acting as. So the moment you see the moving average is down, it is acting as the support. When it is up, it is acting as the resistance, just like here. So here is the resistance, but here is acting as the support. Okay, so that is what we call the moving average. One of the trend that you can just use. Of course, you can just use a lot of trends here, even if you search, because there are, I don't know whether it's thousands of trends that you can just find over here. Kuna let's define them over here. When we talk about the moving average, we have dynamics, you know, we have dynamics, we have support, and resistance, of course, is just appearing here again. So number one, we're saying that when you just want to identify, to enter the market, identify the trend. The reason you just identify the trend is so that you can just know whether you are going to trend towards the trend, or you are going to trend against, or we can just call this retracement, on the retracement side, or you are going to trend against the trend. Of course, you cannot trend against. If you trend against the trend, I don't want to call this one. If you trend against the trend, then these are going to be bad for you. But actually, when you trend on the retracement, things are going to be not that bad, but actually this is very risky. The reason is the retracement actually is just done short, just a pen shot, because retracements actually most of time in a younger half of the, it's just almost the half of the movement of the bull market. What we just understand that retracement actually is where the market move like it. Let me just give you an example. Because I say the market does not move straight, so you can see this retracement, uptrend, retracement, uptrend, retracement, uptrend, retracement. So this is uptrend, but you can decide to sell. Maybe you have the market comes over here and you sell here the market, so this you can just decide to retracement to enter into the retracement side. Of course, even the market can just, let me not talk only on the bull market, let me even talk about the bear market. So we just talk about the market is just going down over here, retraces back, goes down, retraces back, goes down, retraces back. So you can actually decide to buy over here and sell over here. You can actually, but you can see this distance is long, but this is almost the short. And that is, let me just go to the graph so that I can just show you that. So on uptrend that we have identified over here, you can see over here we have this movement up to this side, and the moment it touched this line, you can just decide to sell. But when you sell, you can take your profit over here, because you can see the market retraced back. When you see something like let me show you again. So when you see something like this again, the market went up here and went down, touch this line. So this is what we call retracement, going up and retracing back to that point. So that is what you just have to know. Are you going to trend towards the trend, or are you going to trend again that is on the retracement, which goes a half? And of course the trend is long, but retracement actually goes a half, as I've said. So that sounds very interesting there. Now here on the trend right over here, actually there are different type of the trend over here, and let me just talk about them in brief form as we finish this side. Now on the trend over here, we can just talk about the trend. Here we just have different parts. As we finish this, we have like a major trend, we have intermediate trend. I hope you are writing this. And also we have minor. So when we talk about the major trend and minor and intermediate trend, here we are talking about the trend that actually can just last few months to years. Okay, when we talk about the intermediate trend, this is where it can just last between weeks and months. Okay, and when we talk about the minor one, that is one tack between even hours, or maybe we can just call it days to weeks. Okay, now one. So when you identifying your trend, just know the trend that you're just trending in. So actually the major trend is where is very strong. If you just identify a strong trend, just stick to that, because it's just very interesting. And anytime maybe you are trending on the major trend, make sure that you want to identify a major trend, use a time frame, maybe one day trend, time frame and all that, and we just see that type of the trend. On the trend over here, when you just talk about the trend, actually we are talking about the bull or the bear market. But actually, do you know that apart from bear and bull market, we have the place of distribution and we have the place of accumulation? So you just have to know this. Okay, anytime maybe you are doing this, let me just do so that I can just show you over here. So what we're talking about, distribution and accumulation, assume the market are just moving like this and it is started moving this way. So before actually it just goes down, you see something like this and then just goes down. So when you just come and draw this line here, when you draw something like this here, you see there's accumulation over here, the place on this is accumulation over here. Of course, this what we call accumulation, because it has accumulated here, it does not want to go up. So this is accumulation, and actually when you're trading, you can just identify maybe the breakout of that. Okay, and also we have the place of distribution. This happens after the long after bull. So this happens, we get distribution after, but assume this was a downtrend, so it means we get the distribution after downtrend, that is after bear market. So you can always identify whether you can see the place of accumulation, distribution. What happens over here is the market is trying to go sideways, but up down, up down, up down, up down, but it's the place of accumulation or distribution being the same. So that is what we talk about the trend and all that. The other thing I just want here, which is number 2, is we have been talking about the trend. And note, there's something that we are moving in together. When you just want to trade for the first time, make sure that you identify the trend. Number 2, let's talk about these indicators like oscillators. On the oscillators over here, we can just talk like RSI. We can talk like MACD. There's all these oscillators. We can talk about C high. So these are types of the oscillators that we're just looking over here. Let's talk about this RSI high, one of the indicators right over here. And actually, when you talk about this RSI, that is relative strength index. You put it here. So what this shows you is actually just shows you the whether the market is just overbought. There are so much of them that you can just use whether the market is overbought. You can see actually it just appears down over here, okay, and it just shows you whether market is overbought and maybe just give you the place of entry and all that. As you can see right over here, after the market went to this place, you can see a place over here. Don't when they can zoom, you can see like on this place it was up here, so it went over here. I actually cannot enter the market here, but the moment actually it touches this down again, you can enter a sell, because actually it tells you that already the price is already overbought. Now it's just going to retrace back. Here it was overbought, here it was oversold, and now even if you just check on the graph, that is on the candlesticks, you see equivalent to that. So you can see like here the market was here, and that is this place, and now it is just retracing back. Over here it was oversold right over here up to this place, and now starting that is going up and up again. So that is what we just normally see when it comes to RSI high. That is one of the indicators that you can just use there over there to make your trading decision, and that is it. So when you talk about the resistance and the support, here we are talking about the market is resistance and support I just talk about. And this resistance and the support, remember, they can be vertical, they can be this way, this line acting as a support, resistance, this line acting as the support. You can even use the that is moving average to know the resistance and the support over there, as I said earlier, and that is it. We have to know about the resistance. On the indicators, you can use one of the resistance and the support that you can just use, of course, is the indicator that's known as SP, that is 5 point SPRR. So this will just show you the pivot point, will just show you the resistance, and I love this, so I just have to click it as the favorite. So I just load it, and what this shows you, this just shows you the place where the market is at and the support and the resistance of that. For example, you can see like this line, it tells you that this place was the previous support, so the market may be trying to come down to this point. If it reaches this point and goes below this support line, you can see this dot written here. It means that when it crosses this line, you have now to sell, okay? And when the market, you can see this blue line, when it crosses this line, this was the previous high. So if the market actually pick up, the market reached at this point, but you can see the moment it crossed that line, then green line tells you to buy. So the moment it crossed this point, those who bought, actually you can see the market proceeding to go high, and those proceeding to buy after this, actually they enjoyed some amount of that is bought here above here, and it's just gone on that. So that is the indicator that you can just use to identify support and resistance. What do we learn over there? Let's continue. I said use trend. I'll just repeat this again until you just understand. Identify the trend of the market, and this point number 2, use at least 2 to 3 indicators. Use 2 to 3 indicators. Why are we using these 2 to 3 indicators? Let me show you. So this is our point. This is the point we'll be driving up to the end so that you can just know what to end. I'll just give you the brief of it at the end of the video so that you can just know what you have to be doing to identify and go to price. This place has told us this was the resistance and support. I have confirmation that this is now going to resistance and a support line. So we're using the that is moving average. I have used the trend line, and I have also used the support and resistance point, that is the pivot point. So you can see I've used more than 3 indicators, and now the place is showing me as the support and resistance point. So I already know that very well. So maybe I can just wait the market to move up to this place, or maybe when it just tries it can just even go again to this support line, the previous high, which is this one. We draw this line over here, and when it crosses then and goes up, I will just buy again, or maybe the market is just try to go up again, especially when it is crosses this blue line here again. But this blue line was for this pointer. So that is how you just use 2 more than indicators to confirm the market. The reason we are using more than 2 indicators actually is so that we can get the place known as the place of confluence. What is the place of confluence? A place of confluence is actually the place where you can prove more than 2 times. You get that proof. Assume mtu anakuja, someone just come to you and tell you, I have confirmed that someone maybe has gotten 1 million from somewhere. Hey, you say it's very impossible for this guy to get that amount of money. Then another guy comes and tell you, yes, it is true, this guy got 1 million from this somewhere. Then you start believing on that. Then another someone, the third person comes and tell you, yes, the person came and then he just the guy got 1 million maybe from somewhere. And what do? You now start believing, because now you have the place of confluence. You are now influenced, you are now convinced. Just, you can say it's convinced. It can just come even from the word convinced. That means you got in the place of confluence. Imagine now getting the indicators, or then maybe this moving average, or this is that one in Guinea, something like that, and this one come over here, and then you just get this point. All indicators are indicating this point. What do? You get the place of confluence over here, or you get convinced about the point, and this is where you just buy. That's why if you identify the trend, use more than 2 to 3 indicators so that you can get the place of the confluence. Okay, and then you just pay good to know, because if you use 1 indicator, actually it can just mislead you. Let you know what other indicators are saying. Don't use so much indicators that you cannot even approach or maybe read the candlesticks and all that. Okay, use those indicators. Remember where we are on the accelerators, we are on the support and resistance. Okay, the third one that we're just going to be talking about over here is what we call the price action. Price action actually is our last one, and this is what makes everything to be very interesting. So I'm going to open remember, let me just bring a brief of this so that you can just understand. We are talking about the indicators, and when we talk about the indicators, we talk about the trend, oscillators, support and resistance, and we're talking now about the price action. Before we reach to the indicators, remember what we are talking about. We are talking about 3 things that you can start on technical analysis. That is to learn the volume, you learn about technical instrument, and then you learn about the indicators. Volume, I send, is where you can learn amount of money that is traded. Technical instrument, you learn how different platform works so that you can draw loss line, technical instrument and all that. And now we are on the indicators. Remember that. Now talking about the indicators, price action, let's talk about the price action now. And before we now finish this is going to be our last part. Very interesting. So we are in price action. Okay, so we are in price action. So price action. So let's talk about the price action. So when we talk about the price action over here, we are talking about price action is actually this is a technique that just allows a trader to read the market and make subjective trending decision based on the recent and actual price movement rather than relying solely on technical indicators. Okay, so you don't even depend more on technical indicators, but you can combine everything, maybe price action and all indicators, to get a good place. So actually this is where you check the market. I will just go say everything about the market, but even before we go that, let me just define this. On the price action actually can just be defined between the details. We can see the details of the market, and also you can show you the market condition. Okay, condition. What is the condition? Is this the market sick? Is the market healthy? And all that. Let's talk about the details. So let's talk about the details. So on the details, you can see when we talk about details, we are talking about deep. What do you check in the deep? What deepness? Details. If someone just tells you that give me this story in details, you're telling you just give me this story in deep state. Deep state. Deep. That means give me everything. Let me just know. Yeah, so here we'll just be talking about the candlesticks. Okay, here we are talking maybe about the candlesticks. You have seen those candlesticks. So for the beginners, I will explain that in brief form. And over here we are talking about chart pattern. How the chart pattern is on the market condition. Over here we are talking about what is the trend, that is the condition of the market. And over here we are talking about mostly it's maybe whether the market is accumulating, whether the market is consolidating. Is the market condition consolidating? Consolidating means the market is moving sideways without some buyers and sellers are in the same path. There are no decision that is made. So talking about the details over here in deep state, I say in candlesticks. For those who don't know the candlesticks are the ones that are formed. Let me just show you in the graph. And what you see over here, you see something giving like candles that you buy on the store or on the shop when there is no. So you can see the candlesticks are here. So what you do about this candlestick right over here is that you can see like the ones over here. So every candlestick actually represent the time I've selected over here, that is 4 hours. For every candlestick to be formed, it has to be formed within 4 hours. So if I select maybe 1 hour, every candlestick will just be formed in 1 hour. And actually things are going to change since there are many candlesticks. Where there was 4 hour candlesticks, now we have 4 of them, so that they can just form in 1 hour. So that's how things happen right over here. On talking about the candlesticks, right over here we have these candlesticks. Like this is the candlesticks. This is what we call wick. Understand this. This is what we call body. Okay, this is the body. I've seen some people calling it shallow, don't know, but this is the wick again. Back. So that is the wick of the candle. So this is what we learn. In details, you'll be learning more about even the wicks that is be formed, and also the body, and also the upper wick. That is what we'll just be identifying to show you where the market is just going. On the chart pattern, this is a big topic, also the chart pattern and all that, how the pattern are just formed. Pattern, when you just hear the pattern, just know it's just more than one candlesticks that is just going to be shown over there, that can just show you the direction of the market. We have talked about the market condition, that is the trend. You know about the trend already. Accumulation and distribution, you know that already. And consolidating, you just be talking about when you just be talking, at least when we'll be talking about one of the candlesticks that we're just going to be talking about over here in this video. Now there are some things that you have to know. For you actually have to repeat this point. How do you become profitable even before you come to price action tools and all that? What will make you profitable when you are just trading? Remember what I said. first of all, use trend 2 indicators at least, and also make sure that you use the other one that I'm going to show you, the last one. Okay, and the principles to increase the profitability are here. Make sure that you enter into the place entry at the place of confluence. That will just increase your entry at confluence, okay, where you are convinced this is the point, because you have used more than 2 indicators. Make sure that you use different, the reason I stayed, I highly remember me saying that make sure that you stick at least to your strategy. Ile strategy umetumia, make sure umestick kwayo. If that one, become good in that, be smart in that, so that you cannot be tricked. Even when it just shows you the wrong signal, this is wrong, because you are an expert in that. Become expert in that, and now you become that one. So learn to differentiate between false and truth. So the moment you know the difference between truth, that is will be because you are an expert. Because you are an expert, you consider and this one. Now, talking about something else over here is the confirmation of entry. Apply strategies with the highest 5 time frame. I seen that all big traders have seen them be talking about trending in high time frame. That is high time frame. That is what you just have to know. High time frame with what big traders have heard them talking about, and also trend. And I also seen the magic in high time frame. Actually, trend liquid market. I say the liquid market is the market that offers big opportunity for you to trade and all that. Okay, so you can trend along with the trend. That is important, because actually retracement seems to be very risky or that. So if you trend alongside with the trend, it will just be benefiting to you more than ever. Now, the other thing you just have to know that it is simple, and strategy, and follow it with discipline. So discipline will just be very important. Remember, you became an expert. Remember to be following those rules, and now you become disciplined in all those things, and you will just be good in that. Okay, now the last thing that I'm going to talk about over here is the price action, and I'll be talking about the candlesticks, and then we just be ending that out of there. Okay, remember that you can just that is candlesticks patterns over here. Okay, so when we talk about the candlesticks over here, that is what we just be ending up, because this will be, don't want this to be that long. When you talk about the candlesticks, this is where you have to learn in details. Okay, we send in details, under details we send candlesticks. So candlesticks actually can show you in terms, can appear in terms of numbers, can appear in terms of numbers. We can learn candlesticks in terms of numbers, and also we can learn the candlesticks in terms of them showing us direction. Okay, now when you talk about the numbers over here, we are talking where you can identify maybe a single candlesticks, one candlesticks, or multiple of candlesticks to show you the direction and all that. Okay, so that is what, or triple and double. Most of them, they are double and triple and all that. When talking about direction here, we are talking about the candlesticks that shows us the continuation. Okay, and the other one that actually shows us the reversal. There are candlesticks that will show you the reversal. Maybe can be one, or can just be show you them that is even the reversal of the market. What are the functions of the candlesticks? Actually, candlesticks will just give you the sentiment. Sentiments means when the candlesticks, you just, maybe the candlesticks, the price is rising so much, that is where you see that the candlesticks sentiment is just showing kama kuna fear. If there's fear happening somewhere, kama kuna fear, you see a lot of market becoming very volatile, maybe imepanda sana, or maybe watu maybe the fear has been developed in Bitcoin. You see a lot of people selling Bitcoin, and you turn a Bitcoin price in and drop, and that we see on there is something happening. That is sentiment over there. It will just show you the strength. The strength, whether maybe the candlestick, the formation, the pattern, it just show you the strength. They will just show you the reversal. They will show you the retracement. They will show you angund entry. Angund what? Angund entry. Now we are here in the last part. We see, remember where we started first of all. Before you enter into the market, make sure that you check. This is what the process of every trader. Before you enter into the market, check what is happening in the news. do that technical analysis. The moment you just do that technical analysis, that is, now when talking about technical analysis here, we'll be talking about what do you have to check the trend, use at least 2 indicators or 2-3 indicators to get the place of confluence. Then after that, use what we call check the candlesticks, that is, use price action or price action to get what? To get the details of good entry. This place will just provide you now with the good entry. I'll be repeating this again when I'll just be ending this video. That is the process you have to go through before you place a trade, and you thank me later. Okay, so when you talk about the candlesticks, I was shared already that that is the what will just show you. So talking about the candlestick, they will just show you confirmation, false signals. You have to know that they will just the body and the size of the colors will just be different. So talking about the candlesticks, actually this will just be very important because this is actually a big topic. So we'll not be talking more about it, but I just want to brief it so that I can just give you the full process of what you just have to go through on the candlesticks. So talking about the candlestick, let me just talk about number one of the candlesticks that is known more so much, which is Doji coin, Doji. So when we talk about Doji, this is a single candlesticks over here. Of course, there are other candlesticks like white soldier, like brown crowns. There are a lot of them, a lot of candles that you can actually use over here. So when we talk about the doji, let's talk about the doji. Maybe you understand this more. So when you talk about doji, there are 3 types of doji. That is, there are 3 types of doji candlesticks, and there's what we call this one, and there is this, and there is this. So what are the names of these candlesticks? This is a normal doji, this is called dragonfly, and this is called gravestone. Why are they called this? So as you can see, this is normal because the wick, how do you identify this? I don't want to need I say so because I'll just be making things worse. So as you can see, it does not have a bond, it just look like a plus. The wick, that is the upper side, and this almost looking the same, and the body, there's no body over there. When we talk about the dragonfly, on the top over here, it has very long tail over here, this wick over here, and down on tail, and as you can see, this end over here on the gravestone is up. So let me just define them so that you can understand. Then dragon is flying, then grave, you know, this is grave, this is grave because it's downward, and actually it is down. This is the grave, and this is dragon is flying Jew, this one, but this is the grave because it is just down. What are they identify? What is the work? So this actually shows the indecision of the buyers and sellers. So nobody knows where the market is going. So normally what normal doji shows is that the closing price and opening price actually is the same. Closing and opening is equal to opening. Okay, so closing and opening actually is almost the same. You can see the price trying to move that is up here, and when it trying to move up, but it just closed right at the center there. So when we talk about the dragonfly, actually this price is just formed right after the downtrend. So when the market has just been moving this way and downward here, you may notice we have this dragonfly. So this dragonfly over here, they appears after the downtrend. So after this downtrend, more you see maybe you have done your confirmation of that, and when you see after downtrend, you see the dragonfly, just know the market is just going to retrace back and go up. So what we can say about dragonfly, it appears right after it appears after bear, and then it is a sign of it is a sign of bull. Okay, I'll just be showing you that maybe on the chart. On the gravestone over here, maybe there's been a bull market. It is opposite of that. There's been a bull of market, and then at the end we see what we call the gravestone. That means grave, someone is going to be buried. What is going to be buried? The currency pair is going to die, and you see, boom, the market dies. So this is why you see the grave. When you see the gravestone, just know someone is going to die, which is currency, which is the base currency is going to die over here, and that is where it identifies signs of bear market. So that is the candlesticks you just have to confirm, and that's why we saying the whole process confirm with the price action is the last thing that you just do, so that you can just know what maybe as the time increases, maybe as you learn more, you just know what to do after identifying that is the price action, because the price action is what will just give you a good entry. And before having you just enter, make sure that you reduce even the time frame. That will just give you exact point, because actually when you see this market over here, you cannot even know where the market is at this point currently, because you can see long, because this is 1 hour. If you reduce this time frame maybe to 15 to 5 minutes, and you see this one already, the market is on a bear, and you can just wait market, maybe you can see it is moving sideways, so you can maybe wait up to go up to this level, and then you can just enter your trend. So that is the tips that you just use. Get that that is doji, maybe the price action to show you the entry, and after getting the entry, but don't use short or small time frame to get a doji. Make sure that you use at least 4 hours to 2 hours, or you can just when you unaendelea you just understand this more to get a very good entry point. Yeah, so let's see whether we can see all those things here, Mandoji, Dragonfly, and also the normal doji over here. Yeah, let's see whether we can have one. Yeah, which can just show you see here. So you can see we have one which is not perfect right here, but as you can see, this one over here, this is the dragonfly. Is the dragonfly, and actually it was formed. The market has been, look at this, the market actually went up this way, up to this place, and despite that the market has just been on buller. So we have the market just like this. You know, sometimes you cannot get it to be very perfect, but sometimes look here, before the market just went down, we formed this. Look at this. This is gravestone. The moment it appeared over here, the market started going down, and you can see actually the moment it was formed here. The moment actually it was formed, the market started going down. The moment it was formed here, the market went very deep down. Huh? So that is the work of dragonfly. Normal doji, we are just shows the market just moving sideways, and because we get it here, indecisiveness and all that. So most of the time you see where the market is just moving sideways. You can see like here they are being formed like almost similar and all that, but you can see this, they are long tails and hand, maybe they are very small, you can just not call them that, but you can see how they look like they are just formed over here. So it's not like there is percentage that you just get them, but most of the time if you see it, just know it's an advantage. It will just tell you that now is the time to enter. Like the one you can see over here, where you can see this is very long. Actually you can see this one is very long, and the market started going up on uptrend. So you can just continue to learn more about the candlesticks and all that. So that was our class today. I hope you have learned something out of that. Covered everything about technical analysis. What I will not teach you actually is I've just touched everything, so make sure that you learn about the volume and all that. Talking about the summary, let me just talk about the summary where we started actually, so that you can just understand this in a brief form. So we started up here. I'm briefing this again. We started by talking about the technical and fundamental analysis, where I said that actually before you enter into doing technical analysis, make sure that you check the fundamental analysis. What is going to happen? Well, the news that is just being given, is it the news that is going to affect the market badly, so that you can just maybe get caution of that? And then after saying that one, I said and I explained all that. I taught you what is the technical analysis do to give history, get changes, and also show the price action and the volatility and all that. I also said that market, when for you to become profitable, just be depend on technical analysis 10%, risk management 20%, and psychology 10%. This is what I just said. I said combine fundamental analysis, technical analysis, risk management, and psychology also. It will just be very important. What are the advantages of technical analysis? I saying that it will just give you good entry, easy analyze. You can apply it to the market, stock, commodities, and all that. Disadvantage is that you cannot use only technical analysis, and also maybe if you just do it wrong, things are going to become bad for you. Just take the note that more time level, if you just become an expert in technical analysis, it will just be good for you. Wrong indicators, you just be able to know that. So I said on technical side, we'll be learning more about the volume. Volume is amount of money that is trending in the market, and just very helpful. Good. And technical instrument, you know how to use the lights, those drawings, things on trending view, MT4, FXPesa trader, and all that. I said about the indicators. This is where we talk about a lot of things. On technical indicators, we talked about that. We said that indicators right over here and different clarifying over here, and that is we have the trend, oscillator, support and resistance, and the price action. On the trend, we talked about that is instrument you can use to draw the trend. You can use moving average, dynamic, support and resistance. On the trend, we're saying that you can either trend when the market is going towards the market, or on the retracement. We say retracement most of time is a half or maybe less than that, and we say that on the trend can be major, intermediate, minor, and few months, years in the major and all that. Remember that. To do that, market can be bear. You remember the accumulation point that I drew over here. Kuna accumulation na kuna distribution point. On the oscillators, I think kuna RSI, where you can just determine where to enter into the market and all that. I think that on the other one we talk about is the support and resistance. I think you can use like SPR, support and resistance, even the line. Price action, we went to combat that dip, which was our last one, and I said on the price action right over here, this is what talk in details, market conditions. And I said candlesticks, I talked about the candlesticks market condition. You know that is maybe the way the market is going this way. And actually on the market condition, this is where you see consolidation, and that way we see that when you see doji, normal doji, that is where you know market is consolidating. And entry, there we just saying the entry point to note and at the place of confluence. Know the difference. When you become an expert, you know difference between fake and good one. Enter when the margin is high. On the candlesticks, we say that the candlesticks appear in terms of numbers, direction, and also for reversals. I think before you enter trade, remember to do fundamental analysis, technical analysis, identify the trend, and also use the candlesticks, that is price action, on the last before you enter. We talk example of the candlesticks, which is doji. I identify a normal doji, dragonfly, and gravestone. I say normal doji show the indecisiveness of the buyers and seller, because the market shows that condition is that the market is in consolidation. And I say that dragonfly signifies the market is just going to reverse on a bull, the bull, signs of a bull, and gravestone is a sign of bear. Okay, thank you for staying on board. Okay, so let's proceed. Now, as we were talking about, I just want to draw something here. I want to draw something here, and that is price action. For those who don't know, let's start from the start. Acha tuanze from mwanzo. Okay, why price action? Price action is what in the forex trading. I'll just in a very simple language. So when we are analyzing the forex, before you enter the trend, before you just decide maybe I'm going to enter into the market, before I decide whether I'm going to sell or buy, there's something I'm going to do right over here, where we started by saying you can do something we call technical analysis. Technical analysis is where you analyze the market. Use of it unaonanga watu wakichora chora huko, and that all those things that looking at the market on the previous history. Okay, last time we were discussing on three things that was a very important thing, the key aspect, the three things that you have to be checking on the forex market. That was the price action. We end price action, we end what we call psychology. After psychology we end after psychology, then for those who remember, we end risk management. So those were the three things actually we were just discussing right over there. Then this is technical analysis. This is what you have to be checking on before you enter a trend. You can even check on fundamental analysis. This is where you just analyze the market. But you know, there is what we call technical analysis. So this is analyzing the market before you enter into the trend. You can know all the basics about the forex trading. Unaweza jua hizo zote about the forex trading and all that, how they just work. But you know, you have to know how technical analysis work, how to analyze the market. And that's when we talk about technical analysis, actually is a very wide area, because even price action is one of the way to analyze market in a technical way. Okay, so it's part of technical analysis. Fundamental is just involved new, so we'll touch this maybe one day, but here we are now on the technical analysis. For the people who have been asking where we can start on the technical analysis side, then this is it, because technical analysis right over here is the price action that you're going to talk about over here. Price action is actually part of the part of technical analysis. Now when I'm talking about the price action, actually this is a very interesting thing. This is the thing that works, upende usipende, price action actually works in the market perfectly than any other thing in the market. So if you know about the price action very well, then it's going to be helping you so much in the forex trading. Let's start over here. I'm just going to draw a block here. This is price action. When we talk about the price action over here, the price action actually can just show you two things. Okay, the price action can help you to know about the details of the market, details of analysis. Let me just write details here, and then I just want to confirm here. The other thing it can just show you over here is the market condition of market. Okay, tuko mpaka hapo condition of market. Look how price action is actually important into the market. Price action is very important because it can just show you the details of the market and condition actually of the market. So when we talk about the details of the market, what are we talking about right over here? The details of the market here, it can actually be classified into two, and that is the market over here. You can just be used to something like okay, we have something like candlesticks pattern over here is one of it. Candlesticks pattern over here can just be helping you over here. And actually we have chart pattern. I'll explain all this so that you can just connect. Make sure that you just follow this up to the end. We have chart pattern. There are some people who actually have bad network. Keep in coming out and in. Don't disturb these people, please. So okay, so those are the two things that we just get details in. So these are the things that we're just going to be talking. So it means that we are going to talk about this block today. So when we talk about the condition of the market here, we are going to talk about two things as well, because they are going actually even to be very important as well, because here we are talking about the consolidation of the market. We're talking about this consolidation. We have the market of origin market, all those things are very down one over here. Okay, and we come up to here, wale wamesikia something about the bank, how they trend. Okay, CMC, okay, smart money concept. Those are the things maybe they are just here, consolidation ranges and blocks over here. So we just be checking on that. The other thing actually is the trend here. So look at that big, this is the trend. Okay, so all these things are actually under the price action. So for those you trade, you know, you can ask someone, what do you use to trade in the forex market? I can tell you actually you use price action. Maybe someone can tell you I use price action, and you maybe wonder what is he using, what is that he uses, what he calls price action. So when it comes to price action, actually is where you just check all these things. You can check on these things without involving what? Indicators. So in price action there is no indicators. Price action does not actually include the indicators. Price action are just different things. So price action does not involve indicators. Indicators are something different from that. But remember, you can be using price action and they still combine with indicators, maybe to get something we call the place of confluence, or maybe to get something better for you to have a good Najua the market is about probabilities, so that you can just get a high probability when it comes to placing your trend, whether you're going to buy or sell. So that is going to be very important in that scenario. So yeah. So that is very important in that case. So let's talk about something else here. So okay, so let's talk about something here, which is the look. We can now start at the market details, chart patterns, and all these things. So there's difference. So you can see we started with the details and market conditions. So we just been narrowing this down until we just understand them. If we can cover this and this, actually we will be very far. Utakuwa umefika mbali sana. And remember, if we can start talking about all these things in very detailed way, remember we are going to take 5 days or 10 days right here, but I'll try to switch them on how you are going to understand them in a very easy way. Nitasifanya vile utazielewa in a very easy way. So let's start with candlesticks pattern. You know, when we talk about the candlesticks pattern and the chart pattern, actually these things are different. Okay, these two things are different. So when we talk about the candlesticks, here we'll just be talking about the pattern of the candlesticks, how they form, the types of the candlesticks. Okay, I'm just explaining before we go into details. Okay, when we talk about the chart pattern, is actually how the chart form. You know, you can see something forming like W, you can see something forming like maybe X, you can all those, maybe you see how the chart form. Maybe kuna watu wanaita spider, unaweza ona. Just an example, you can see that ukiangalia chart unaona imechora kitu fulani, so that is the chart pattern. But when it comes to candlesticks pattern, is how the candlesticks actually you can read the candlesticks. For example, kuna ile candlesticks unaona imejichora inakaa hivi na imejichora pale fulani, then maybe you are going to know this is a reversal, or maybe this is market is ranging and all that. So that is the difference, candlesticks pattern and the chart pattern right here. This is very simple. So when we come out and that is the details. You know, when it comes to details, this is where actually you enter. You know, the price action is the one that you just be helping you to enter the market. So we can say this one is the final step you can even do. This can actually be the final step. Very important thing. They can be very final step to do, can be final step to do before entering the trade. You know, when you just, the reason we're talking about the details is because the time you observe the details, ile wakati unapata the details, that is the moment you now enter into the market. You know, you enter into the market because you umeona details about what you want. You know, kuna watu wanauliza, where can I enter into the market? Nitaingililia wapi? When there is the time that I know that is the time maybe I'm going to enter into the market. There's no specific time that you are going to enter into the market. Remember that. But by doing the price action, getting the details, then that is the time actually you're just going to get the details of the market. Then that is when you have to go to have the final step before you just enter into the market. Salome, you have raised the hand. Any question or complaint? You can open the microphone, please. You can be fast on that. Salome Wajiro, can you hear me, or you have accidentally clicked?
Yeah. Okay. Network yako ina shida ikipotea.
Okay. Ni yangu ama ni yako? Can someone else confirm, please? Mimi ni yangu. Okay, mwingine atua confirm kama network yangu inapotea ama ni okay. Can someone confirm kama network yangu iko sawa?
Mimi naona iko sawa.
Mwingine a confirm iko sawa, niendelee kama kuna mali nimekatika. Mimi Salome, your network ndio
tuko sawa, network yako iko poa.
Oh, sasa Salome, you Salome, you can work on your side. Your network is the one that has problem, huh? Salome, you are the one who is getting lost. See. So you can work on your side. So we are progressing. We are ni kuprogress ama ni kuendelea. I don't know the word. Hii msungu sana, okay? The important thing is we understand. So another thing, Igando, you have raised the hand, so you have all confirmed that my sound is okay, everything is okay. So yeah, so we can now proceed. Okay, we can now proceed. Yeah, okay, let's proceed. For those who have the problem of network, you can just work on your side. I think mine is okay. Yeah. Okay, let's just move on. So for those who have been asking, where can I enter? Nitaingililia wapi kwa market? Then this is it, because this is now the step you have to take. And that is the final step before entering a market. These two, the details will just be helping you now to enter in the market. You know, you can work on all those things, analysis, you check on the market, you check the fundamental news, you know what is going to happen. There's something that has been happening, like the way the banks of SVB over there, just Silicon Valley Bank collapsed, and you know maybe the dollar is going to do all these things, but you just need the details of the market, maybe where you are just going to enter. Then this is it. This is the is now. Okay, so we can talk about the condition of the market. You know, you can before now when we talk about the condition of the market, now we have these two. We have this now. When we talk about the condition of the market, this is where now you check before you do anything. Actually, I don't know, this cannot apply to everyone because not all people just agree with me, but this is my how I check things. But majority of the people I know, this is what they do, although we don't do the same thing. So unaweza enda uambie mtu hivi, maybe because we all approach the market differently, but I'm just teaching you maybe the more you advance on these things, you'll just be learning on your own. Okay, but I just want you to understand this. So Salome, you can turn off your camera. Tunaweza ona giza tu, so you can turn off your microphone, your camera as well, so that you cannot disturb those who maybe watching this. Salome Wajiro, you can turn off the camera. Just click the video icon that is downward over there, and then it switch off. Okay, this is consolidation, ranging of the market trend, all this will just be checking before analysis, before analyzing the market. This is what you can just do. The market condition, you just have to know about, okay, you just have to know about the market condition. What the market condition over here is that sometimes you can go to the market and you can see the market is ranging, you can see the market is going down, you can see the market is on uptrend, you can see the market is on downtrend. That is the condition of the market you have to be checking first. So we'll just be checking on that as we progress. So you check the condition and then you do your analysis, and then the final step is to check the details of the market by using the chart pattern and the candlesticks pattern, of which I have explained what is the difference between these two. So that is very simple on that. Okay, so let's start over here by identifying what is these things. Hizi vitu ni gani tunaita. Remember, kama umeandika hiyo kitu, remember it's very important because you are just going to be I'm going to be viewing it. Okay, enda preview tu sai. So we are going to start with candlesticks. So tunaenda kuanzia, let's call this I want to name this, so I'll be writing this. This is A, this is B, this is C, and this is D. The moment we are done with this, I'm going to be fast. So because we are like 30 minutes now, you can see how these things are actually very deep, and you can just be understanding. The more you know, the reason I always say just learn and learn and learn. The moment you consume a lot of knowledge, you become confident. Okay, ni kama uende uongee mbele ya watu na una maneno ya kusema, you will be tensed, you know. Even it is the same in the forex market. The moment actually you approach the market, you can be very right, but because you don't have enough information of the market, then you tense. You know, this is opportunity, but you cannot enter because you don't trust yourself. You don't trust because you have not consumed enough knowledge. So it is important to consume knowledge, consume knowledge, so that every time you stand even in front of people, you can be very confident. The moment you'll be speaking with the courage. The moment you approach the market the same way, you approach the market with courage. Although don't be overconfident, but it's good to have that confidence. Even if you lose, you know you have done your best. Okay, even if you lose, you know you have consumed the market. It's only that is something that has just imeslide to kidogo. You know, that is something that you have to know there. And this is very important. Now, talking on this, so we are going to talk about number A, which is the candlesticks pattern. Remember what we said about the candlesticks pattern here. So we said about the candlesticks. Remember what we said about the candlesticks pattern. We said this is how the pattern of the candlesticks actually form. The way candlesticks formed. Okay, so for those you don't know the candlesticks, I'm going to be bringing them here. For those you don't know the candlesticks are the one. Let me just bring you an example. Maybe some people be asking, oh, what is this candlesticks? Okay, let me bring something here. Okay, I want to bring a digital one. Okay, I just want to bring a digital one here. Okay, now this is what we call candlesticks here. So let me just put here. So we have candlesticks here. So this is what we call the candlesticks. Okay, I hope you can see that. So this is what we call the candlesticks. Okay, for those you don't know, so this is the one that we call candlesticks. So the moment you go to the forex trading, you can see maybe sometimes we can have this rand candlesticks, and we have this green according maybe to your settings that you have placed there. So for those who will join late. Okay, so this is what we call candlesticks right over here. We have two types. Okay, it just depends on the way actually you have just set your settings, okay? Because when we have, actually most of traders actually prefer having red and green ones. Red, green, red, green, red, green. So this one is this yeah, this is, we just call red, green, 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 or blue, okay? Red, green, blue, all that. So as you know, red actually indicate them bearish. Bearish means the market is actually on the bear market, is just going down, okay? Like maybe you can see on the chart, maybe sometimes you can see that on the chart, and that is when you just know the market is going down. So for the candlesticks over here, they present the time you set. Unajua kuna watu wana trend in 4-hour time frame. So the moment you place maybe a 4-hour time frame, unaenda kwa chart, you place a 4-hour time frame in the market, 4-hour time frame, 4-hour time frame. That means for every candlesticks will just be formed after 4 hours. Tuseme umeform na market inaenda chini, that candlesticks will form there, ingine ikaenda. So after this was formed after 4 hours, this after 4 hours, okay? And then kuna ingine sasa after 4 hours imeisha, then another one will just be formed over here. So in case the market forms these types of candlesticks, market going this one, it means this will be red, 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 because the market has just been going down. And it means in the last 4 hours, in the last 12 hours, the market actually been on bearish, okay? So this is a bear candle, this is a bear, this is a bearish candlestick, okay? So this how the candlesticks are moving. I just want to accommodate everyone by just saying that, okay? Those who understand, just hold on there, okay? So we have these candlesticks. You can see we have the high here, we have the open. So I don't want to explain this in details because it will take us a lot of time. Just understand the candlesticks. This is how they just formed. I was just explaining, this is the candlesticks now. So you have actually, when we come to candlesticks pattern, you have to understand how the candlesticks are formed, because if you go to the chart, okay, for example, let me just go to something here like Euro USD. You see how different candlesticks are formed. Kuna zingine refu, kuna zingine fupi, kuna zingine. That's how you have to understand them, because all those candlesticks pattern, they show different things. Let me just go to the chart and then we can come and discuss those candlesticks pattern, and then I'll just give you the assignment from there. You just be looking at it for yourself, okay? So let me just go to the chart over here. I actually prefer using Euro USD because that is the common one, that is the most trending currency, that's the most volatile one. And yeah, so I think let me just go here and show you something. I just want to give you an example. You know, it is good to kila mtu aelewe how these things move. Very important, very sweet, very interesting, you know. you know. Okay, 1997, that is very big. Gold has been going very, very high to 2000 again, okay. Okay, let me share this. Okay. I don't want to waste any single moment. I don't want to waste any time, because there's a lot of things I have to share in a very short time, you know. I just want to share. Mimi nataka tu niwape free. Naona Mungu amenisaidia, so see, don't want. Okay, this is what we call candlesticks. Let me just expand this. So this is the trending view. You can go to one, do your things there. It's free. Try to analyze the market there. So this is what we call the candlesticks. Unaona hizi candlesticks zinakuwa formed. Angalia hizi zingine kama hii ni refu sana. Kuna ingine inakuwa formed kama hii. Unaona? This is what we call wick. Unaona hizo? We have the body. You know, we have the body, we have the wick. Wick ni hizo hiyo ni refu, hiyo inakaa kama hiyo inaiona hiyo yenyewe sasa, that is what we call the week. So that is the week. We have the green ones, you can see the bull market, bull bear, aka kadogo kanakuwa formed hapa, and actually we even have gaps. Kuna kitu tunaitanga gaps, unaona, like azija nini hivi, the market is not like this, but unakuta kuna mahali ilikaa kama ili skip. But here, you know, is where things actually happens between the weekend and before the market ikuwa opened. Market inakuwa opened, vitu zikuwa zishabadilika, and then it will not start from there. Actually, market will open, kitu kisha move very up. So that is the gap. We'll talk about that later. So you can see there are some candlesticks that are very funny here. Okay, now that is what I just wanted to show you how candlesticks look different. There's no candlesticks that just look like the same and the other. Okay, so that is the thing. I'm actually going to close this. Okay, and now we get back to our drawing board. Are we there? Yes, we are here now. So that is the candlestick. So that is the candlesticks. Now there are different candlesticks over here because different candlesticks can show you different things. Someone has opened the microphone. Please, you can turn on the microphone. We have a lot of things to be talking about right here. So we are talking about the candlesticks pattern. So on the candlesticks pattern over here, there are different candlesticks over here that you can actually go with. Okay, so number one, I'm just going to give you a few of them, and probably you can just I'll give you an assignment of that. So number one, of things that we are just going to write over here before I just give you the assignment is what we call, so we can call this high and a candlesticks pattern. So we have something like hammer, you know, we have hammer. So just going to, this is the type of candlesticks. So when an hammer is formed, let me just show you an hammer, how an hammer just look like when you stand in the price action. You know, when you are standing the price action, this is how the hammer look like. Actually expand so that you can see. This is the hammer. Ona, ama ni nini? Ama ni nyundo, ama ni nini? Ama ndio hiyo sasa. This is the hammer. I just want to expand this so that you can see. This is the hammer. So you can see the hammer, how it is formed. It is formed after the downtrend. You know, we have been having this downtrend. The market has just been trending this one. But over something, we form a candlestick that is look like the hammer, which means it has this end, na ikona this wick. Ref, and then we have this one. So the moment you see that one, then you know maybe it is the time for the market to reverse back, and that is we have the potential direction actually of going up. But remember, you cannot rely on this alone. Remember, you can use other indicators. You know, you can be having other things that we are going to talk about. That's why you have to consume a lot of knowledge, because you are going to be combining a lot of things to get all this. But now the moment this is formed, ikikuwa formed, then inaandamana na hizi hata inakuwa formed, market ishafika hapa. You know, you have now to know I'm going to enter around here because already I have, this is now the details. You know, you analyze the whole chart and all those things, and then you go even to the candlestick pattern that is formed right here. So that is why you know the details of the market we are just going to enter. This is interesting. And we have now this candlesticks is just formed right here, and now you know that. So this is called an, it is all not all of them, but this is called an hammer. Unaona tu vile inakaa nyundo. Let me just go to at least two of them, and then we just be going to the next thing. Okay, so we have another candlesticks over here. So remember, we are in the candlesticks pattern. This is an interesting things over here. You know, okay, what if, okay, there can be even an inverse of this. The same thing, you know, we have this hammer, but remember also there can be an inverse hammer. An inverse hammer ni kumaanisha hiyo mwili yake itakuwa wapi? Hiyo mwili yake sasa itakuwa chini, alafu hiyo nini, hiyo wick itakuwa nini, and it just shows the same thing. So that is it. So this is actually number 2. You know, let's talk about number 3 here. So that is an inverse AMA. Okay, so we have different of them. For those who know something like doji, umesikia? Okay, we have something like doji. Doji, it appears in 3 things, so I have talked about that one. We have doji, sijui kama niko nayo digitally hapa nionyeshe, but yeah, we have doji, we have a doji, we have an engulfing, we have so many of them. Okay, let me show you. Okay, let me just draw it. It's only doji, but let me just draw this. Let me get a digital one so that you can just understand about it. That is a very important candlesticks actually that is being formed when you have to ikikuwa formed. Actually it's nice, a very nice candlesticks. Okay, ni candlestick poa sana. So doji, it appears in 3 things. It appears in 3 ways. What we call doji inaweza appear in 3 ways. We have enye tunaitanga, nimeongea hiyo, we have like gravestone, we have like dragonfly, we have enye naonyesha raging. So this is it. Let me bring them here. So you can see all this is doji, but it appears in 3 things. So we can talk about doji. So sometimes you can see the market formed like this. So unaweza ona at the end of those candlesticks, kama hapa candlestick kaa hii inakuwa formed pale chini on the lower side. Okay, inakuwa formed on the lower side like this one. So hii inaweza kuwa formed after market imeenda, then ana doji is just formed. Then that is the time you know we are going to have a reversal of the market. So unaona inaitwa gravestone. Okay, so that is it. So ingine inaweza kuwa formed kaa hivi. So that means the market is changing. Noise, the opening is the same as the closing. That means the market is the same. We have the dragonfly. Hii inaweza kuwa formed pale chini kama hapa, hii inakuanga formed juu. Okay, the market has going down, then this opposite of this. So hii inaweza kuwa formed pale chini kama hii. So you can either see this ama, okay, or see this one, then you just know the market is actually going to reverse. I don't want to talk more about the candlesticks. Now this is where I just give you an assignment. Maybe I cannot take all your assignment, but it's good actually to have your own assignment, you know, as a trader, as one. Kuna wengine hata wani hizi vitu zitakusaidia wewe peke yako. Now learn this. Let me just give you this so that you can learn on your own. Just write this and make sure that you research on this. Okay, just learn kitu mbona ina expand. So assignment number 1 tunamalizana na A. Okay, learn about different types of candlesticks, and what they present, candlesticks formation, and what they present or their meaning. Okay, what do they mean? So if you cover this, if you know all this, you have covered one part of the price action. We are done with that. Turudi pale juu sasa. I hope maybe you have written that. So let's just go back to where we started so that we can know when we're going to talk about next. So we are here on this chart. Okay, the next thing you're going to talk about the chart pattern. So when we talk about the chart pattern, we are still in details. Okay, we are still in details. So you can see how the time is actually running. Naenda time because I'll just give you the time maybe to ask the question. So yeah, time is very limited. So we have, I'm just going to cover this first. So we have number B, which is chart pattern. Chart pattern. So chart pattern is different from the candlesticks pattern, because when you talk about the candlesticks, we are talking about an individual. But when we talk about the chart pattern, is actually the formation of many candlesticks to form something. That's why it's called a chart. You know, that's why it's just called a chart. I'm just going to, okay, this thing, the same candlesticks over here, they will just show you us different things. The same as the one that we are talking about. They are just going to give us dalili. Unaona ile inaitwa dalili. Unaona pia zinaenda kutupea vitu zinaitwa dalili. Okay, zinaenda kutupea dalili. So the dalili of this is this formation. I'm just going to give you one of the formation. You know, we have something like the market going this way and all that. So let me give you an example of this. So I want to give you a real example. So on the market, I want to draw here, and then I'll just send the example so that you can see on that. Okay, let's start. Number one, we have the formation of the candlesticks. Nimeeleza what are they. Okay, we have the formation of the candlesticks, chart pattern, candlesticks taki kae kwangu sana. And this chart pattern, they are going to show us different things. Okay, there is the chart pattern that is going to show us the market is going to reverse. So many of them actually will just show you the market, how the market is just going to reverse. Okay, and the market, whether it's just going to go this way, whether it's going to range, whether the market is ranging, and all that, all those things, chart pattern are the one that are going to help us here. Okay, so we have something like end shoulder pattern. Kitu inaitwa number one here, high. So I'm writing this in Roman. So we have end and the shoulder ni centers, end shoulder ni centers. So don't write and those, it's just end shoulder pattern. As andika end and shoulder, and that mtu akuulize kwani mlikuwa mnafunzwa vitu za nasari. Please don't join late. Sitaki kuweka watu hapa tena. So we have end and shoulder pattern. So this is very simple. When we talk about end shoulder pattern here, we are talking about something like this. So we are talking about this. Okay, so we are talking about where the market may be going this way. It hit this point, it just reverses here. Okay, it goes up kabisa juu, reverses back like this, and then comes over here. Okay, and then tries this. So what this market has done is actually created, assume now this is, I just want to explain that, I'll just give you the pattern. Okay, so the market, what has done here is actually to form this. So this is what we call the end. Hii ni kichwa, hii ni shoulder, kama venye kichwa yako na shoulder ziko, na hii ni shoulder. So what does this symbolize here? And then we have this point we call the neckline. Neckline ni hapo chini ya neckline, hapo tusema hapo kwa karibu na hizo ma shoulders hapo, sijui kama neckline or what, but let's call this neckline. I don't know about this. This is the neckline point. So the moment actually the market reaches here, then that is where we say, because of this formation, then we are just going to get this. The market actually continued to go down. Remember, the market was going down this one, touched this area, went down this one, and then formed this end. The market went down this way and reversed back, touched the same point. The reason we are going to show this one is because this and this, they are on the same line, but this is up. So unaona tu inakaa ini, tunaita left shoulder, and this is right R shoulder, and this become end. I'm going to give you the chart so that you can see that. And then we have this neckline point. So the moment it breaks this one, then we predict the market is going to go further down. So ikifika hapo unaweza ona hizo vitu zinakuwa formed kwa market, unachora unaona, basi ukingoje ikifika hapo wekelea sell and put your take profit and stop loss and wait for it. So those are the things that actually we form. They may not be 100% but they just help so much. Let me just give you an let me send. Acha nitume chart yake hapa. So this chart is just look like this. So this is what you may see. I hope everyone can see. Aki sijui kama unatumia simu, I know this may be bringing some headache, but you can maybe switch off to, you lost your network. What's up? Hmm? Okay, my network ilikuwa imeenda wapi? Okay, my network ilikuwa imepotea kidogo. Let me confirm whether still my audio is okay. Okay, I don't think I'm speaking of mic test. 1 2 1 2 mic test 1 2 testing 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 testing. Yes. Okay, my network ilikuwa imepotea, so I hope now you can see, you can hear. Let me just share the screen again. Okay, we are here. Let's finish this because we have, hey, time imeenda bwana. I'm not sure, but I'll just go first. I'm now going to go first. Nimepeleka pen wapi? Let me get my pen. All right. Yeah, so we are here. So I hope you are digesting this. We are on the chat pattern. We are going to go very fast. So kuna kitu nimeupload hapa sijui. Okay, hapo ni upload tena. Let me just upload again. So this nimefanya network ipotee sijui. This is what I was sharing, something like this. I hope you can see very clearly. So this is what I was trying to draw. You can see the market actually was just doing this. So you just draw your things just like this. This is the left shoulder. You have the right shoulder here. You can see the hand is here. So you can see let me just right. So we have the left. So we have okay. Kitu si mchezo. $10, 11%. Hii kitu nijipeleka wapi mpaka 10%? Okay, here we are good. Now we can see we have this left shoulder that is appearing here. We have the right one. So if actually you just draw this, then you can see, we have the hand. Okay. Okay. Testing. The microphone is off. Testing 1 2. So I've changed the network. Okay. Okay. Okay, mic test, testing. 1 2. Testing. Okay, so I've changed the network. Let's finish this. Change networks sometimes inaweza kuwa disgusting sana. CV2, it is raining. I think that is the problem. It is raining here. Wale wameenda acha waende, so it's not my benefit. So I was explaining on this. So that is the formation that you just be can just be formed right over here. We have different formation, like we have like let's say we have something, another one which is double top. We have something like, let's go to Roman 2. We have, remember we are on the chart pattern, we have something like double tops, you know, double top and stroke. This is not the stroke, but this is different. And also we can call this number 2. After having double top, then we have opposite of this, which is double bottom. Okay, double bottom. Okay, this is simple. This is simple. All you just have to observe this is where actually like double top, the market could just be going like this way, just goes that way, and then formed somewhere like this, the one, you know, and then that is when you know the market is actually going down. So we can form somewhere like this, similar, the market forming this end here and this, and then the market actually, you know, this is the time the market is going to reverse. How do you know that this is going to be, or this one, or this is going to proceed? You can use a lot of things, maybe some indicators, other price action, like the candlesticks pattern that we used over there to identify to us whether the market is ranging, and with the candlesticks that we just performed there, and a lot of things you can find, so that you can just get maybe a place of confluence, and then you can just know you are expecting the market to sell at that point. So that is the chart pattern that you can just be checking over here. Okay, so now the next assignment maybe you can check over here that you can actually do, so that you can cover the price action is actually to check on different, you just study different that is chart patterns. Okay, if you consume all this knowledge, I'm just going to end. You know, sometimes the candlesticks pattern cannot be formed, you see the chart pattern being formed, but through learning a lot of things that you're just going, there's no specific thing that is going to be formed in the market, but through consuming a lot of knowledge, then it is easy to identify at least one of it, and it's just going to be helping you on that. So you just different chart patterns and what and their meaning. So I'm just making this simple, and their meaning. Okay, you can put it just like that, and their meaning. What do they mean? What do they mean in the forex market? All those chart pattern. It's just simple. Just check on that. So going back, we were on the market condition. I'm just going to touch those two, because the time has gone really so fast. That's why na umeona hata nilikuwa naenda tu pole pole, very fast, but you can see it is a very wide area. That's why it is important ujifunze 25% unafunzwa, hiyo ingine unajitafutia wewe mwenyewe. Okay, so on that, so you just go to something like we call market condition. You remember on the right side we were talking about the market condition, where we talked about the consolidation of the market. We were talking about the market consolidation, like the trend here. Let me just show you, so that I just want to write this sideways. Tumeenda chini sana, tumeenda chini, unaona pale tumetoka, we are here. So I'm going to this on the other side, which is market condition, and I will just be covering something like consolidations. We can just be talking about the ranging market and the trend. So those are the two things. So talking about the trend, kuna video nilitengeneza about how to draw perfect like trend line. You can just use even indicators to know the trend of the market. Consolidation of the market is actually, I can even explain, this is simple. Consolidation actually and region of the market is actually when the market is actually doing this. You know, you can go to the price and just know the market is doing this region market, consolidated market. So maybe there's difference between two. You can find the difference between consolidation and the region market. It's the same thing. That is the market that is just region. You know, you can buy here, sell here. The market is actually the market is less volatile. Last minute is not moving so fast. Okay, so the market is just on that range. Inaenda tu hivyo, ikienda hivi, it's just moving sideways. Okay, and we have the trend where the market is, whether the market is that, what is the trend? Is the market going up or is the market going down? So we have two trends, uptrend and downtrend of the market. Let me just show you something here, maybe you can just understand as we wind this up. Okay, let me, for example, talk about the uptrend chart. What do you check over here? For example, you can even use the trend line actually to just identify this. This is just very simple. Let me just show you how you can even use the trend line to get perfect things over here. So I'm just, so you can see something just like this, okay, uptrend line. So you just connect all this point and then you, that is a trend line, okay. So that means this market is just trending upward, okay. So this is a trend line. You can use this to know the market is just trending. Remember, you can even use the indicators right over there. So this is simple. The market can just be even on the downtrend. Remember, that is not on the uptrend. Again, there is on also the market can just be on the downtrend as well. So that is the something very important to observe. Then we just give you another example. Yeah, we have something like this. So you can see how this market has just been moving. So you can even learn more about the trend, how the trend lines, how to draw the trend lines, the market consolidating and all that. So we have something that we call like something like on the blocks. You know, sometimes you can see the market moving the way I was talking about consolidation and ranging market. The market can just come over here. This market is moving this, okay, the market, there's no, the market can just move this way. Acha tuchore reality sometimes. Acha nichore kitu reality at least. Kitu real. So the market actually can just be moving. This market is just on downtrend, but in Africa sometimes inaanza kurange hivi, okay. So this is the market just moving this way. So people call this like block, okay, on the block here. And the moment actually they break this one, then the market actually start moving up. So again, nimechora kitu si real, okay. So you just something like this, you know. The market now start moving this one, so you can see all that. So that is what I'm just talking about over here. So if you can just cover all this, all those ones, okay, if you can just cover all those things, then you're just going to cover a lot in the forex market. You're just going to cover a lot in the forex market. The moment you just cover those things, yeah, no, we can proceed from there. But because I think any meeting that has to start, let me just pray for you before we start. It is very important. Because you have to understand these things, and it is good when people start anything, we just pray. So I want us just to start this one, and it's just going to be very easy. So it's just going to be a 1 hour class. I think we'll just be finishing at about 9:20 and 9:10 there. Okay, so just 1 hour, and I'm going to be very strict. Make sure the moment we start, we'll just be going in marathon. Let me pray shortly and then we start. Father, in the mighty name of Jesus, we bless you this evening. Thank you, Lord, for helping us, Jehovah God, to be at this place in the mighty name of Jesus. Father, we have so many people actually have joined this class so that they may learn something, and so that they can help their life, their families, so that they can just cater for their needs. Father, I pray that you make their ears and let them, Jehovah, be able to understand. Make everything simple so that they may understand, and they are going to apply whatever you're just going to discuss over here to help them to their forex trading journey, that they may be able to make something out of this, and their life is just going to change. And we thank you for everything and for this moment. As we finish, as we start, you're going to be with us, and we thank you. In Jesus' name we pray. Amen. So I'm going to be starting here about the risk management. That is the course we're just going to be having over here. Thank you for those who are saying amen. Okay. I hope now you stay on board till we finish this one. I know learning is not easy. Learning is something that needs dedication. Ikitu inahitaji discipline, a lot of discipline. Sometimes unaweza kuwa hata unaona kama movie kako sahi, but you know hakuna mtu amekuforce uingie class, you know, hakuna exam utawekewa at the end of it. So what is just requires is something we call discipline, and a lot of these things that are just going to be helping you out. So that's why it is very important umenyenyima ya that time. So we are going to go through this risk management. I tell you how you can just do that one. I'm going to mention the different account that you just be having, how you can actually manage those account. Sometimes I'm looking this side because I have two screens and I have camera here, so I'll just be looking at you, but I'll be switching off my camera when we just get to the real game. I'm going to share my screen here. Let me just share my screen so that we can share window. Yeah, so I hope everyone can see my screen now. So we'll be having this screen, and you just make sure that first of all you expand your screen. Hapo chini, if you just look down one hapo kuna hizo arrows bracket, zinakaa hivi, you can click them to expand. If you expand that one, you see at least a very big screen, and you not to see people, you only see my face and the screen. And now you just be following. Make sure that you have a notebook, because the risk management class actually involves a lot of calculations. If you don't know, risk management is about calculations. So mahesabu lazima uchape mahesabu, kwa sababu before you enter into the forex trade, before you enter a position, you cannot just because you have money and you just want to trade. No, you have to do calculations. Lazima ujue vyenye unaona. If I can actually show you my books, I always do a lot of calculations anytime I just want to do my things. I've done a lot of calculations, mpaka vitabu mingi zimejaa hapa. Every day I have to do calculations, mahesabu tupu, until nimenunua calculator. Naona, you have to do that. Ni vile tu sim, but I have the calculator. So you have to do, so it's just a game of calculation, but don't be worried. Sometimes najua people hate mathematics, but this is a very simple mathematics, and we're just going to go through how to this one now. What is risk management? Kama vile tulisema, what is risk management? Risk management is actually the way it just defines itself is actually how you manage. From the one management, risk, how you tolerate your money. You have your money in the forex trading. Does that mean that you have to expose all the money? How much amount of money are you going to put out there? Because risk management is what differentiates us from gambling. You know, na? This differentiates us from the gambling. Hata watu wa gambling sometimes wanaweza fanya risk management, but cannot be the way you can just do in the forex. So the most important thing about forex is the forex, you can actually determine what you want to earn and what you are willing to lose. Okay, unaweza angalia tu kesho, tuseme saa hii mimi sina running trains, naweza amka kesho niamue nataka ku risk only $10, kesho nataka ku risk only $20. Okay, it does not mean that you have money. Even sometimes you have to trade. No, yeah, it's my network. I think my phone is okay. My sound is okay. Okay. So in case there is a problem, you can open the microphone or you can test down one over there. I will just be checking. Yeah. In case there is problem, but I hope my sound is still okay. My sound is still okay. Excellent. Now, we are here in the risk management. How do you manage your money? How do you manage these things? Yes, uko na pesa kwa account yako. You know, let me just tell you about the risk management, the things that you have to know. We will not cover everything over here, but I'll make sure that I create a masterclass for the risk management. What does the risk management entails? entails in what does risk management entails. Number one, here we have what we call them. The moment you register your account, first of all, there's something even before you trend. The moment you put your money over there, there is something that is very important, and that is what we call leverage. So you have to know about the leverage. And the reason leverage is very important in this aspect is because some people have contacted me asking me that they have placed their money over there, and sometimes when you try to trend, account inakwambia insufficient funds. Account inakwambia you have insufficient funds in your account. And the reason of this is because of the leverage that you have actually used. How is the leverage going to affect your trends? Do you know how to calculate this? Because I actually showed this is a very people actually wanna confusing these things about the leverage over here, and I'm going to be talking about this little bit, and then we just be connecting when it comes to risk management over here. Acha nione notes zangu hapa penye nimekufuatanisha. We have what we call the risk tolerance. Risk tolerance. Even for the beginners, come away in beginner, don't be worried about this. It's going to be very easy. You just understand. After all, you learn these things. Lazima utapitia hapa. Lazima utapitia hapa. So you have to go through this process first, okay? On the risk management, we have something like, you all know this, you have to determine your stop loss, or TP, what we call take profit. You have to know that. But before you come to determine the stop loss, you are take profit, some people will come just over there and say, nataka kuweka stop loss yangu hapa. I want to put my stop loss here. I want to put my take profit around this area. But that is not important. That is not important. What is important here is to look at the trend and you calculate those ones. You know, you have to know. That is why we come with this term we call how to calculate, how to count. First of all, you have to know how to count pips, points. You have to know that. Okay, we may not touch all of this. The reason I'm talking about this is so that you can write on your notebook, so that you know what the risk management is and how you are just going to be applying it to your trends. That is something very important. You have to know that. Okay, just write that one and we'll just be covering with time. Okay, so stop loss, TP. But before you come to know how to calculate the stop loss pale utaiweka and take profit, you have to know how to count pips and the point. Okay, you have to know that. And first of all, you have to know the leverage, because there's a leverage that you're just going to be having, and then it's just going to be disturbing you, and you cannot use certain what we call the lot sizes, okay? And now here we are talking about even the lot size you use is part of the risk management. So you can see risk management is actually the Forex, because the risk management is what will help you to stay profitable throughout. Okay, sometimes, you know, the risk management is what will help you to stay profitable. Sometimes your strategy can be 50% profitable, but you will be profitable throughout. Kama strategy yako ina work 50%, ujue you have to be a profitable trader. Kama unajua, but if you don't know, your strategy can be 90% working, okay? Inaweza kuwa hata ina work 90%, but without proper risk management, you are going to be a loser. You are going to be a loser, because sometimes you can risk a lot of money, but when it comes, maybe today, let's say your aim is to make $30 every day, okay? You can make 30, you make many times, but when you lose, you lose maybe $200. So there's no need. So you are a loser, because you wins 30 days every day, but at the end of the week you lose $200. That means you are losing all your trends. What will make the difference is what we call the risk management, is what will help you to stay profitable. And that's why I said, if you have a strategy, and what is a strategy, by the way? A strategy is the formula that you approach the market. Si ati ni kitu nakupea, ingia hivi and do this one and then it will just be helping you. A strategy is the formula that you use to enter into the market, and that's why it is very hard actually to teach someone your strategy, okay? Unless maybe I teach you something, I can teach you a lot of things about the market and all that, but teaching you to say my own strategy, you can be very hard, because this is how I approach the market myself, and that's why you have to develop your own strategy, because this is how you approach the market. This is how you familiarize the market and you approach the market. That is your strategy. You test it so many times, and if it wins so many times, then that is when you know your strategy is good. And how do you test? First of all, to know whether it is 50%, 60% profitable and all that. First of all, in the last class we said you can use what we call the back testing on Friday, Saturday, when the market is not there. You can try all those things and do back testing. The other thing you can just use to know whether your strategy is okay is actually to use what we call the demo account. So the demo account is another account that you can use to test your strategy, okay? Now tulisema, if you're using the strategy, let me repeat this so that you can I'm going somewhere. So what we saying is that make sure that you adjust your account so that it can at least have the amount, kama ni demo account, ikuwe na the amount maybe you're willing to put. For those who are using FXPesa, make sure that you go there to FXPesa site and reset balance to minimum need to $50, so put to $250. So iweke ikuwe $250. So trade with that amount of money. Put risk management of that amount of money, and then you see how you're going to perform over there. If your strategy wins more, then that's just going to be helping you. Now let's talk about this now practically, because we just come to the chart and how we can just do that, because I'll just be showing you at the end of it. But now let's just do little calculations. So now mahesabu tu kidogo, msiogope, mahesabu kidogo tu, okay? And then we just be winding with that, because so many people, why do we give, do you know the reason? Hata siezi pea watu signal sahi, because enter here, I can only now give you the chart. I just draw the chart maybe and give you the overview of the market, because sometimes when you give people signal the exact place to enter, what they will just do is that they misuse that opportunity and they do their own things and they lose money, okay? Why do you think the brokers give you the signals and sometimes they can work? How do you think the brokers give you signal and yet when you lose, that is the time maybe they make money? Why do you think that? It's because they know the normalcy of human beings, they always make mistake. Hawajui kutumia risk management. Utawapea signal tu na wa misuse, itakuwa right, but they misuse. They don't know how to calculate these things. If they lose, they are going to lose a lot of money over there, because wameingia vibaya, wamekaa vibaya, unawapea tu, okay? Ni kama tuseme FXPesa inaingia leo inawaambia kuna game ya Arsenal na Man U and Man U watawin, na unajua umefanya FXPesa wakikwambia hivyo, si utaingia. Sasa why are they then giving you something like that? It's because they know you're going to make mistakes as usual. Even hata wakikupea, that means I can give you signals and still people lose money. Why? Because they don't know the risk management, and that's why you can be given signal, you can be given all those things, but still blow your account. Why? Because of the risk management. You don't know that, okay? Apart from psychology that we are talking, so if you connect something about the psychology with what we are learning, I gave out the book, and then then you connect with this class about risk management, then you understand why we are talking about this, why this is very important as trader, because those two topics will actually change your game on how you approach the market. It's not matters of making millions of money in the forex trading, but is how you risk your amount of money. Uko na $10, si eti umeipata ukaokota huko kwa makaratasi hapo. So what you have to do is to learn risk management so that you cannot lose that amount of money. Forex is not gambling, so you are not, hiyo pesa unaekanga kwa forex, najua I know some of you may have lost a lot of money over here, you know, and I understand that process of getting those amount of money. Maybe umefanya kibarua huko, you have done your job and you are coming over here, you put your money and you lose it, all of it, okay? So risk management is what can actually help you, so that even if you lose, you can lose certain percentage of money, because of what you'll have done your calculations very right. And that's why we are talking about calculated steps. Ushawaisikia my sub, yani mtu ameingia na calculated move. So you have to work in, anytime you are trading, you have to work in a calculated move. A calculated move, that is what we are talking about over here. And I'm going to give you an example and how you are going to do this, okay? Now, let's talk about these things. I hope you have written these things so that maybe when we just don't touch everything over here, then you can actually be going slow by slow through them, okay? Now, we talk about the leverage. Leverage is the amount of multiplications of what you get from the broker anytime you put your money out over there, okay? So ni kama multiplication kana kusaidia. I'm going to touch this, and the most important point ziko kwa risk management, stop loss and lot size, okay? That is where things are very important over there. Now on these leverage things, to understand more on this, so this is for the people who actually are using. Let me just mention this, I will not explain because it will confuse so many people, because unless now kuna video niliproduce ikiwa na explain thoroughly about the leverage and how it affects your trend, but let me just slightly explain the leverage over here and how much you have to use, okay? I've seen so many people actually depositing something like $20. Let's say you put $20 here, okay? So if you put $20 over here, so for you actually to open at least 2 trends in the market, make sure at least you use a normal leverage. Unaweza tumia 1 to 400 ama 1 to 200. The reason I'm saying this is so that it can help you to open at least 2 trends, okay? So you can open at least 2 to 3 trends that is gonna this one, it has 0.01 lot, okay? And you can open another one in case maybe the market reverses back to this position. Either ulinunua hapa na unataka market iende juu, then market can drop kidogo to tena, then you can buy at this place, okay? So that is why it's important actually, if you have a small account, unaweza tumia leverage ya 1 to 400, okay? Because you actually, if you use a small leverage like because maybe you have hand that the leverage is banned and all that. No, sometimes it's not banned. If you have a small account, the reason the leverage actually can limit you, you can buy when you have a small account and you have used a very small lot size leverage like 1 to 50 and you have $50, it would only allow you to trade with 0.01, okay? Na utafungua hiyo, ukijaribu kuingia ingine itakwambia insufficient funds, okay? And maybe the market reversed and maybe you are spotted another currency, because you cannot only trade one position. Maybe you identify ingine and unataka kuweka. So the only way is to use something like 1 to 400, 1 to 200 to just help you to open at least 2 positions over there, okay? So that is the leverage. Okay, that is the leverage. So if your account is more 1 to 50, just use a normal leverage over there. It's just going to be helping you to open 2 positions. So the leverage is only to help you to open either multiple trades with the highest losses over there. It's not how you risk amount of money. It's how you open the position. You can have a high leverage, but it's still managing your account in terms of the lot size that you use. So the leverage is a limiter or increaser of the lot size that you can be allowed to use in the forex market, okay? Ni ya kukusaidia Ukiongeza leverage inakusaidia you can be able to trade with a highest lot size with small amount. Okay, with the small lot size inakulimit, you have account but inakulimit, you cannot trade with highest lot size. Will just be coming over there. Okay, let's talk about the risk tolerance. Okay, now let's say you have your account over there. How much are you supposed to risk? Sometimes you have heard people talking about risking 1 to 5%, 2 to 5%. Let me come. Sometimes you have heard people talking about risk in 5%, at una risk 2% and all that. Okay, what is that? How do you do that? So I'm going to go first on this because it is important but not that important in our topic, but it's still very important. But this applies if you have actually a good account and not a small account. Okay, now in real sense, one day, let's say maybe we have between 30 days to kona vitu kama 30 days that you have going to be trading, and we have something like $1,000. Let's talk about that $1,000 because you'll be there. You will actually one day deposit $1,000. Okay, you can deposit to $1,000. Okay, let's talk about that amount of money. Now nataka kuangalia hapa so that you can know how to manage your account. Ukona assume siku ya leo, let's talk on how you can manage this amount of money. How do you have to trade it? Ukona strategy iko poa, iko 50%. Okay, ukona strategy iko poa, at least ina win 50-50. Yeah, kama ukona strategy inakusaidia kuwin 50-50, ujue ukona strategy iko poa, and that strategy actually can help you to make a lot of money. Let's assume today you have deposited $1,000. Work with me through this. Okay, now you are supposed actually to risk between 2 to 5% every day. Okay, you are supposed to risk how much? 2% to 5% every day. Okay, now what is, assume now we go to the highest number, which is 5%. What is the 5% of 1,000? So this is the first calculations we are having over here. Remember, we are going to the second calculations that is very important about the stop loss na take profit. Okay, tutamalizia na hiyo. So assume now you want to risk 5%. Now what is the 5% of 1,000? Is equal to $50. So you can see how this amount of money is good. So the amount of money naesa lose in a day, nikitrend ile naeka ile nasema I'm willing to lose this amount of money, $50, nikiwa account yangu na reflect $1,000, I'm only going to risk $50 here. Okay, and I'm not going to be worried. I'm not going to know. I know today my day has started and I'm going to be risking $50. And the opposite of this is true. You see now when it comes to $100, it will be $5, which can be achieved very fast. It means your stop loss is going to be achieved fast. So all you have to do is to increase the risk over here. So assume you have $100. Now for some people are asking, now here, yes, you can risk 5%, but 5% over here for it to $85 in the stop loss, it will just be very easy. So all you just have to do, the recommended amount is 2 to 5%. That means actually for you to being your account to be very, very, very safe is actually when at least you have $1,000 over here, because and you'll be making sensible amount of money. But I'm not saying your money is not banned $50-$100 over there. This is how you can do this. How the small amount of money is actually risky. This is how the small amount of money is risky. Because you can see if you risk 5% of 100 is 50. Is $5. So that means $5 is not, because you can put the in the market and then $5 uta close. You'll be closing a lot of losses because the $5 is very near. Okay, so you can see over here now you have to increase the risk. You have to increase the risk, and over here you can either risk 20. And 20 of 100 is actually something like what? 20%. What is $20 of 100? I don't know, but 20%? Emundu aniambie. What is 20% of $20 of out of $100? Is it 20%? So it's 20%. Now, 20%. Yes, 20%. So you have to risk 20%. At least hiyo siku unajua niko na $100 but I can only afford to lose $20. Now, $20, you can see this one now, $20, okay? $100. So you can see you have increased to 20%. So that's how small amount of money you have to do that. And you can see how many times you can trade. You can only trade losing. Okay, when I lose $20, only 5 days, and then your account is gone. But you know, it's not about a band amount of money here, because $20. If you lose $20 today, let's talk even about $100. So you can see you cannot really lose amount of money in your forex. Okay, now let's say you risking 20%. And your account has how much? $100. Okay, here you will trend how many days? 5 days. Tumeangalia mpaka hapo uta trend how many days? 5 days. Okay, your strategy works 50%. Someone has Dorothy Wanja, your microphone is on. Dorothy Wanja, your microphone is on. I'll mute you. So we are here, okay? Tulisema ni calculations leo na musipote. Don't get lost, musipote. Just follow this. Assume now you have deposited $100 in your account. Okay, how much are we risking here? 20%. Okay, how much days to go to lose continuously 500 to lose 100%? It will take us 5 days to lose all the account. Okay, that is interesting. Now, what if you have a strategy that works 50%? That is interesting. Because now this is where it drives us to something else known as risk reward ratio. Okay. Kidogo, someone is saying my sound is getting lost. Let me hear. Hii calculations is very muhimu lazima muelewe. Okay, testing. Okay. Sauti yangu ikipotea sasa nitasikia. Now we are here. Mkielewa hii tunaenda the next step, okay? This is where it takes us to something we call risk management. Risk reward. Risk reward. Risk reward here can be written either in point or ratio. Let's say risk reward. Okay, una risk this amount to get this reward. So can be something like, let's say 1 to 2. Okay, that means you are risking 1 to get 2. Okay, so if we are risking 20%, which is equivalent to $20 per day, that means our reward is 2. Our reward will be 2, which means our reward ratio or our reward here we are focusing. So this can be loss, and our profit over here will just be eating $40. We want to have that. So risk management ya kusema you are risking this percentage in a day cannot work if the risk reward ratio is not involved. You have to have a risk reward ratio. The moment you enter into the market, let me show you example so that we can just work with this. You have something acha niwaonyeshe what is the risk reward ratio. Okay, I could even have shared ikiwa hapa. Just follow on this. I hope you can see we have something like this. Let me just show you. You can see hii ndio inakusaidia kujua risk reward ratio yako. Now, as you can see, hapa ni katikati, hapa ni entry. Hapo katikati, ukiangalia hii ya rent, hii inakaa kama ya rent, ni stop loss, hii ingine ni take profit. How is supposed to be? It is supposed to be like this. Okay. This is the stop loss and this is the take profit. Meaning when the market, you enter around here, and when the market hit here, that will be your TP, take profit. And when the market move here, it means it will have eaten your stop loss. Now, you have to be back testing and try this. In case maybe you entered over here, you back tested in demo account and it hit your TP one time, the other time, and your strategy, you know, it has eaten when you are risk reward ratio unaona hapa ni 3. Kwanza hii ni very big. Let's say ni ya 2. 2 means it is 1 to 2 kama hii tuko nayo hapa, 1 to 2 kama hiyo sasa, because this distance ya take profit is times 2 of this of loss. Okay, so that means you are risking 1 to get 2. Okay, that is interesting. Now we are here. That's how you see how you set the risk reward ratio, and you know that. So you have 5 days to trend. You have 5 days to trend. Uko na siku 5 za kutrend. And let's use the minimum risk reward ratio, which is 1 to 2. And you can see we have $100, 20%, and all this amount of money. The $100 ndio minimum naweza tumia in this case. Let's say your strategy tulisema ni in our 50%, which is okay. 50% strategy. Okay, that means you lost, let's say even you lost 3 days. You lost 3 days and you only won 2 days. So I know this can be a very hectic week, but you have to have, for you to achieve this, all these are connected, you have to have a discipline. For this thing to hit your TP, you have to be disciplined enough. And that's why all things connect. Lazima connect these videos zote, so that you can have a good risk market eating your risk reward ratio, unless something else changes in the market where you can assist. Okay, na si lazima eti you trend and then at the end of the day you have to assist in the market. You can even wait in the following day. There's no problem, there's no offense. You lost 3 days and you only won 2 days. Okay, now see how things, because your strategy is actually hapa itakuwa your strategy working for 40%. You lost 3 days, So hapo because tulisema una risk 20 days $20 per day, utakuwa una lose how much? Utakuwa una lose 3 times $20 which is $60. Na si eti because unaweza poteza leo uhani kesho nini hiyo kesho ingine. Okay, now at the end of the week in your nini ukienda kufanya mahesabu utaona total loss ni $60. What about the profit? Only 1-2. But remember they eaten your TPU which can be around 1 to 2. Sometimes when the market is good it can be even 1 to 5. Yeah, I've seen that. TP yako inaweza hata eat 1 to 5 which means you can even make $100 that day, which is interesting. Now here let's say you only eat your $40 which is 2 times $40 which will be equivalent to $80. So the total profit you made at the end of the week are how much? Sorry, I've not shown the calculations. Let me show you the calculations here. I hope you are following this so that you can know how to be doing your... Lazima hizi mahesabu unajifanyia wewe mwenyewe. So at the end of the week, you can see you'll be having $80. So ukiangalia kabisa umepoteza through the week $60 and then you have earned $80. Okay, so if you just do this calculation, because this is a very bad week, umepoteza mingi than zenye umehan. So after all, hata kama umepoteza mingi, you have $20 na umetosheka na hiyo. What if your week is good and you earn 3 but you only lose 2? Okay, hapa utakuwa na 2 times hii itakuwa $40 at the end of the week, but hapa utakuwa na $120 which made you $80, which is almost doubling your account at the end of the week. You made more than 10,000. No. Risk reward ratio involving the risk tolerance, how you the amount of percentage you are risking, you are going to risk to your account. Lazima ikuwe ujue ni percentage fulani nitataka kuwa na loss at the end of the day. And kama unajua percentage, una calculate, unajua hii pesa kama nimeweka hii percentage nikiwa na lose every day inaweza nibeba siku ngapi? For example, when I have like $10,000, I know I can trade 1 month. Kitu kama hiyo unaweza trade 1 month either ukiwa una lose every day. That's when you can blow account. That means if you hear someone is talking about blowing the account in 1 day, unless he is not doing the risk management, otherwise you have to blow the account when you lose every day, every time. Sio siku moja. You have to blow the account when things are bad, when you have lost out of everything. You have lost your trains, consequently losing without even winning one. That is when you can say that person blew the account. But these things of blowing the account comes because there is no risk management. You lose $20 and then you want to come to the market and then revenge. You can see how discipline now is needed. Even to be patient for you to hit 1 to 2 risk reward ratio requires discipline. Okay, it's not matters of what I'm making at the end of the day. Kama saa hii unasema nitoke nione kama nimemake ngapi leo, no. It is matters of how you, when you spot the market, how your accomplishment is made. Okay, sometimes you can decide even to give signals and all that, but sometimes maybe I entered my trends yesterday until I see my fulfillment, unless maybe something enters between the way. That is when maybe I can change the mind. I can either trail niamue hii market vile inaenda, because of my analysis this may change the siku zinaenda. I have to trail, I have to increase the TP. Okay, I have to increase the take profit, something like that. Or nakajua hii market ikienda hivi inaenda vibaya na nikajua hii market itaenda chini sana. So what I want you just do is to trail my stop loss na ileta karibu ama na close market. Those are the things that you can just do if you know things went murama. Kama unajua mambo imeenda murama, that is when you can change the mind and decide to close anytime you just want. It's not of must even you are hata kama tunaongea risk reward, it's not of must that ikuwe hit, because sometimes things can change on the way. You can close, okay, but you always make sure that your take profits are actually higher than the ones you lose. Kama una making $20, make sure that you don't lose so much than like more than $20 per day. Because if you be losing a lot in the trends, then at the end of it you'll be having troubles in that. So make sure that you can perfect in these calculations. Jua ni amount gani, how much amount of money you are willing to risk here. Calculate ile account uko nayo, just do those calculations. Ujue I'm going to risk this amount of money. How about the risk reward ratio? Okay, how about the discipline that will help me to know this one? How about the strategy that is actually working? Oh, work on your strategy on your own. Is my strategy more than 50%? Very right. Go to the demo account, practice there. Andika, ukifanya trend moja, andika 1, 2, 3. Fanya survey at least ya 20 trends, and then you just do this calculation to find the percentage. If you may win 30 out of 50, unafanya calculation, unajua my strategy is this way. Okay, kama iko hivyo una change plan. Kama iko hivyo imeenda chini ya 40, just do other plans and it will just be working. That is the first thing we've talked about, the risk management. You will see how you just do that one. You have to connect them: risk reward ratio, risk tolerance percentages, and the discipline that is will just be able to help you no matter the account that you just be having. Ni vile $10 sometimes to trade with $10 hata unajua ni kidogo. So sometimes unless maybe you are risking a lot, the less you account, the lesser the higher the risk. Okay, because there's leverage high. Remember the leverage where we started to kind of the percentages, to kind of risk reward ratio. You have to connect them downward venye tunaenda. Let me repeat here before we go to the next again. We said determine your leverage. Leverage yako ile unatumia, ujue ni na kama account yako unaamua ni amount unataka kuanza na. Next month we have something where you can even save some amount of money for the next month and decide this is my calculations. Ukiwa una trend tu kwa real account but you are still practicing on demo account. Risk tolerance, ujue sasa isipite sana. Kama uko na account yako iko na $1,000, acha risk ratio yako ikue, acha risk yako ikue highest 5%. But kama uko na less than that, like uko na $100, 20% isiende sana. Okay, 20% risk, so that at least you can trade a whole week. Okay, I'm not saying a week because you can trade even more than that. Now tukaenda kwa kitu inaitwa sasa hii after that risk reward ratio, how you have to calculate all that. Okay, now these are the things now that comes with the stop loss and take profit, because risk reward ratio, risk is stop loss actually, and reward is take profit, TP. Okay, so that's how simple it is. And now this is where it takes us the next interesting topic. Do you know you cannot put a stop loss nor take profit without knowing how to calculate the profit and stop loss? Because you cannot just aim and decide I'm going to be assisting or entering at this level. It's not matters of levels. It is not matters of the positions. No, it matters of how you calculations, the calculations that you just do. Let me show you how I do my things. Again, let's just go to the graphs so that I can show you something interesting. I know ni usiku, sitaweka sana because people actually normally sleep when things calculations. Kwanza nimehesabu. No. Let's do this. Now, let me tell you something interesting. How it can just help you to put your risk reward ratio and all those things. Now, sometimes when I put my things like that, like whatever you can see on the screen, I can see sometimes when I enter at that position, then my stop loss is actually very far and I'm risking a lot. So what you just do, for example, najua, for example, this is just an example. I just maybe want to enter around this region. Let me expand it so that I want to enter and buy around this region here. Nataka kuweka buy hapa. But there's how maybe some people are entering early. So ukijua ukiingilia hapa, things zitaenda murama. Or you just have to be patient the market to come over here. Because if the market actually you enter here, your stop loss will be very close. And your stop loss means your risk. Your risk percentage of the day and all that. It cannot be even in one position, but you know, unagawanya tu, unajua leo, unajua hiyo si kitu moja ati una risk percentage moja kwa one entry. Hapana, ni 20% kama uko na $100 kwa hizo position zote umefungua. Kama hapo nchu total balance inaonyesha -20, unajua hapo sasa umeata, kuna vyenye mambo imeenda vibaya. So you know hapa sasa ikienda mambo hivi nita lose $80 na kuna position nyingine na isa lose 7 hivyo, then you just wait for the market to come here. So you decide to put something we call a buy limit. Unaweka buy limit in case the market comes here and start reversing back, you know, in case the market actually comes here, and then that is the time we buy. So you can be on the safer side. Utakuwa on the safer side because already it has dropped your position and now your risk will just be very far. Okay, that is now what we call stop loss and TP, defining as the risk reward. And we said about calculation, you cannot put these things without calculations. You have to know how to calculate. Now this is the things I've been telling you over here with every time. You cannot put stop loss, take profit without knowing how to calculate point, pips, all these ones, profit and loss. Okay, you have to, tulisemanga when we were starting, you have to do what we call a calculated move, calculated risk. That's why it is called risk management. You have to, not by unaona trends zimeenda negative unajua leo ni, no, you have to know. And that's why, kwa nini unafanya hivi? Because when you have done a proper risk management, hautakuwa na haraka, you'll be very patient. You can even go your ways and leave your trains running and you will not be scared, because you cannot, even if you lose, you just lose your target of the day. Even if you win your target of the day. So you are not scared. You can leave your train running and you go and do your own things. But if you are still scaring on screen, unafanya, wengine wanafanyanga kidole tu hivi ikiwa hapo kwa close, unangoja tu iende hivi, kienda vibaya una close haraka. No, you cannot do that. You'll be losing a lot. Just do proper risk management. Ukienda hivi ujue strategy yako maybe leo imekata, you lose that one. The other day you try. Even if you get the wrong movement of the market, you cannot lose 5 times. Hata saa hiyo ingia tu useme hii market tu itaenda hivi, na hujafanya analysis, unjaribu 1 2 3 4 5, basi kosa it umekosa tu, and tumeona 2 times, you are going to be, as long you have what a good risk management over here, then just 2 out of 5 is enough to make you a profitable trader over there. So that was I'm saying over here, risk management is important. So you have to know how to calculate this point. And what I'm talking about over here, point and equivalent to lot size, is what will just give you the profit and loss by multiplying. But you have to know, the moment you just do this, then you know today I want $40. So if you want $40 here, profit, okay, and you have known that today the market will just be moving like let's say 400 pips, 400, like let's say even 400 point, this point, these are 400 points, okay. So this is one, remember this is a position, this is not realistic what I'm talking about over here. So if there are 400 points, how much lot size do I need to make $40 profit? I only need to use a lot size of 0.1, okay. So 400 points are equivalent to 40 pips. So you only need 40 pips, you multiply times 0.1, and at the end of the day you have eaten your TP over here. But remember, you can just use smaller lot size over here, because here tutafungua position moja upate ini moja alafu uwekele 0.1. no, you can have multiples of them even with different currencies. You use 0.02, 0.03, and ingine kikataa, ingine maybe itanjipa, and things are going to be right with you. So you have to know how to calculate this point, and it matters of which you are using. That's how you calculate, because calculations of currencies on how they hand money over there, USD JPY is actually different from Euro USD, somehow slightly. That's why sometimes inaweza kuwa 400 point, but profit hata kama ulikuwa umetumia 0.1 haitaenda the right, but it's almost there, almost 40, but haitakuwa 40, itakuwa less than 40 hapo kidogo. You have to know how to calculate this point, you have to know how to do that one, okay. And it is very easy. Sometimes it is different from the stock, sometimes you can just do, but most of them, kama una trend gold, una trend hizi vitu, the easiest way ya kutumia hizi vitu, umetumia lot size, sawa, unatumia simu kujua ni point ngapi unaenda, unahitaji how many pips point, unajua calculate point sini kuna 400 point, ni sawa, umetumia lot size ya 0.1, okay, or how to do the easiest way, umetumia lot size ya 0.01, okay. This is how you calculate the point. 0.1 umeweka lot size, okay. Unataka ifike movement fulani, for example itoke from 19 iende hiyo ingine, for any currency or any commodity you want to trade, okay. So you long press, una long press your currency, ukilong press unaenda kwa kitu inaitwa properties, utaona contract size, you multiply you subtract kwanza hii konju. For example, let me just write an example over here of gold so that you can see the gold now is reading a 1907. Maybe hapa sasa ilikuwa entry, unataka kutokea 1920.18, ingine iko 16, okay. So what you just do is subtract these things, you get something like maybe 13.42. This is just an example, okay. To get all these things, you just learn all these things kwa kinagaubaga, okay. You unaenda long press hapo kwa your simu on the gold, you see something contract size, then hii utapata ni kitu kama 100, you multiply times 100, then times 0.1 lot size, then you see the profit that you have made, or profit or loss, okay. So contract size times minus of the two times the lot size, then you get the profit of the loss to any one of them that you just be using over there. That is simple. You have to know how to calculate point before those risk management and all those things. We can talk about a lot about the risk management. That's why this is an assignment for those who don't know how to do that. make sure that you learn how to do all those things, how to calculate point and pips, because this is the important thing. Wale nilikuwa nimeanza kufunza, nilianzia kufunza how to calculate point and pips, because that is the beginning of everything that you learn over there. You have to know that it's the genesis of everything over here. Okay, I see it is 1 hour already. That is the risk management. I hope maybe nimeexplainia kidogo tu. Risk management covers a lot, even more than what we have discussed, but at least those are the basics that you have to know. If you practice those ones, then you are going to keep your account and not blow it so easily as people do. If you get a signal somewhere, you know how to utilize it, how to blow your account, how to enter an greediness. But you have seen how all those things connect. Your mind, risk management, and all those things that depend on each other. Hakuna kitu inakaa peke yake. All those things connect, and it is very important over there. Risk management is a calculations. Tafuta kitabu, kafanya calculations zako, ujue hii ni pesa yangu real, si ndamo account. I have to know how I'm be trading this amount of money. Si kuona direction inaenda hivi unaekelea 0.09. no. Wow, tunasikia ati nilitengeneza billions of money in the forex trade. Sometimes I don't use this risk management thing. Ati mtu alikuanga, hey, I lost this amount of money, 200,000, 500,000, ow, in one day. No, that means you had no good risk management. No risk sana. Okay, if you want to become a long time business person si ngabla. Business person ni mwenye anatengeneza pesa almost every day, is profitable always, then you have to do this one. Otherwise, if you want to make faster money, then you just be coupling your money into the forex. Ukitaka kutajirika haraka because you have had, I made million last month, how? Unless maybe you placed a lot of risk, ukaenda hapo kwa ngont ukaekelea lot size ya 10, ni sawa. You did that, maybe you got lucky. What if the market went the other direction? You could have lost all the amount of money. So a good profitable trader all the time does the calculations before he enters into the market, and that's how they become profitable all the time. Wanafanya business. Unaweza fanya forex full time, yes, you can do it. But if you are not doing risk management, then you cannot do it full time, because you be blowing account every time. Utapata wapi capital ya kutrade? Yeah, but if you want to do forex full time, then you have to do risk management, because you know I have to be profitable. And I cannot lose all the amount of money. Kama wewe ni ngabla, unajua utaweka pesa yote iende. So otherwise, you have seen how it is important to learn about the risk management. We'll proceed with this class online with the discussions about the risk management. For those who just be asking questions, you can direct them to the group or to my inbox in case there's personal class, personal issue. Anytime I just get the time, I'll actually be checking and I'll be answering your questions for free. Continue learning about the risk management. If whatever mentioned over here you don't understand, make sure that you take your time personally and learn more about them. Take time. There are books I'll send about the risk management here. Make sure that you take time and go through them. Naweza wapea tu hiyo nimewapea tu tuseme ni 30% of it you have to learn. The rest is about you. There are a lot of things that you can learn. Hatujaguza leverage sana, hatujaguza hizo vitu zingine sana, but you can decide to go deep through them. I said I'll finish the class at 9:12. Thank you so much for those who have joined on this class. Next time, tomorrow, we'll just be having a beginner's class, and we'll just be talking some new things about the forex. Just beginners class, you know, forex, just introductions over there. They'll just be helping some of the people who are actually joined recently. For those who may find this as a hard topic over there for them to learn and all that. Thank you so much for today. Make sure that you just go to the group, just comment for the people who didn't join the class. say the class was amazing. Just leave a positive vibe. It will just help some people who did join today, and they will maybe join the next time. Until next time, adios. Blessed night. Good trendings over there. You can assist from the group. I'll see you next time. Thank you for joining. I hope you have learned something. Bye bye. Shaban raised the hands. I don't know this matter. Be blessed. Thank you so much. Thank you very much. Okay. Thank you so much. Nangoja tumutoke. Thank you, Kahondon. Blessed night as well. Hey, kuna mtu anataka kujoin sai. Not today. Deny and try. Simtoke. Mtoke. My assist to. Assist A60. Oh. Hello traders, hello everyone, this is Dan and this is Dan Tech Channel. Now today we're just going to be talking about something that is very important, something that is very fundamental, something that is very important in the forex market, and that is risk management. Now I'm going to be writing over here actually before we come to the chart, and we are going to be seeing what is the that is risk management and how actually to just do with it, because most of us actually we have been losing, so many people have been losing previously, but I can just say that because of the risk management, let me just write over here. I hope you can see my screen. Risk management. risk management. Actually, this is like the second video I'm making about the risk management. The first one was actually how to put the stop loss and take profit. I just showed you that, and use the MT4. If you not check that one, I'll leave the link below so that you can just watch that one. But in this one, we're just going to go into details on how actually how risk management will help you in your trend. And this is one of the things that actually we are just going to be noting over here: risk management. Number one, there's other two things that we have to are very important actually in the forex market that we'll just be checking right over here. So when we talk about the risk management, actually is the amount of money, is the ratio or maybe percentage of the amount of money that you are willing to risk right over here, because you can see actually there is the one risk. So this is the risk management. How are you going to manage that risk? For example, let's say your account actually has, let's say, even $10,000. How are you going to manage the risk? How are you going to risk this amount of money? How are you going to manage risk here, over here, okay? So that you cannot lose all the money, so that your account actually cannot be blown out, okay? So that's why risk management is very, very important. And actually, let's say right over here, as you know, to put a good risk management, we need something that we call risk reward ratio. So this is going to be very important right over here: risk reward, okay? Risk reward, that is what we're going to be helping over here to put the risk management. The percentage actually we are just going to be willing to put right over there on the trend. And when we talk about this one, I'm going to use an example of 1,000. Let's say you have $1,000 account, okay? You have $1,000 account. How are you going to manage this amount of money to ensure that actually is not going to be blown out? Because you know, there are some people actually going to trend even one day, they trend some hours, and then they're just going to lose all this amount of money. I'm going to be simplifying this. And actually, as I said earlier, what we just need actually over here is what we call the risk reward ratio. But before even we just do that, you know, actually you have actually to be risking at least 1%, you know. If you're good enough, you know, you have actually to risk between 1 to 2%, okay? So that means if you are risking, actually let's just even go to 1%. If you are risking actually 1% of $1,000 for every trade that you take, that means you are actually risking only $10. How many trades are you supposed actually to take before actually you just blow your account right over here? Actually, you have taken 100 trades. So you have actually to lose 100 trades for you actually to blow your account right over here. But as you know that it's not possible for you actually to do all this, to lose all that trend, you know, to lose, no matter how unlucky you are, you cannot lose consecutively 100 trends in a row, you know. So it will just keep you trending and trending more. So one thing that you have to know over here is the amount actually you risk every time actually you place a trend. How many trends do you place in a day, in a week? And that is going to be helping you so much, you know. The percentage actually you do that. For example, there are some people who are actually going to risk, let's say they are going actually even to risk something like 60 or 50%. Assume some person just comes over here and then they risk something like 50%, you know. That person is going to risk, that is $500, you know. Risking $500 in one trade, that means you only do 2 trades and then your account will just be blown out. Some actually risk this amount of money, that is 20%. 20% actually of $1,000 actually is $200. That means you have only to do 5 trades and then you just blow your account. And there's possibility that you can actually lose 5 of them and then you just have to blow your account. But you know, the only thing that will just be helping you over here is that in these many trains that we will just be doing, okay, let's say you make sure that your account actually can carry you around 50 to 30 trains, okay. Yeah, so if your account actually can just carry 50 trains in total, that means actually you are good, and that is just going to be helping you so much, okay. Let's say over here, I'll come to explain this later. Now let's go to what we are calling risk reward. This is going to be very important over here, risk reward ratio, okay. So your risk reward ratio actually should be always maybe 1 to 2 or 1 to 3, always. That means you are risking 1 to get how much? To get 2. You are risking 1 to get to 3, okay. That means, for example, let's say you have let's just do a calculation over here so that you can just understand this, and you have to know that risk management actually is very important. You can lose many trains but win few trains, and then at the end of the day you will have profit on your side. Here we are talking about week. Let's say in this week you have done 10, you have done maybe let's say approximately 10 trains, so that is the number we just helped us, okay. Let's say that you have done 10 trains, okay. Out of these trains, okay, out of these trains you lose 6 lost, okay. And then you win how much? You win 4 trains. So when a person just tells you something like this, maybe you see this person has just lost a lot of money, and maybe that week he was unlucky. But no, with the risk reward ratio, if actually is the person stick to this risk reward ratio, then this guy is profitable at the end of the week. Profitable, okay. How is this person profitable? Right over here, okay. Assume now we were trending between let's call it a percent. Let's just call it percentage right over here. This person was risking 1% to get 2%, okay. So here, and maybe he lost how many trains? He lost 6 of them, okay. He lost how many trains? 6. So he lost 6% of the trend, okay. So 6% lost, but he was actually winning. He has only won how much? 4 of them, 4 trains, but he was getting 2%. So that means 2 times 4, which is 8%. So he has won 8%, he has lost 6%. In the terms of calculation right over here, you can see at the end of it, he has won how much? 2%. So no matter how many, if he lost 6 of them and won only 4, this maybe may look bad. Sometimes, you know, if you have good strategy and something like that, if you win 6 and lost 4, that will be actually very big profit right over there, okay. But assume this week was bad and you lost 6 and you only won 4, so it means that you are going to make 2% profit at the end of the day, at the end of the week, and you will not be in loss actually, no matter how actually you just lost 6 of them. So at the end of it, you are profitable trader. So that how risk management is very important in the forex trading, okay. You have to put, when it comes to risk management, ensure actually you put stop loss. Never avoid this. Put take profit. Never avoid these things, you know. These things of adjusting and doing all this, you have to respect this. if you respect this, then you have to have a good plan, like something like risk reward ratio that I've just told you how it just work right over there, risk reward, and you have actually to read. Unless for you to change actually the risk reward, unless maybe there is something that has happened and you have to adjust the market, or something like maybe the news, something like that, that means you actually either to close early or maybe hold and bit. Okay, so that is the only thing that can just kill. But if actually you stick to risk reward, that is going to be helping you actually. If you lose some many of the trends and then the others you win, then you just to be kept in the market for the longest time. So that is very important. That is very important on the risk management. So ensure that you have a good risk management every time you trade, and make sure that you have a good plan for risk reward ratio. Okay, and then it's just going to be helping you so much. Okay, now look something like this. This is good actually, that is just trending right over here. So what you can just do after maybe doing your strategy and doing all your things right over here, so what you are just going to do right over here is actually, for example, let's say you are just going to enter at this region over here. This is a 1920. Okay, you're going to enter at 1920, but when the market actually goes against you, it's just going to go something like 1910. That is 1910. Okay, it is going to be 1910 right over here. Let me just show you 1910 over here. For it actually to be 1 to 3 or 1 to 2, it means that you have to have something like 50. Okay, so this is going actually to be 50 right over here, and the risk reward actually is going to be 1 is equal to 3. 1 is equal to 3. So this is going actually to be 1 is equal to 3. And actually you can see the market, actually there is a possibility that the dollar, the gold is actually going to reach the somewhere here, because it's actually going to test another high right over here after testing this support line right over there. Okay, so it is good having a good opportunity right over here actually to enter into the market, that is between 1922 and then you just assist at 1923. But guess what, if actually you just win this trend, you'll have actually 1 to 3 risk reward. And if you lose another trend, that means that you're going actually to still be in a profit. If you lose another 2 trends, still you'll be in profit. So that's how risk management is good right over here. So you can see we are only going to lose how much over here. We are going to lose 100 pips over here, and over here we are going to be earning how many pips? We are going to be earning 300 pips over here. So that is 1 is equal to 3 risk reward ratio. This is risk management over here. If you just have a good risk management, then it's just going to be helping you right over here. So that's how you can just use your strategy to know where you're just going to be entering your stop loss and take profit over here. And you have to respect this, because unless things changes, actually, like maybe you are waiting for the news, like on Wednesday we are waiting the Fed to increase the interest rate, where we are going to see the volatility right over here. That means tomorrow, that is if it is on the second day, maybe on that day, then I have maybe to assist from the market to avoid the volatility. Maybe my market may heighten my stop loss and then maybe start moving to my direction. So that is the things that you have to note on the forex market. So if you have any question, make sure that you leave it in the comment section, and if you can like this video, subscribe to the channel. I'll just check you next time. Bye bye. Sometimes you wonder, you have done a very nice analysis over there, you have used your indicators, you have drawn good trend lines over there, and the market is actually touching them very clearly over there. The market is moving so well, and you're very sure the market is actually going to go to your direction. But maybe after sometimes, maybe around 3:30, after 5 hours, then maybe you closed your trend, not closing your trend, you left your trends running, and maybe you are waiting for the profit actually to close over there. But when you just go back, you meet actually your account has just been blown up. The reason being is maybe you have been ignoring what we're just going to be talking about in this video. So in this video, we're just going to be talking about the fundamental analysis, and how I'm going to explain this. I'm going to explain it in a very easy language so that you're going to understand. If you're a beginner in fundamental analysis, don't worry, because I'm going to explain in a very easy language that you can just understand over there. I'm going to be taking you step by step of what you can translate this. Actually, this class is going to be very long, so make sure that you have a cup of coffee over there, or just maybe some water, and then you're just going to be writing this down. I have a notebook because this is going to be amazing over here. I'm going to be writing down so that you can just be following this. Without talking so much, why don't we start this class right after the intro of this video. Hello and welcome back again. So if this is your first time to be over here, my name is Dan, and this is Dan Tech channel. So we just do over here Forex trading, making money online, and today fundamental analysis is going to be very amazing over here. So make sure that you subscribe, like this video. If at the end maybe you like my content over there, there's somewhere you click thanks, you can just do that, and it's just going to be of help to our side over there. Now I'm going to be interacting this because there are some people who have been checking news, and sometimes it can just get confusing to so many people who don't know how actually to translate this news, or now you can just affect your trend. But there's something I just want to show you over here of what. Let me just show you what the news can just do over here, so that you don't have to fear the news. Actually, it has to be your friend. News has to be your friend, so you don't have to be worried. Sometimes people think I'm not going even to train these things, so news can be your friend. Okay, now if you can see over here, we have this NFP data release, and you can see what happened. Actually, these are very big move over here, okay, that happened to the dollar index. This movement over here, okay, these are very big movement that happens. So that you can see there's a very big move over here on the dollar index. If it actually can just move like that, if maybe you end open position that was from buy over there, then I think your account is either going to be blown up, or you're going to have a very huge loss that will take time for you to recover that. So that is just one of the FP news. We have interest rate, we have a lot of things that actually can just move the market to move in that direction. Let's start over here, and I'm going to be analyzing this, so I'm going to be writing over here. So let me start over here by writing the one fundamental analysis as you write on your side, okay, as you write on your side. So I'm going to divide this session into two. So this is the first one, and then you'll just be having the second one that will just be learning a lot. Now we have two things over here. We have actually four things that we can just talk about over here, and we start by what we call the economic indicators. Economic indicators. So we have these called economic indicators that you actually see on the market. Then we have something we call trend developments. Okay, trend development. These are the things we check on the fundamental analysis. Then we have what we call geopolitical events. Geopolitical events. Okay, so I can just talk about these three, and the final one, we have what we call monetary policy. The reason I've talked about the monetary policy, because this monetary policy actually can just come at the end of all these things after happening. Then we can just have the monetary policy. So that is amazing over here. So I just want you to follow this because it's just going to be amazing. So we have economic indicators, trade development, geopolitical event, and monetary policy over here. You know, like the way we have economic indicators over here, like the way we have technical indicators, then still we have economical indicators, and then that is what we are going to be discussing right over here. Now let's start with this. We have number 1 here, number 2, number 3, and number 4. So the moment actually you at least understand those things over here, then things are going to be amazing right over here. Now let's start with what we call the fundamental. So fundamental analysis actually comprises between, you can combine between what happens on the geopolitical, or that like something like news plus political event. You know, geopolitical can be all those things. We have trend development, okay, like countries between countries. You know, we have monetary policy that the government takes. I'm just talking so that you can understand where we are going, you know, something just like that. So first of all, I just want to start with what we call economic indicators. So that is what is going to be our first things over here, and actually the rest are going to be simple. But on the economic indicators, that where we have a lot of things to talk about over here. Okay, so I'm going number 1 to talk about the economic indicators. So as a trader, you have to be knowing the major economic indicators that are there. Economic indicators, okay, and finally we'll end with the rest plus the monetary policy that is actually taken by the government over there. Okay, so let's start over here. I'll be taking you slowly over here until you just get of things over here. Now when it comes to economic indicators, what does it mean? Economic indicators, as the word suggests, is the economy, is how the economy is performing. You know, indicator is something that can show you how something is performing. You know, on the technical analysis, we can have those indicators that show us the price is overbought, this thing is moving this way, when it crosses this way. So those are the indicators. It just shows you how something has just performed, and it will show you when something has eaten what you expected, something that just like that. So over here is not about technical analysis, we are talking about the economy indicator. So this will just tell us how the economy is actually doing over there. Okay, and let me just give you an example over here as we just start on this one. Okay, let's start with the simplest one over here, where we can just call this A, okay, and we call this something which there's actually the one that causes the that is the market to move over here. All of these, the ones I'm going to discuss over here, they are the major ones. Actually, I'm going to be around 5 of them, and that's why we have these 5 major economic indicators that you have to know as the trader. Let me even start with what we call the GDP. So what is GDP? GDP means gross domestic product. Okay, so this economic growth, okay, this GDP, as the one suggest over here, okay, this is gross domestic product. So you can see GDP over here. Domestic means what? Domestic means something of that country, domestic of that country. Okay, GDP means of that currency over there, that of gross domestic product. GDP, domestic, something that is internalized, that of country, of that citizenship, okay, of that people who are living in that country. So that's why we have the gross domestic product over there. Now when it comes to GDP over here, sometimes you can see those news printed on the Forex calendar right over there, and you see something like GDP printed out. How is it going to that is affect your currency pairs over there, the pair, the currency over there, either dollar, euro, GBP over there? So let me just talk about the GDP. Okay, so GDP can actually cause these two things over here. Let me just explain, because sometimes it can just be confusing to some people. Let me explain two scenarios over here that can happen with GDP. Okay, so when economy, so this actually shows us that the economy is actually expanding. You know, the economy is expanding. If you have a very high GDP, that means the economy is what? Economy is just doing so nicely over here. So when we have a growth in GDP, then we actually know the economy is doing good. So when we have the high GDP, when we have high GDP over here, then we know the economy is growing so nicely. And what can this GDP means over here? Okay, when the GDP is growing, that means like we can have something like investors coming to invest in that currency. The demand for that currency, for example, I'm going to be using US in this matter. So we have so many people interested maybe in investing in the US dollar. We have so many investors loving to invest in the US, you know, because their economy is actually growing. So that means when the GDP is actually going higher, then we expect the strength of currency to just go higher. So you can say the GDP is actually directly proportional to the strength of the currency. But I think there are two cases that GDP can cause over here, and I don't want you to confused by that. Okay, so the GDP of that country is actually going up, is making higher. So that means we have where that currency is strengthening. Okay, so we have investors and all those people. Okay, now note this: when the GDP grows so fast, I mean, for example, there's how the government can see this GDP is just going with time slowly, but when it actually grows faster and more, okay, so it makes people to have more money. You know, when this gross domestic product is growing and people are producing more, the producers are getting more money, you know, something like that, then it will cause people to have a lot of money, and now it can cause something we call the inflation. So when there's inflation, when the inflation actually comes to high, we just come to the CPI, it increases the CPI, then the CPI actually will cause the government to have what we call the monetary policy, and they can actually come to implement something we call the interest rate, which actually is negative. So high, very high, so high or growing, we can just call this growing GDP is positive, but very high GDP will cause a negative impact, okay, because it will cause inflation. But when we have a growing one, it is going to be positive because people are going to invest in that currency, economy is going to grow, and a lot of people are going maybe to invest in that currency. The demand of that currency on that nation is just going to go higher. So that is how GDP, you can just check and how you can just translate on that. So that is what we call the GDP. So if you can actually understand this, and maybe when you see those news happening over there, maybe on the Forex calendar, then you see actually printing it in green or red, that is when you know that it is yes high, it is yes low, but it is positive or negative. When it is very high, you know, yes, it is increasing, but this is right, okay. But sometimes when it's just growing slowly over here, it actually becomes positive. Okay, I hope we are now there. So that is one of the economic indicators. So you can see how it indicates how the economy is just performing right over there. Now we have number 2 over here. Okay, one of the indicators right over here, and the simplest one is what we call the unemployment rate. So most of the time when you just go to the calendar over there, you see something written like unemployment. So when we talk about the employment over here, so when we talk about the unemployment, so when we talk about the unemployment rate over here, we are talking about the number of people who are actually don't have the job over here. And actually you always know when there is high employment rate, when there is high employment rate, people normally don't have the money. People don't have the money. And what does this cost? So what this cost is over here, let me draw something over here, a circle. So we have low, high, we have high unemployment. So we have high employment over here. So what high employment will cost here? Will it cause the economy to contract or expand? So it will cause the economy to do what? It will cause the economy to that is economy to contract. Okay, economy contraction over here. So the economy will actually contract over here. At the moment we just have the economy contracting over here, so what the government will do is just come up with the policies. So there are many policies that government can just come over here. I'm just going to give you in this case something like of the interest rate. That is one we are going to be using over here. So what will happen over here, it will now try to come up with something that actually can expand this economy, because so many people don't have the job. But when you talk something about the interest rate over here, like the policy of interest rate over there, the government actually will just decide, the Fed will just decide to cut the interest rate so that the economy can actually expand. So expansion. So you can see the economy is going to expand. So once the economy actually expands here, economy expands, and when it expands more, it will cause something like unemployment, it will cause high inflation again, and then it will just be a cycle of making sure that the economy is stable. So that's how everything, but you always know that high employment rate will cause an attractiveness of that currency. Okay, so higher employment, the lower the strength of the currency, so they are inversely proportional right over here. So when there is high unemployment, then there is low strength of the currency. It's the same as employment rate. We come to that. So when there is high employment rate, there is the strength of the currency. There is the strength of the currency, but not also this one. When there is very, very high employment rate also. Okay, when the country actually prints the number of employment rate consecutively all the time positive, then a lot of people are going to be having money, and then they're going to spend in the economy, causing the inflation. So when you can see that actually there is a positive printing of employment every month consecutively, then you actually know there's something going to be caused on the inflation, and actually the inflation is actually going to be coming very high. We've been talking about the CPI in data. Let's talk about the inflation, which is CPI, which is consumer price index, known as the CPI. So this is consumer price index, the CPI. Okay, so this CPI actually will just measure the value of the product in the previous. For example, let's say the price of the brand was going at let's see something which something can just go at 100. Okay, let's assume the price of a phone is last year was $100. Okay, so the price of a phone last year was $100, but this year the phone is costing $1,000. So our inflation is actually measured is this one. So you just compare the result of you just compare the result of the last year plus this year, and then you just this is 100 divided by 1,000 times 100. Okay, so 2 okay, 1 okay, no, not this. I think, how do we calculate inflation? CPI, is it the last one or the first one? So the inflation is actually that is cost of market buckets in the current. Yeah, okay, yeah, so this is the current one, which is $1,000. So that is not 10%, divided by 100, okay, times 100. So you can see actually it has grown by 1,000%. So this is very high, because you can see the cost last year was this, and now it is this one. So you can see now the inflation is actually very high, and that is now where the problem is. So what the government will just try to do is to make sure that they regulate this one. No, this is what I'm just give you an example of the CPI. So this is our land thing that you're just going to be talking about over here, the CPI. So you can see something like an employment rate. We have talked about the GDP. All of them, they can actually cause the CPI, the inflation data, to come over there. And these are the economic indicators. Don't forget, we call CPI data that is calculated between, if you wanted to calculate the CPI, you can just go by dividing cost of the market or the bucket in the current period, divide the cost of bucket in the base period. Okay, so and you multiply times 100, and then you're just going to get the percentage over there. Okay, and you're going to be getting over percent. So if it's above 100, something like that, there is how they measure this to know it's just the excess. You can just go and get those calculations over there, and then that is the CPI. So if the CPI is very high over there, there is how, for example, you just go to the calendar over there, you can see the CPI in data. There is how CPI. Let me just define those types of the CPI data we have. Let me show you the types of CPI so that I can just explain this. We have the CPI that are shown on the calendar, so you have to be knowing on the CPI that you have to be checking right over here. Okay, let me show you here. So this is the calendar. Let me just find the CPI in data. So we have the CPI MM. So CPI MM, as you can see, let me expand this. So we have this, you can see like of this or 330 on Wednesday, we have this CPI. We have these three of them. So CPI MM means that is CPI data compared to month. So if there's something that actually was coming to a certain price last month, then they have to compare it with this month to see how that things have been performing. If the price of a product, and then they just to see how is that product been performing in the every month. Then we have CPI YY, that is means that is the CPI of the product last year and the CPI of product this year. So that is why I count yearly, and this is monthly. Okay, and then we have the USD, where we have the core CPI. So this is the CPI excluding the food and energy. So as you can see over here, food and energy prices account for the about a quarter of CPI, but they tend to be very volatile and discount underlying the trend. The Federal Open Market Committee usually pay attention to the core data so the trender. So this is the CPI of excluding those data, that is called CPI right over here. So when it comes to inflation over here, you can focus on the CPI YY and the core CPI right over there. That is what you just be checking around that area. So as you can see right over here on the CPI YY, that is CPI yearly, we expect the inflation actually to be coming down on the here, like we have last previous one was 4.0 and now we expect 3.1. The last one on the core CPI was 0.4 and now we expect 0.3, and that means that the inflation is actually coming down right over here. Okay, so if it is print below 3, that is when we know the inflation actually are coming so down. And what will just happen to the market is that now what we expect over there, like in terms of the policy, is the government now to that is reduce they reduce the cut of the interest rate over there. Okay, so this CPI means that if the product actually was costing something like the one we used right over here, 100, last year was something like $100 and this time is 1,000, that means it is actually reduced maybe to $800, and then that is a positive thing to the government. But when it's actually very low, then it is banned for the currency. So that's why you're seeing maybe if it prints below 3.0 or below 3.1, then it's just going to have band impact over there to the currency pair. So that is the CPI. So those are the economic indicators that you can just use over there. But we cannot finish this without talking the major one, which is NFP. Okay, so this NFP means that is non-farm payroll. Okay, non-farm payroll. Okay, now when we talk about non-farm payroll, okay, we are just talking about something like employment excluding the farms and the private sector and non-profit, that is non-profitable farms over there, sectors over there, that is private sectors. So when we have this one, actually it causes the market to move so well. So this causes the market to move so fast, and this is one of the things that traders actually do follow so much over here, the NFP. So if you are trader of the NFP over here, sometimes you have seen when I was starting, I just show you how NFP actually causes the market to move so fast. The market moves so much by NFP right over here. So NFP is one of the things that causes the market like this. You can see is a very number one of the first indicator that causes volatility either in all the currencies, especially on the dollar and all these. So those are the ones that can cause the market. So talking about the NFP, what I can just say about this, when there is increase, when there is high NFP data that has been printed on the market, then actually people tend to know okay, when so many people actually are employed, high NFP, INFP, when so many people are just employed over here in the market, then we have so many people earning money. People are earning a lot. So if people are earning a lot, then they tend to use that money a lot. Everyone wanna ask money. When everyone asks money, then you always know that there is high spending. People will spend more because they have money, and this is one of the things that actually can increase the inflation data, you know, something about the inflation right over here. And sometimes you'll be asking, is it all about the CPI and all that? No, because there are other factors that we're just going to be talking over here. We are still on the economic indicators. Remember that we are on the economic indicators, and this is number 5. This is number 4 or number 5, okay? But this is one of it that you have to know right over there. NFP, okay? When there's high NFP, just know people are going to be earning a lot. And also just remember that also low NFP over here will just cause the market actually to the slow down. Now, what do you see on the FFP right over here? Let me show you what happened last week, and probably you just understand what I'm just going talking about over here to avoid more confusion. So on Friday, let me just go. I'm not going to say on Friday because maybe probably you are watching this video before that. So you can see we have what we call this data is known as non-farm employment change, that is NFP over here, non-farm employment change. Previously it was 306, okay? Previously it was 306, and now we have 209 right over here. So those means that some people have actually lost the job, and is the last year we had 306 and now it is 209, which means that so many people have lost the job. They don't have money to spend over there. And we're saying something about the employment. When there is no employment, the strength of the currency actually tend to be negative right over here. For example, you can see something like this. We have the employment coming from negative 13.37, and now it printed 59.9k, and now this is a positive one. That's why it is in green. So that is employment change in Canada. You can see it was positive because it printed high employment rate. But on the NFP over here on the US, you can see the employment the NFP actually was low, 209,000 over here, which means that we saw little amount of jobs that were printed over there, and that made it to be a negative towards the economy. But sometimes when we can have a positive one and can cause the market to go up when we have a lot of them. But as I said, if the market actually will print consecutively high NFPs over there, then it means so many people just get employed over there and they will have money causing the inflation. So very high will just cause the market to, will cause the currency actually to have those fears sentiment, and can cause the market, the currency to weaken right over there. Okay, now as you can see now on the USD over here, how do you know that something is just going to happen right over here? For example, on the UNFP over here, the prediction was 224. So already there was analysis that was done, and the market actually the NFP was actually to come down. So we expected the dollar actually to just either have a negative impact over here on the NFP side over here in terms of the NFP over there. So although it's not accurate, but that is what was expected, and actually it printed 209, which was far from 224 predictions over here. But after all, you expected low NFP right over there. Okay, yeah, so that is something that you can see right over there. So those are the economic indicators that you can just use over there, how they can just move into the market. Now the last part that we are going to be talking about over here is what we call the we have the other like political event. Okay, so this is number 2. So number 2 is what we call geopolitical geopolitical event. Okay, now when we have these things called geopolitical event, this can be, of course, a lot of things. When we come to geopolitical event, of course, we can talk something like politics. So when we talk about the politics right over here, politics can be something like this. For example, when there is a political unrest, you know, when there is chaos, when there is something that happening in a nation because of politics and something like that, investors actually run away, and people actually tend to not be laughing that currency at all. So anytime we see a political unrest, anytime we see something like that, you know, those are the things that you can see on the news, you know, political unrest, those things about the politics. Those are the things. If there is something banned on the politics, actually on the certain news, you know, when there is political unrest, actually there is something like demonstrations, there is some wars, there is all those things, banned things happen to that nation, and they actually tend to bring something banned on that nation. And that's why we have this can make actually the strength of currency to weaken over here in case there is a political unrest. It can just cause something like that. That is what you have to know about the politics, how they can just cause like that. Or maybe some politician is just throwing someone that are negative, and they can just cause some people to have bad sentiments on the currency pairs, the currency, and a lot of things that actually can cause the economy to deteriorate right over there. So the other thing when you come to geopolitical event over here is something like conflict. When we have conflict, or you can just call them war. Okay, for example, let's say there's a nuclear bomb that has been thrown to a certain country. So what do you expect over there? A nuclear bomb just being thrown to a certain country, then you expect something like economy to be going down, something like that. The economy to go down. The war is continuing right over there. So a lot of things are going to be going down over there. Let's take an example like Ukraine. So on the Ukraine right over there, Ukraine, maybe there's a bomb that has been thrown in the US. God forbid, I don't people in the US, sorry. But let's say there's a bomb that has been thrown to US. We say in the US, the one that you're going to be using as an example. What do you expect to be happening over there? Okay, a lot of negative impact on their currency is actually going to be happening right over there. So as a trader, anytime you just hear those things, you have to be attentive on the pairs that you trade. Because, for example, if you trade gold, you know what can just happen. People can dump this and maybe buy something else, you know. Yeah, so those are the things that you have to know. Conflict and war, this brings negative impact to the currency. So I think that is simple for you even to understand. The other thing that can cause is what we call the natural disaster. You know, natural disaster, we have something like the earthquakes, fire, you know, all those things can cause the currency to weaken. All those are negative things that causes a negative impact to the currency. Those are natural disaster. So those can cause the negative impact towards the currency pair. The other thing that we're just going to be talking about over here is what we call the trend development, and is that number 3, trend development. So all these things you have to know them. And when we talk about the trade development, then we just be talking the last one, which is the monetary policy, actually where we just end up to, you know. Sometimes when you can see something like natural disaster, when you see political unrest, sometimes government can come with policies that does not favor businesses, and that's why you can we have a lot of things bringing negative impact to the currency. Now let's talk about the trade development. And actually trade development is the agreement between the two countries. So between those two countries, we can have trade between two countries. You know, there is something that happened negatively between those two countries, and that is where we can have difference. For example, some countries actually can maybe bring something that is not going, like for example the way you see something on the Russia, okay, they bring sanctions, maybe they don't want to import their oil, things like that. There was something like that product, they refuse something like export. You know, here we are talking about the import and export, okay, and that agreement maybe is just a cut off. As a trader, you have to be following such things to know what has just happened in that thing. You can just hear something, for example, on the oil side, okay, on the demand of that oil. For example, there is something we were following. Let's just come back over here, like COVID-19. When there was COVID-19, that is going back to the geopolitical event, like COVID-19, when it just came, the demand for the oil actually just went down because there was no movement. You know, the movement was not there. So if there was no movement, so you expect actually the price of something to be coming down. What if there is, we trend mask? What if we trend the mask that we used to wear like this? So what do you expect? We expected the price of the masks to rise higher. Why? Because there was demand, because there was a very high demand. So that's how you can just be following up these things to know how they just perform over here. Trend development, these are things that actually happens between the countries, and that is what we call, this actually lies more on politics. These are very inside things that you can actually be following up to know what has been happening to them. Now number 4, so we don't have a lot of things to talk on trend development. I don't want you to get confused over there. Number 4, which is our monetary policy. This is the last thing that actually you can just check over there, okay? Now look at this. Monetary policy actually can just come after all these things. Economic indicators, after maybe we have identified something, then monetary policy is actually the decision that either Fed, the Bank of England, the Central Bank of England that comes with it, to regulate, so that they can the currency cannot just lose value, just like to regulate the economy. No, that is what we call the monetary policy. Monetary policy. And that's why we are here. We talked about the interest rate, open market operations, and all those things. So monetary policy is the last thing that actually even the government, or not the government, but the respective bank, those who are on the top there, they can just come up with, like for example in the US, we have the Powell, who is the president there, and they can just come up with things that are going to be on the central bank to regulate the economy. Yeah, so those are the ones that we call the monetary policy, okay? So we have something like open market operation, we have the discount rate, those are things, okay? Public service announcement, and those are the things that you have to actually to know right over there. Like when you talk about the open market operations, this is buying the securities, interest rate. When the inflation comes up, what they do is they increase the interest rate to regulate the inflation. When the inflation comes down, when the economy actually contrasts, what they do is that they cut off the interest rate so that to expand the economy. So that is what we call the monetary policy. Monetary policy. And the 5 thing that you have to be checking, this is a bonus, is what we call the speeches. These are speeches that are offered by these people of the major countries that we trend. We have US, British over here, Bank of England, Japan, Bank of Japan there. Okay, when these guys come over here, then you can be listening to them when they come up with these speeches. The reason being is that you can actually come with something we call them. We can just come up with the point over there, and not so many people actually follow this, but if you are good enough on these things, you can just be following up to know what is just opening right over there. For example, there's some data that have been released on the CPI. Sometimes you can see like the poll coming to speak right over there, and the point that we can just expect over there mostly is to see whether we are going to be having more hawkish on to wish right over there. Okay, so that means, are we expecting to have more interest rate being raised or more interest rate being cut off? And the market actually tends to be very volatile when they are actually speaking. So those are the things that you have actually to be checking on the news. That's just a summary of it. 1 hour 40 minute class. I hope maybe you have got something right over here. If you have any question, very amazing class. If you have any question, make sure that you can leave it in the comment section. We'll just be checking on it over there. Make sure this, if you love my content over there, make sure that you actually subscribe right over there. So it is nice to have heard you from the start up to this place. I hope maybe you have understood something that is going to be helping you so much over there. Sometimes I'm just be coming up to Forex calendar, and when we can just discuss everything that is there, how you can just implement them, you can practice and know what is just happening over there, and it's just going to be helping you so much. My name is Dan, so see you next time. Make sure that you subscribe. Peace. Bye bye. Hello traders, hello everyone, how are you doing? This is Dan and this is Dan Tech channel. Actually, in this video I'm going to be showing you how to make money like this. So you can see this is my small account with only $124. Actually, I've raised this money up to this level. It was $100 and it has $124, and you can see now there's a profit that is just going to close. Okay, and I'm going to be showing you how to make profit with this small amount of money right from the scratch, not only trading, right from the scratch. How do you have to register to the platform, how you can just deposit your money you are going to trade with, and how much you are going to withdraw. I'm going to be doing all that, but wait a bit. let's close this market so that we can rewind. I will rewind, of course, so that we can just start from the beginning. And now, as you can see, I have to time this because my daily target, of course, is only 1,000 Kenya shillings out of 10,000 Kenya shillings. That is more than 10%. So I'm going to time this to close when this, the first one, I want to close it when it is above $5. The second one, of course, the same, 5 something and 5.6. And the first one, I'm just waiting to time it so that I can close the market when the overall is more than $9, okay, or 10, more than 10. And yeah, so you can see here. Yeah, so I'm going to close this, closed and closed. Yeah, so I have closed because it's advertising, and yeah, we have now made our money. You can see there's only one that is remaining over here, but I'll also close this, and you can see the profit daily. That is daily today. Let me just click today. You can see I have $11.92 right over here. That is amount of money I made in that day. But I also close this one. There's no problem. Let's now time it to maybe when it goes below 1.7, like 1.7, and then we just close it. We don't have to wait. Okay, let's just close it, and you can see our overall profit for today when I just click over here is $10 profit. Now we have made profit. We'll be withdrawing that amount of money. But now let's just rewind back where we have to start, and it's about registration. All you can just do now when you want to start all this, make sure that you click the link in the description that says register, and you'll be registering to amazing legit most secure platform that is known as FXPesa. On other countries, maybe that is the Kenya market, but it's under NGM Securities, that's the name, but in Kenya we call it FXPesa. Okay, you just register to this platform, and the fact is, the interesting thing is, the moment you register to this platform with my link, you'll be getting $15 for free when you make your first trade. That sounds very, very amazing. I know. Imagine you just register with my link, you verify your account, you make your first trade. And the important for those who don't know that you can trade even with 1 second, make money and withdraw in seconds in this platform. The money does not delay. The moment you click the button of deposit or withdraw, the money becomes instant. It is instant thing. There's no wastage of time. So you have to register. You click there, you register, and the way you can just register right over here is very simple. You use your email, your phone numbers. For example, see right over here, we have to choose the title. The title means that you have to choose whether you are Mr., Mrs., Miss. For me, I choose Mr. You put your first name, your middle name, your last name, your email, and then you just put your, select your country, and then put your number. The pin will just be sent to your number. Verify that pin, whatever you have received on your account, and verify your account right over here. The last step, you will just be required maybe to verify your account and all that, so that your account can just become active. After verification, you receive your username ID. Username ID is very important because that is what we will be using to connect it to another platform for the trading platform. That's amazing. Now let me just log in to my platform so that we can learn something else. So I hope to device to register is become free. It's very easy because in the description of this video you can find the register, or in the comment section I'll pin it. Don't click another link. Yeah, so make sure that you check that link, register to the process, verify your account. That is step number 1, and then you'll be having all the details of your account, the login password. So the login password over here, like you can see, I have email and password. You can call it portal because it will just be taking you to your FXPesa portal. So that is the same as password. Login password is the same as the portal password. Okay, the login password is the same as portal password. Okay, now let's just go to the portal so that we can learn the next thing. So the next thing that you have to be doing when you get to the portal of this FXPesa platform, the next thing that you have to do, of course, is to set something we call the that is trending password. The trending password is different from the portal password. Trending password, you'll be using it to trend anywhere. Okay, for example, let's say umetoka nje and you don't have your phone around, you can set the trending password. When you have your account, this ID, like your ID will be something like 49, something like that, you have to go there and set, just click those dot and set your trending password. You take you over here, set your trending password, change it, confirm whether it is you by putting the, that is, you have seen, of course you have seen your ID is, you click next those three dots on the right side, it takes you where you have to set your trending password and you to trend and all that. The last thing you are going to put over here is to learn how to, of course, deposit in this platform. You'll be clicking this mistari and unaona on the left side up there, you click and then you click FXPesa Express. FXPesa Express is very easy. So now we have learned to register, we have learned how to set your trending password, the password you'll be using to log in to trending platform. Let's now learn how to deposit through this FXPesa. The minimum you can actually deposit is $5, equivalent to 610 Kenya shillings, but it varies because the price of dollar just varies. So we said let's just learn how to deposit. It's very easy on FXPesa. Click on those mysteries, go to deposit, go to FXPesa Express, and over here you select the account. Where do you want to select your account? I have connection oriented to MT4, the next step you're going, but over here you can select that is maybe 600 or $5. I send is about 610. You can see you can put 610 there, and then you put your number. Where do you want? Of course, make sure that this account has money, this M-Pesa has money, and you do that. You verify, you click that tick, and you press that way. And by clicking that, do you know what actually happens? It will take you over here. Let me show you where the magic happens, because everything is simple here. You have, it will take you over here. You have to put the names that you think will appear. Of course, you have to select the M-Pesa first, and yeah, so it's just loading here. Okay, so make sure the account that you have connected, you have money on that account. It will only detect the amount of money that, but it will just send you a notification to tell you that you have, the only thing that you just be doing is to put the password. So you can see Safaricom M-Pesa. Select Safaricom M-Pesa and put your name that you know you appear, the name that you have registered with that line. Okay, I hope you can understand. The moment you click deposit, it will trigger your M-Pesa SDK, and the only thing that you have to be confirming is the amount you pressed, whether it is 610, and then you put your PIN, and the money will just be sent to FXPesa, but you receive it in dollars. You receive how many dollars? We saw it is 5.05. The next step you have to be doing, the last one of course, is to download the MT4 platform on your Play Store. Download MT4 on your Play Store, and this is the demo account that I get. So download the what? The MT4, the name MT and then 4 on the Play Store. So this is the trending platform. You just connect it to FXPesa, and then you will be using this to trend. Why you using MT4? Because MT4, it will just help us to put strategies and all that. So you just be clicking on the left side up there, you go to the manager account, and over here you search for EGM securities. Okay, you go to MT4, you click on the left side up there, you see where it is written manager account, you click there, and then you click that plus over here, and then you search for EGM securities. EGM securities, this is for FXPesa of course, and then you just be clicking for the live account. Let me just click again here, you search for that. So I send you go to Play Store, click MT4 right there, and hand here, you see that kamsalaba, that one, click that, search for EGM securities for those who are using MT4. Yes, and over here you have to put the login and password. Remember, the login is that ID you got, that 49 something like that, and the password you put over here is what? Is the password you set. Remember the password you set, not the portal password, but the password you set for the trending. trending password, the one that you put there. And the moment you just do that, your account will just be connected, you'll be having your account, and you now be ready to trend. On the next step, I'm going to be showing you now how you can now trend on MT4 successfully, like a big trader in a very good way. Okay, now let's just go to the next step, how to trend on MT4 successfully. And it's just the same, because I'm just going to show you, if you have connected, if you're linked your MT4 or MT5 with any broker, then it's just the same thing. Yeah? Now the first thing that you see over here, just see down one over here, you can see down here we have quote. Now this is where you just identify your currency, which pair do you want to trend. And if you cannot see the pair you just want to trend over here, you can go and continue and just go and then add. If it is metals indices, you can just add them. Yeah, let's say we wanted to add a AUS 200, you click, it will just be handed, you click that, it will just be handed. Now they are just down over here. So if you just want to trend the indices, then they are down over here, you can just trend them. Now let's just go to the next thing, which is opening the chart. Now what you just have to do, the next thing that you just have to do right over here is to long press the trend here, and then you can just click that is opening the chart. You can see chart is number 3, so you just open the chart. Yeah, so the moment you just open the chart, you can do your technical analysis right over here. After doing your technical analysis, how that you can even tilt the screen doing your technical analysis with indicators and all that, then you can now place your trend. You can just decide where you want to put your trend in. Now to place a trend, you need to click here. You can see something here, this plus. Now that is where we are going. You click that. After clicking that, now it will just give you the place where you have to put your what you want to now to buy. Over here we start with the market. Of course you can see that dollar. You can just even change the crypto. You can see you can change even the pair there. So now that is why you change pair. Over down and over here, this is where you can just, for example, you just want to buy at instantly, you just want to buy at the market price. You want to buy at the market price, you can put instant execution, so that when you click buy, it will just buy automatically. But when you just want to buy ikifika level fulani, let's say maybe you are predicting the market is going to continue to go down maybe up to 1.01, then you can select buy limit, and then you can just put your that is 1.01. Then when the market reaches to this level, it will just buy automatically. The SL is what we call stop loss. Even if you are using MT4, you'll not see SL and TP, but they are the same. If you see the red sign, that is stop loss. If you see TP, that is take profit on the other side. So the left side we have stop loss and TP. But one thing you just have to know is that the stop loss must be very down below the buying price. So here we can put even 1.0. The take profit must be higher than the buying price, because you are making profit, you want to buy, so you are predicting you are going to take profit when the prices go higher. Because if you just make a mistake over that, you cannot click buy, because the platform will have detected that you have made a mistake. Now take profit can be 0.0 what, it cannot be below 1.66, the one we are here. It can be above that, maybe it can just be 1.02, which is above 1.01 our buying price, and our stop loss must be below 1.01. Is that right? So the moment you just click place a trend, you see it is done. We are now entered, but you can see it is not running. When you see the second one, this is the second one, it is not running. The reason is that until it reaches to that one, that is when it will buy. But let's just click again and buy at instant execution. We're using the same thing here. Stop loss we are going to put 1.0, take profit we are going to pick 1.02, and then we are going to use the instant buying. But you can see currently the market. So this is why you put down one over here. There's a what we call slot size. That is very important. You have to note that slot size is what matters a lot. For example, the lot size you put over here designs the amount of money you just be making. That means for every 1 pip the money moves, the coin moves, you get $1. You get $1 if the pip is 1. So if the pip is 0.1, that means you get 0.1 for every pip. That if the currency moves by 100 pips, you multiply pips times the slot size, then you get profit or loss. So for example, if I just put, I'm going to cancel actually this, because there's you can see this one, the first one that is running, it is running very fast with the small pips, 10 pips. You can see, because the buy 90, that is the slot size, that is the slot size over here. And now I have to, let's just continue to buy again. Sorry for those notifications. So I have to put a very small lot size, but because this is a demo account, I'll put a lot size of 10. Yeah, so after 10, yeah, you can put even a slot size of 0.1. I want to see you the movement will just be slow. And then after that, you can put the stop loss, which is 1. Yeah, and then take profit as 1.02, and then you see you can place and buy. When you buy, market is directly, see. And when you see over here, we have this one, we have this moving over here, but you can see it is starting by 0.0 something, 0.0 something, because our profit for every pip it moves, it can get a profit of 0.01 or a loss of 0.01. But when you put a higher loss, that means if you have a small account and you put a lot size of 10, then for every pip it moves, if it just move, for example, if you have an account of $100, that is 10,000, and you put a lot size of 10, ikimove to na 10, unaona this one, ikimove to 1 2 3 4 5 6 7 8 9 10 negative sign, then you are done, your account is blown up, and you just go home. So you just have to take care of that. So actually that is how you can just place your first trend after doing the analysis, after you put the slot size, after you put your stop loss, after you take that profit, and then you click buy or sell. You take advantage of the market going up or going down. Now, after learning how to trade and all that, the last step, of course, is to learn how to withdraw money that you have made, and make sure that you actually have maybe FXPesa. You can be logging in using Chrome, or you can be having the FXPesa, so that you can just be accessing your portal easily by downloading the FXPesa application on the Play Store. So let's just learn how to withdraw. You can see now my account is at 134 after making profit right there. And let's go here, and you just click again to the menu on the left side up there, also Mr. Tattoo, and then you go to the withdraw. After clicking withdraw, you click FXPesa. How much do you want really to withdraw? You select from which account do you want to withdraw, from NT4, of course, from FXPesa Trader or MT4, and I want to withdraw the amount of profit that I made. Remember the 10.12 we made, that is equivalent to 1,210. So actually making 1,210 daily is a lot of money, because at the end of the month I'll be having how much? Over 30,000 Kenya shillings. You put here your portal password, the login password to confirm, and make sure that you select the FXPesa as the method of payment. You put your login password over here, and then you submit that. Okay, after submitting, then you are going to receive the FXPesa message instantly. You see, you are already, I have had the notification on my phone, so you have received this month we sent. You see, they send, of course, this money automatically, but I think my phone has some problem. So I'll be doing is actually going to the that is Safaricom FXPesa, and I'll be, so I don't know why my phone is not updating SMSs, but FXPesa messages, so you can see the notification up there, but it has disappeared again. So I'll be doing actually to go to the FXPesa and then update. I ask you for what do we call FXPesa statement, so that you can see 1,210. Mark the time, 134 p.m. Yeah, now you can see the statement is here. You can see the statement is here. You can watch it carefully so that you can know this. You can even pause the video to understand this. So you can see 1210 received. Okay, yeah, so that is it. So it's simple how to make money actually on FXPesa trading on the Forex. Very easy, and you make money and withdraw right over here. So I've shown you the whole steps, the whole everything that you just need to know. The next now thing you have to do is to click the link in the description to join this amazing platform. If you have any question, you can contact me or leave it in the comment section. See you next time. We love you so much.